Operating margin of 10.5 to 12% in the fourth quarter. The street's at 11%. Bottom line is this: when you take a look at Delta's results in the third quarter, they clearly, among all the airlines, perhaps the best run airline right now. Though some people would make an argument for a few other airlines. But in terms of their profitability, guys, they have knocked it out of the park in the third quarter, especially on the corporate revenue side. That is huge because those are business travelers, and they are often paying premium prices, and that speaks to the strength of the demand that Delta is seeing right now. I got to go back a few years now to the endless conversation that we were having about whether the business traveler would return after the pandemic, and even more so after the introduction of Zoom, so to speak, and the ability to do things virtually. So are we back? Are we beyond where we were? What is the trajectory there in terms of a 2019 business traveler versus 2025?
Good morning. Good morning.
Not beyond it, David. I haven't looked at the exact numbers in terms of corporate travel, but I can tell you, because as often as I do, I see more corporate travel now than I've ever seen. And you look at the results from Delta. I know United has also been seeing strength in corporate travel across the board. You're just seeing more business people out on the road, depending on the industry. And one other metric that stands out from Delta's report today, they saw growth quarter over quarter, every single industry that they track. Every single industry. There was not a single industry that was lower quarter over quarter. So they clearly are seeing more people out on the road in the third quarter relative to the first half of the year.
Phil, hopefully we'll talk later this morning about some of the impact the shutdowns having on flights overall, and Mash's comments to you about that. That's our Phil DeVoe. Meantime, the Treasury Secretary making some headlines in D.C. For that, we'll get to Steve Leisman. Good morning, Steve.
All right. Good morning. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's 9:15 a.m. It is Thursday, October the 9th. 15 minutes to go for the opening bell. Okay, many of these new stocks, Frano pointing out in the sub-orbit level, these EVs. Let's see what some of these are doing right now. Let's see, ACHR. Okay, that's back up today. What are the nukes doing? Oklo is up. Oklo up. I think Brent's late today. Let's see. Yeah, he didn't have the update up yet. But trace, you can see where we have support and resistance overhead. 67.75 overhead. 67.50 support right below.
Just a note here, guys, it is a little unusual for this duo to be out there.
Futures trying to bounce. And a fine Thursday morning it is.
Bowman is one of the candidates that's been mentioned for to be a potential replacement to Fed Chair Jay Powell.
Hey, Steve, FT's got a piece remarking that Bessent has wrapped up some interviews with Hassett, Warsh, and Waller, and then Rick Reeder apparently did quote very well.
Yeah, we've had Rick at sort of to the top of the list. We had a story on that a couple weeks ago, and looks like that is continuing. I wouldn't get on the Rick Reeder bandwagon, I think, Carl, until
Oklo starting to turn up. Oklo.
Sort of listing the three that are out there, the two Kevins and Waller.
Gapping up.
The three main ones, but Rick Reeder's name, we had a story a couple weeks ago saying that he was one of the favorites of the Treasury Secretary, and we're waiting for some additional information from the Treasury, perhaps about who's in and who remains out of the 11 candidates that have been there. Carl?
Busy day for you, Steve. I'll go back to Steve Leisman in D.C. this morning. When we come back, we'll get to that historic run for gold and today's silver spot hitting 51. There's news on Costco. We'll get to Pepsi, Tesla, Ferrari. Worst day in about a decade. Don't go anywhere.
GLTO.
Oracle, a little higher this morning. Oracle, congratulations. NVIDIA, gapping up this morning.
Welcome to the ARC Venture Fund. Too big to get. GLTO.
MLTX.
TTRX.
All right, we have 10 minutes to go. First 15 minutes, I'm not doing much of anything except taking profits off the table, reassessing the markets after about 9:45 to 10 o'clock, looking for a trend thereafter. Futures are managing a little bit higher. Got resistance overhead. Futures are currently up, what, three?
TTRX.
Three handles.
GLTO.
My dad gave just, oh my God, I got a big block of silver that he bought at 40 an ounce. And then, there's a lot of history of gold that nobody remembers today. So I think what you have to remember is that, here's the thing from a trade perspective.
All right, GLTO, what do they do? GLTO on the move here.
Double gold this year. That's second phase. Third phase,
Galactico,
GLTO.
catch and aim.
is the mean cousin of gold.
Clinical stage biotech company, advanced programs in fibrosis and cancer centered on Galistin 3. Company's pipeline includes an inhaled Galistin modulator, blah, blah, blah. So it's a biotech.
Gold stabilizing a day after closing.
GLTO.
High, its ninth positive session in the past 10. Meantime, silver coming off its highest settle dating back to
Low,
1980 and on pace for an
gapping up a
8-week
bit.
winning streak for the first time in 5 years. We mentioned spot hitting 51 this morning. Some of these year-to-date gains, Mike, are multiples of what you would have gotten in the S&P.
For sure. Obviously, it's a longer frame, a kind of a huge catch-up move.
Okay, we got about 9 minutes to go for the opening bell. 9 minutes to go.
When the gold rally matures, it sort of broadens out to the more speculative names. Silver, palladium has started to move. So, I think you have to be aware of both the underlying big picture basis for it, which makes sense. I think people are viewing gold increasingly as sort of the universal diversifier, preferable in some respects to government debt. So it's sort of like it betrays a little bit of hesitancy about owning that much in the way of bonds. The other piece is it's not just a momentum play. And on any technical basis, it's way extended beyond its trend. It's overheated. The ETF inflows are basically at a record high over the trailing few-month period. So it's time for it to cool off. Maybe it has to blow off, but it doesn't change the trend of things. And I was doing the updated numbers for the total aggregate market cap of gold. 27 trillion. That's like half the S&P 500.
Got 8 minutes to go. 8 minutes to go. Just doing a little clerical work here. GLTO. GLTO on the move. Okay.
And it's up a lot in every currency.
currency. So that's why it kind of tells you that it's a beneficiary of people feeling as if, oh, we got this sort of fiscal imbalances everywhere and we want to diversify our dollar.
Yeah, Japan now potentially moving in that realm as well. With the new prime minister.
And I think Goldman moved their gold forecast to 4,900 for 26.
Yeah.
When we come back this morning, Contessa Brewer is live in Macau with an inside look at the high stakes bets reshaping Asia's entertainment capital. What that means for investors worldwide. Let's walk on the street. Comes right back.
Okay, Riot. Bitcoin up a bit today. Riot. Riot, Coinbase, those names. Riot's been trending. Coinbase. We're looking for Coinbase to break higher. Let me just check Coinbase. What does that look like here? Coinbase. Let me just put that here so I can follow it. Palantir's pop in there. UNH. Looking for UNH to tag the 200-day today, tomorrow would be nice. Coinbase trying to push higher. All right, Coinbase would look like we're going to break above this level. Coinbase is trading 387. 387.
SWIN.
Okay.
HIMT.
Futures trying to push a bit higher. Got about 6 minutes to go for the opening bell. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Thursday, the 9th of October. Just made money on GLTO. What you eat there? Nutella? Yeah.
SWIN.
MRM still sitting there. So is BJDDX. Just talking to my son.
OTLK.
Okay. Riot. Should be a good day for Bitcoin, I would imagine. Let's see. BTC USD. Bitcoin. Bitcoin. We're pushing above these levels. Bitcoin. Can we get a breakout, a follow through? TTM looks good. Futures still hanging out right where we've been hanging out there for +2, +3. Bitcoin. Watch Coinbase. Okay, these should continue, I would imagine. Pre-market, we're down here a little bit. Looking for a breakout. Oklo. Okay, it's a little bit higher pre-market. Trying to break the upside. Yeah, I think you have a better idea of trading regular hours. Makes sense. Yeah, because the volume is pretty thin in the morning. Pre-market. I wouldn't be surprised to see these BJDX and MRM and those take off. TTRX, that one pulled back. Like $5.
Look at BJDX. It looks pretty good. TM and everything.
Yeah, that's right there. Here's MRM right there. Again, just talking to my son. Palantir, looking for a little pop maybe today. Palantir. Let's see what we can get going. What is Oracle doing? Oracle's up a little bit. Okay, Oracle. Fran, I'm looking for that to push a bit higher. I'm just looking for a base. Palantir. A base until it proves otherwise. Oracle.
CRT.
What's GLTO doing here? GLTO. I don't see any news. Big move yesterday, gap down today. GLTO. Got some speculators just watching that one pre-market. Oklo, of course, Oklo. NVIDIA gapped up this morning. I saw a few of you trading earlier this morning. Okay, Apple's trying to do something here. Apple with less than a minute to go. Yeah, that is behind, Antoine. You see that?
Mhm.
We're about to open. It's they're about a minute behind. 30 seconds behind. I think you were right there.
IMZ.
It's just YouTube.
Yeah, true. I could reboot it. I mean, let me just do that real quick.
Just click forward on it.
What?
Just click forward on it. The right arrow key.
DAL.
Okay, Apple looking good. Apple.
5 seconds till then.
Apple.
LTX.
There goes Apple. Okay, so let me take some Apple off here. What was that? Oh shit. TTRX. I just bought some TTRX by accident. TTRX. Okay. Okay, futures are on the move, pushing a bit higher. Apple pulling back.
Consumer discretionary a little bit less so, right? Other big earnings print, of course, is Pepsi today. Up in the pre-market, some disappointment on margins. Sales were a slight miss.
All right, give it a few minutes for the markets to settle down. NIMO is still rising. Momentum is still more bullish. Okay, AMD. There goes the futures. Futures on the move. SPX resistance 67. What was it? 67. Let's look at resistance here. 67.75. Kind of choppy. You see what I mean, Antoine? The first few minutes, just like all over the place. Okay, Apple pulling back. NVIDIA had a nice little gap up. We'll see if NVIDIA catches a bid or not. NVIDIA. Bitcoin, seeing a little profit taking there. Riot was up earlier. Riot was up.
Year on year, up below base and everything else, but affordability where it
Okay,
is.
Riot pulling back about 50 cents. Riot, Palantir pulling back. All right, so stocks are pulling back a bit. There goes Netflix again. Netflix.
Is the softer labor data
Netflix higher.
disconnected from a strong GDP trend at this point? In other words, are we making it up elsewhere, affluent consumption and corporate capex? And similarly, everyone is taking comfort in really tight corporate credit spreads, and people say, "Oh, it's really not showing much stress."
All right, the New York Fangs are all mixed. That's telling me to just sit tight.
How much is in private credit, and given some of the hiccups we've just seen in some of these bankruptcies, so I think those are two things, like these core bullish talking points. Now you have to at least say, are they being challenged from one direction?
One of the key bankruptcies, so to speak, to the extent we've had any, is of course this First Brands, which has been
All right, CRML. CRML. Looked at that one yesterday. Nice gap up. CRML.
Still down. I mean, you got a couple down quite a bit yesterday. Yeah, down quite a bit yesterday. The center, strong earnings a week or so ago. Remember, usually a quarter gives us a nice snapshot in terms of capital markets activity. From the likes of Goldman Sachs, JP Morgan, and others when it comes to that part of their
What is that?
business. But as specific to Jeffries and its exposure to First Brands, they did put out a release. And then you got a couple of analysts weighing
GLIX.
I took from the Goldman note here.
Pally. Okay, Pally.
Two exposures, this point, Benito, it's kind of like a factoring fund. They've taken the invoice.
Okay, penny stocks.
But I mean, by the way, when you got a
All right, Nvidia is still pushing a bit lower. Nvidia.
but the money that they had
Futures bouncing around. Let's keep an eye on this for a few minutes. Hedging flows turning down a bit. Watching the 6750 level. See if we get a bounce there. We got 30 points overhead. 25, 30 points overhead. If we do bounce, let's see what 0 day looks like. 0 day, 6755.
It seemed like a one-off, but definitely tariff affected on some level in terms of the core business. And I think it's much more about, this is sort of coming, from a blind spot that people have at this point, and you just don't know if it's going to be followed by others. When it comes to Jeffries in particular, they have had pretty good results, but they also, for a decade or 15 years, the stock traded at a slight discount on average to book value. It was kind of
All right, so what's IBM doing? Okay, that's fading a bit more. IONQ. Okay, trying to bounce a bit. IONQ. Let's see what these quants are doing.
Journal takes a crack at drawing a line between tariffs and trade uncertainty and firms that were just over leveraged, and they mentioned Tricolor.
The quants.
Barron's took a look at overall these so-called non-depository financial institutions.
Rigetti.
Like the third.
Rigetti. Watch Rigetti. RGTI. Rigetti. Rigetti looking okay. Okay, here's Rigetti. The high yesterday. Okay, Rigetti. Rigetti looks like it might get going here. Watch Rigetti. Mm-hmm. Yeah, it gapped up a lot. Okay. A GLTO on the move. GLTO. GLTO.
What is the multiple given that? And where are we in terms of 2030 ultimately to roll out what they look like in terms of
GLTO looks like it might want to go.
being perhaps less than had been anticipated.
They intentionally restrain production. This is a truly scarce luxury good, right? Where they're 220,000 a year, I think. The secondary market for them is incredibly strong. People pay enormous amounts for it. So I guess if you're an investor saying, why don't you maximize growth? You're looking for further incremental production. You want to get bigger scale. And the company doesn't really seem to want to do that. They're maintaining a more measured view. And again, on the electric vehicle part, that's a little bit controversial.
All right, we're about 18 minutes into the trading day, just watching.
They cut their EV target roughly in half. And a lot of the weak guidance is on the far end, 2030. But look at a 1 week of Porsche. Look at a 1 week of BMW. Grace is going to join that party. So it's a lot of these European automakers. And they're not really citing tariffs as a source of weakness in the U.S.
They're not, no. But no, and they did. The results were just like short of estimates, pretty much globally, actually, in Europe as well.
Tesla, meantime, is a story. There is this piece on the wires about NHTSA opening a probe into almost 2.8 million vehicles that use FSD for some what they think might be some traffic safety violations. Some more commentary about Musk's proposed pay package and how he might still be able to
Okay, GLTO.
misses some of these targets.
Yes. So, I mean, obviously, the headline was the $1 trillion potential payout. That's if you meet these massive stretch goals about market cap and such. Yeah, but the cumulative production or cumulative sales of vehicles from day one, what is it, 20 million? I mean, some of those seem like they're built more to, clear those hurdles. And, I don't know, it's $1.5 trillion market cap now. And so tens of billions, maybe it's not a big deal if that's what the cost of retention. Because it is, this reflexivity is incredible. With the more people believe Musk is going to be focused on the company and he's going to continue to, kind of hype the story, the more the stock goes up.
Right. You mentioned NVIDIA earlier. Cantor today goes to 300 on NVIDIA, which is about
All right, just watching the futures chop around here.
calendar 26. We were talking earlier.
Yes.
A $300 NVIDIA would take market cap to
7.2 trillion, thereabouts, 7.2, 7.3 trillion, assuming the share count remains where it is. So, yeah, it's a big bite from here. It's obviously almost 40% upside, something like that. So, I don't know. I mean, it's really actually kind of interesting how NVIDIA
Futures still chopping around.
literally climbed. It's at 190. We got there a couple of months ago. I mean, last year we had like a 5-month period when it went sideways.
Let's see what's actually moving in the markets today. Okay, S&P 500. We got airlines up. Yeah, these are all up, Antoine. Delta, United, Southwest. There was something mentioned about Delta yesterday. Freeport McMoran following through. That was one we saw last week, early this week. A lot of these materials, metals and mining stocks, XME, trending. 10 weeks up.
31.4%. They did decline month to month from August to September, 1.4%. But generally speaking, quite strong. They continue to
GLTO just took off.
manufacture of the highest end chips for the likes of NVIDIA and many others. And certainly does have plans underway here in the States, but we've heard various things in terms of the ability actually of those fabs in Arizona, yes, to be able to manufacture at that same level, so to speak.
Okay.
And really the whole food chain, it's just really starting to
APA, Lulu. Lulu looks like it might get going here. So for those of you, Lulu
everything. It's kind of like
still grinding.
and that's the amazing part of this, and even really relative to some degree to the internet bubble, where it is really, you're building structures. It's just hundreds of billions of dollars in capital to create real assets that depreciate quickly, but they're real assets.
because the chip generations are so short.
Yes, and that's one of the bear cases.
Costco coming out of the base here. Tractor Supply trying to break downtrend. Lulu looks pretty good though. Lulu looks pretty good. Our futures are pulling back here. Futures pulling back. Okay, futures got hedging flows turning down. Okay, we're right through support. So next level is 67.20.
I think the sell side is on the side of Now you're actually still going to take value past that point, but who knows?
I don't know what they're. I mean, I guess some of these look good for inference, but they're not for
I don't know. That's the thing. Yeah.
And what supersedes them, and
And whether this kind of world of scarcity continues for that long,
right.
So that's the
Right. And
Mhm.
there are.
Okay, future's still pulling back a bit.
You get from Andreessen $100 something costs 100 today, costs pennies tomorrow. That's the only way it gets there.
Yep.
I guess.
Yep. But I mean, there are no shortage of potential competitors. Obviously, at far different, much lower scale to Nvidia. But whether it's the Groks of the world or Cerberus, we've had two of these private companies on, and then Broadcom. I don't want to. I mean, sure, we saw another deal there that they have with OpenAI. It's a $1.6 trillion market value. It's not up today, but I only mention it because it's basically nipping at the heels of Meta.
Yes.
So I don't know at what point we start to include it in the.
Oh, I think people have tried to say it's the 8 or
S&P trying to bounce.
And also, I mean, Tesla is there for size, but it's not really reflective of the rest of it. Like in terms of the profitability.
Netflix is booming. Netflix.
We are going to see all this. Watch Alphabet today as they roll out to Gemini Enterprise.
Netflix on the move here. Popping.
Fascinating piece in the journal about Microsoft trying to establish
Apple dropping off. Netflix. Okay, Netflix you can see is ripping here. Okay, all I have is credit spreads on this one for now.
And OpenAI seems very intent, not just with Microsoft, but just to portray itself as having the kind of blocking position. They have the head start. They want to kind of promote the idea that they're going to lay claim on all of the future scarce assets that are going to be out there, raising the ante for everybody else. And does that ultimately lead to redundant spending and overcapacity? That's the
You have to give OpenAI credit to Sam Altman in the sense of it wasn't that long ago that they were seen as almost being entirely dependent on Microsoft and the goodwill of Microsoft to continue to fund them, and that has changed dramatically, even in just the last few weeks.
What did ChatGPT usership just get to? 800 million?
Yeah, roughly. Yeah.
No, the numbers are enormous. The compute that's going to be needed, and Ben Wright just has this morning in his little note from Elias in terms of Sora, for example.
Netflix looking good. Netflix.
Typical query on ChatGPT. Yeah, it's many multiples. Not to mention, obviously, so many other use cases that would even require more compute, which is why Sam Altman's out there. But it is amazing.
Supermicro off a little bit at the moment.
From essentially Microsoft in terms of the dependence for capital. A year ago, seemed to be, they were inextricably linked.
I mentioned yesterday that David Kahn is partner at Sequoia, who a year ago was kind of saying maybe things are going to get ahead of itself in terms of the amount of spending. Remember that he just Monday.
S&P is still fading a bit.
Said, Scott, obviously,
Keep an eye on Trace.
and he says,
Hedging flows are still bearish at the moment.
Scale is AGI, is artificial general intelligence. And so, and meanwhile, the experts kind of pushing out the data that might actually happen. So you have a lot of front-loaded spending on maybe we have a longer timeline. Who knows if that's true? But I do think people are talking past one another. The scientists are like, it's about AGI. Sam Altman, it's about AGI. And investors are like, oh, search ads, subscriptions, software licenses. They think it's kind of like we're going to get to a point when we built it and we're going to just then harvest the network effect earnings off of it.
Yeah.
And the people involved are like, I don't know. We don't see the end.
No, I mean, maybe it will. But that's at OpenAI, I think, is seen as, they could become
got it
a
all
social network. They can become, there are so many different
hardware
businesses
advertising
that they're going to be able to move into. You don't want to fall into the Amazon trap where I can remember people saying, well, they just sell books. I mean, the market for books is only this.
Yeah.
Without somehow thinking, oh, yeah, they can sell other things.
Because he knew a lot of SKUs.
Actually, great story in '99 saying, can you believe how much energy it takes to buy a book?
All right.
We're not going to have enough energy for the internet.
Really?
Yeah.
Meantime, S&P falls into the red early going here, down to 50. We're not going to get claims today, obviously. Not going to get wholesale trade as the shutdowns in day 9. Yields stubbornly stuck to 4.15 on the 10. And almost
Futures continue to pull back.
Stay with us.
ONMD. SES.
ONMD.
BYRN.
Palantir pulling back a bit, still consolidating. A little bit higher. Monday we had a doji inside day. Tuesday, Wednesday higher. Today we're just kind of consolidating. Oracle consolidating. NVIDIA. NVIDIA turning back up. All right, big move on NVIDIA there. Let's go take a look at NVIDIA. Netflix is on the move. Netflix is going. NVIDIA. Okay, NVIDIA trend looks like it's up. NVIDIA, let's see what the news is on NVIDIA. Okay, NVIDIA maintained at overweight. Cantor Fitzgerald giving NVIDIA an overweight rating. So that's probably going to keep going. Looking for 200 on NVIDIA.
BYRN. OMMD. DPRO. SES.
NVIDIA on the move.
RGTX.
NVIDIA looking good.
RGTZ may resume in less than a minute. NB. ZSPC. DPRO.
Just taking a few more things off here. We got a bounce in the S&P.
SES. RGTX.
Trace watching for change in direction. Nothing yet.
BTQ.
Okay, NVIDIA, Netflix. Netflix looking good today. Netflix. Big move on Netflix.
SES. BYRN.
Netflix.
GTX.
Big move on Netflix.
GSRTW may resume in less than a minute. RGTIW.
Okay, Rigetti. Is that still going? Rigetti's still pushing. RGTI. High yesterday was around 48 and change. Rigetti.
I'm Contessa Brewer. We're live in the gambling capital of the world, Macau. But Macau wants to be a little bit more like Vegas with a focus on entertainment and sports.
Okay, let's see what's moving the markets here.
Interfere with the profits. Have all of that ahead when we come back.
Okay, UNH. UNH is on the move. UNH. UNH is trying to go.
SES. CRML. ABBE. BTQ.
You can open it. Let her look around in there. There's nothing in there.
SERB.
It's just a cookie box that's empty. I think she smells. All right, so UNH looking good. UNH.
BYRN. NUAI. BTQ.
Low tick alert minus 800.
Okay, more low ticks.
OM.
All right, UNH, we're looking for that head towards the 200-day. UNH, of course, is a longer-term hold, coming out of a squeeze and just rising, looking really good here. Okay, GE, I sold an iron condor on this one. All right, that's, you can see Bollinger Bands continue to contract on GE. Let me see if I can close this for, nah, I'll wait. Okay, CRML, that one's one I mentioned yesterday, CRML. UNH. Okay, UNH. Healthcare stocks have been in play lately. UNH popping up. let's look at some of these. ACHN, was it? No, AC. Let me go take a look at healthcare. Healthcare stocks. Healthcare. Healthcare. Okay, sort these by Scooter. Tenet Healthcare, no. HCA, no. Cardinal Health, it's okay. XLV, the sector, grinding higher. Futures continue to move lower. I'll go take a look at Trace real quick. Trace is still dropping off. Probably going to head down to this 99 percentile, 67.20. 67.20. 99 percentile likely gets tested. Hedge flows lower.
Behind me is the Londoner. It's the big rebuild and rebrand by Las Vegas Sands on the Cotai Strip in Macau. A more than $2 billion investment with lots of focus on non-gaming amenities. And Sands, just like its competitors here, have committed collectively to spending $15 billion over the next decade, with at least 90% earmarked for non-gaming amenities. And look, these are impressive. For instance, let me show you. MGM has a jaw-dropping spa experience that makes clients feel like they're riding out a thunderstorm, submerged in the waves of the ocean. That spa remodel entirely cost $7 million. Macau's government is working to shift the economy to a broader tourism and entertainment destination, and that appears to be working. Visitation is on track to hit about 39 million people this year. But look, it's not the spa that fuels the profits, it's the gambling. I asked executives leading Sands, MGM, Melco, and Wynn about getting a return on their investment here, and every one of them tells me the gamblers are the priority. But now, post-pandemic, they're coming to the destination with their family or their friends or the amenities, and that is a real shift here. Citigroup published a note just this week raising its expectations for gross gaming revenue.
Markets are almost at 10 o'clock, 10 o'clock. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's 9:55 a.m. Here on the East Coast, it is October 9th, Thursday. Markets are just drifting a bit lower right now. We're up 10 weeks in a row. Let's go take a look at the S&P here. Okay, S&P. SPX. Okay, we're still in this range. Okay, we had an engulfing candle on Tuesday. All right, let's take a look at New York FANG components. Those are all showing some weakness, except for NVIDIA, Netflix, Apple pulling back, Microsoft pulling back, Amazon, Google, Meta. All right, these are all pulling back for now. Netflix is okay. NVIDIA is okay.
There was a lot of talk about the high rollers, or as you might have heard the term whales, going to Singapore or to Malaysia. So, for instance, Sands, which operates the most lucrative casino in the world,
S&P pulling back to an area of liquidity, looking for a bounce.
that appears to be largely resolved. I asked specifically about those high rollers and whether they've returned, and the answer was a resounding yes. But now you have all of these younger Chinese clientele who have discovered not just the gambling, they've seen on
NVIDIA,
Instagram, the Michelin star,
Cantor Fitzgerald
the golf
with an overweight rating.
events and the concerts. Analysts say that is drawing a crowd who then
Okay, Rocket Labs from the watch list. RKLB, Rocket Labs. That looks like it's going to keep going. Rocket Labs. Still don't have a position. Maybe some in the money. Synthetic shares in the money. Deep in the money calls, maybe. Let's see. Still squeezing. We're 5 days into this, so this triggered last Friday, breaking through this 55 level. Rocket Labs look good. Yeah, I can't buy this here. I can't buy this here. Looks good, though, if you're already in it. Rocket Labs looks good. UMAC thank you, Frano. UMAC, drones. UMAC. Okay, that's bouncing there. UMAC, fairly inexpensive. It is trending 921.50 up and to the right. Nice little dip buy there. Let's see what that looks like. Where okay, yeah, we got a nice little turn here. UMAC. Tilray's on the move. Tilray. Pot stock Tilray. TLRY's on the move. Okay, Tilray's on the move. You doing Weeble? Weeble. Weeble's on the move. Okay. Tilray. Tilray is on the move. People are chasing Tilray. Everybody knows Tilray. Tilray.
Low tick alert -800.
Still drifting lower. Look like we're going to test that 6720 zone. Maybe. It's a 99 percentile. The hedge flows got down there already. Tilray on the move for those of you trading pot stocks, Tilray. AMD is still sitting there sideways. Coinbase is trying to go. Coinbase trying. Bitcoin inside day. Bitcoin drifting lower. PTC. CRML's on the move. Okay. CRML. Okay, that continues. CRML. Looked at that one yesterday as well. My son had that one. He just sold it this morning. CRML. CRML. Critical Metals Corp. All these companies with precious metals, rare earth metals, any connotation, they're catching a bid lately. Just got to be careful with them. Junk bonds giving us a warning signal to start the week. Okay, that's dropping off. Junk, yeah, that is definitely something to keep an eye on. Junk dropping off. That's a warning signal, folks. You don't want to be taking on too much risk with junk and high yield corporate pulling back. These people are risk averse. Also look at IWM. Okay, that's starting to weaken a little bit. IBB, XBI, these are all risky assets. XBI. Okay, I would pull in the reins on some of your riskier positions. Okay, longer term swings, fine. All right, looks like we're going to come down to 67.20 here. 67.20.
Trying to get some good alternative data sources, some real-time indicators from the banks or from research firms.
99 percentile level down here. 67.20. Look for a bounce there. Look. Okay. 67.20. We'll look for a bounce.
The actual non-farm payrolls 3-month average that we have. So it's very well correlated, which is why I chose it to show today. And when it shows at the very end of the chart in the orange is that there's actually a tick up in September, and which is why Goldman is actually above consensus, expecting job growth in the month of September. Remember, it had gone down to basically negative.
Okay. Tilray still pushing. All right. So these riskier stocks are getting played right now, which is telling you more warning signals. People are chasing these risky penny stocks right now. Okay, NVIDIA trying to push a bit more. Okay, so AMD is flat, 236.12. Palantir pulled back to 181. Coinbase looking a little better. Let me go take a look at Coinbase. Okay, Coinbase is trying to break above this level. So if we break above here, the high on Monday, looking for coin to take out the highs.
In the grocery mostly, and big box stores, and they have a weekly indicator of pricing. And this is the weekly indicator. It goes up to September 28th. So CPI, which should be released next week if we're not shut down, goes up to like early October.
Okay, UNH. Okay, NASDAQ, we only have about 20 stocks, 30 stocks advancing. Let me go ahead and check that out. Right now, we got 129 stocks on the S&P 500 that are advancing. The rest are declining. So you've got 370 stocks declining. We're looking at 1-to-1 down volume. It's not huge, 1.5 down. NASDAQ composite is the only thing that's green other than the diamonds, the Dow Industrials. This is telling you risk off or at least flat neutral right now. The Qs, we've got 24 stocks out of 100 advancing. All right. So 76 stocks are declining. The majority of the IWM are declining. About 1,700 stocks out of 2,000 are declining. We need that to change. McClellan oscillator is moving lower. It's at minus 34. Netflix higher. NVIDIA is trying to take out the high of the day. UNH is going. UNH going. UNH going. Okay, so this is looking good. UNH is doing exactly what we've been looking for it to do. Come out of this squeeze. Okay, we got muscle, RSI. Okay, you got volume over the last couple of weeks. Picking up, MACD stochastic. Everything's pointing in a bullish direction right now for UNH. All right. I do have hedges. I have hedges on SPY. Okay. SPY, I have hedges on in case this does turn into more with the warning signal we're getting from junk bonds right now. Okay, I have the 660, 650, 660, which would be a loss of the 20-day. 660, 650 vertical. All right, so a little bit less expensive than buying 660s outright. Those are first week in November. So I do have hedges. I've been taking some profits off into strength. UNH looking strong. Okay, UNH. Defensive stocks. All right, UNH pressing higher. UNH. Futures. If we get down, I'm not paying attention. If we did get down to 67.20, look for a bounce there. We need to see. I mean, we could get the hedge flows to turn up before we get there. Netflix is still pushing. Netflix. UNH looks good. Netflix. NVIDIA is number 1 on the NASDAQ 100. NVIDIA. Netflix is number 5. Okay, Netflix. Okay, look at Netflix. We're back above the 50-day. This is a big plus. MACD stochastics rising, RSI rising. You know, we got a note last week from Elon, sell Netflix, sell your Netflix subscriptions. They're too woke, whatever. We had a dip on that news, and then buyers stepped up. Buyers stepped up on a double bottom. Okay, volume is starting to pick up for the last 3 trading days. We're back above the 50-day. This is a big plus. If you're trading Netflix, RSI is rising. MACD stochastics turned up. a good swing. I wouldn't chase it here if you didn't get into it recently or this morning. I would wait for the dip, wait for a little dip here. I have put credit spreads. Let me go take a look at that actually. But before I do that, let me just take a look at the New York FANG.
I think, sir, a couple of things first. I mentioned this morning, being brilliant at the basics, executing at perfection.
New York FANG. Okay, so we're still in this range. Yesterday I told you that as good as yesterday looked, we could pull back in a little bit. Oh, it's looking okay. We're looking okay. NVIDIA, Netflix helping out a great deal. Even as Microsoft, Apple, Amazon, Google pull back. Meta's trying to do something here. Meta. Snowflake and Tesla, those are lower. What's Broadcom doing? Broadcom, AVGO. Semis were good this week. They're taking a break right now. Semis, let's take a look at semis. SMH. Frano mentioned TMC. Okay. The Metals Company, TMC. All right, S&P looks like it's trying to turn here. S&P is trying to turn. Watch hedge flows. That looks like it could turn up. NVIDIA flagging now. What are you doing?
I think that investors were encouraged by the new CFO announcement that you had today, especially coming from Walmart, which is obviously known on the street as a very good operator, and having an open mind around taking in an outsider. They like the sense of urgency. I mean, clearly you have Elliott management in the stock. What are your engagements with them like, and what do they want?
Okay, NVIDIA, it looks like it wants to go some more. We'll keep an eye on NVIDIA for a few minutes.
Very excited to get Steve into our team. Obviously, I've spent the last 9 months trying to find Jamie was retiring or expressed his willingness to retire to have a new CFO. It is hard to find the right person. I think with Steve, we have the right experience, the right proof points of performance.
Yeah, Supermicro, we're not going to go up every single day. I mean, that's inside day. We've been up for what, 2 weeks straight. Volume looks good. That's institutions. This might come back in a little bit. We filled the gap. That looks good. Supermicro. Inside day. Don't be surprised if buyers step up. Buyers step up on the dip. Okay, Oklo is up. Okay, Oklo looking good. The nukes. Let's keep an eye on the nukes. OKLO. Oklo, SMR, nanonuclear, and nukes, NUKZ. That's still trending. Netflix having a good day, of course, back above the 50-day for the past 2 trading days. 921-day turning up. I do like Netflix. However, I'm trading long. I'm trading in bullish, but I'm doing it with a credit spread. And I'd like to see this move a bit higher before I take these off. No reason to do anything at the moment. All right, so I sold these for credit. Let me see what the credit is. I forgot to put that on the note. Netflix.
One thing that I think caught some investors' eyes was their contention that since acquiring your bottlers, that is PepsiCo acquiring bottlers in 2009, 2010.
Okay, so this is looking good.
North American beverage business has, they say, profoundly underperformed the Coca-Cola system and current Dr. Pepper on growth and margins. Is that true? And does that put at the center of anything you might do the idea perhaps of divesting those bottlers?
David, we'll be open to any ideas. I think the portfolio is critical to our performance and long term, making sure that our portfolio.
Okay, S&P was just kind of hanging out here.
And I think that is our focus. When it comes to the supply go-to-market, which is where
Netflix, this is working out pretty nicely. Netflix.
Be open. I think the solution for the U.S. is not one solution for the whole country. It's a very nuanced solution.
Okay, Netflix. Did I post that? I think I did, right? Netflix. Yeah, Netflix. I took 1185 was the credit. All right, so that's what it was. I took 5 of these, 1185. Okay, credit. 1185. Okay, so my credit's 1185. And all I need to do is watch Netflix continue along its path to the upside. So that's good. Netflix looking good. NVIDIA, I might want to do something with NVIDIA too. Let me just go take a look at Trace. All right, this is starting to turn. All right, so watch the hedging flows are starting to turn on the S&P. Hope everyone's having a good morning. It is October the 8th, Thursday. Watching for hedging flows to turn back up. The hedging flows did make it down to 67.20. Okay, 99 percentile. These are still there. 153 million. That's got to be what? Did Brett ever update? Okay, so we got 67.75 resistance, 67.20 support. Captain Condor, 20,000 contracts. Okay. 20K position. 67.75. 67.20. Gamma flip level 6,700. If we drop below 6,700, cash index, not futures, cash index. Okay, so we can see that right there.
The S&P Consumer Staples Index or your peer group median. So what do you say to those investors who are frustrated over the last 3 years' performance in terms of what they can expect and why you're going to get that stock price performing better?
I think there is a great question. I think our food business
looking for a bounce.
Combination of microeconomics.
If we do drop, we have a hedge. I would be hedging, reducing my exposure. We've been up for 10 weeks. I'm really surprised we made it this far. Maybe surprised isn't the right word because we've been following it every week. But a pleasant circumstance to have this moving higher. There's an excess bullishness in the market right now.
Completing the Sabra ownership, those give us spaces where we can accelerate growth. So I'm very
July 24 and February 25th, 25. February 25 was the last time we got this kind of dispersion, this extension between individual stock IB and index IBs. They got really wide in February and July. You can see that same thing is happening right now. So this is telling you very clearly with junk bonds and high yield corporate debt, you should be hedging. Now, the hedge that I have, I'll share with you again, is the 660 660, 660, 650 for 21 November. Okay. I'll double up that position if we start to drop. Okay, so this is really important. February, you know what happened in February. We had the tariff situation. July of 24, I forget exactly what was going on in July, but we did pull back. Markets pulled back there shortly thereafter. July, let's go see July 2024. Okay, July of 2024. Right there. Okay, so this July 2024, we dropped from 5,700 down to 5,100. All right, so we lost 600 points. All right, on the cash index, we're still sitting up here on a doji. So don't wait until VIX spikes to take a hedge. You always want to do this when you can, not when you have to. Right? This is still pretty inexpensive at 16 and change, giving you about a 1% move, perhaps. Market traders seem to have an appetite for buying these dips, so we'll see what happens with. We'll see what happens here. Looking for hedge flows to turn up markedly. We can take a long if that happens. S&P 500, cash index. We've got the hedging flows starting to turn up. Our innovation will hopefully perform well in those spaces, get consumers preferred choices, and that's why we're excited about 26.
And that's immigration, the Hispanic consumer changes related to
Excuse me?
Is it immigration related? The Hispanic changes?
The Hispanic mobility is reduced. You know, they don't meet their friends so often. They don't assemble so much. They just they have changed their mobility patterns. We see, and that impacts consumptions, and that impacts some of our brands, especially. There could be an absolute number of people in the country as well at one point, and obviously, I mean, every country needs population growth to drive consumption growth, and that might be a factor going forward in the U.S. But at this point, Sarah, the issue is more mobility, is more income. They're working less hours. They're working less. They're having less get-togethers, and that impacts us. It's impacting the convenience store channel as well. All right, starting to turn. Some elements that we're sitting right on the low of the day. S&P. NVIDIA's pulling back a little bit. Sitting right on the low here. Daily, obviously, you see what's going on there.
Here's our roadmap for you for the rest of the hour. Ferrari hits a speed bump as shares pace for their worst day in years. We'll tell you why and what it says about the.
Okay, looks like we're going to push a little bit lower. All right, we're going lower at the moment. 67.20. Maybe we'll get down to 67.20 before we turn. Okay, hedge flows turn markedly down.
Markets are in the red, led lower by some consumer squawking the streets back after this.
All right. Wow, feels like it's noon already. Feels like noon already. LAES, what do they do, Frano? Seals. RCAT. Red Cat Holdings. Drone industry, Red Cat, RCAT. Their earnings need to pick up a bit. RCAT. Yeah, that looks pretty good. Nice move. RCAT. RCAT. Drones, UMAC. Okay, UMAC looking a lot better. UMAC.
MCRP. SMU.
UMAC.
PRSO.
LAES.
Use a stop underneath the low of the day.
NUAI.
VNTG.
SMU.
CGC. Yeah, a lot of these canopy growth. Haven't heard any news on canopy growth for years.
LAES. SMU. NUAI.
All right, Broadcom starting to bounce. Okay, what's IBM doing? IBM.
Jump above $4,000 an ounce this week. It's a new record high, and the metal's up 50%, more than 50% on the year. Let's bring in Jim O'Neill. He's the former UK Treasury Minister, of course, chair of Northern Greenstone. Always good to talk to you, Jim. And I wanted to start off on gold just because I wanted to get your take. Like, what do you think about this move? Does it have a larger meaning, perhaps, than just looking at a chart?
Well, I think the sort of weak, superficial consensus in terms of a meaning is that it was another sign of the dollar and other major currencies losing any kind of base.
All right, UNH IBM pulling back a little bit more. We got earnings on the 22nd, I believe. Okay.
Notably, in my view, by a surprising amount against the Japanese yen. So
New York Fang still hanging in there. Still hanging in there. We got buyers at the low of the day on the index. Okay.
And there's a lot of investors out there that love momentum trading. And in terms of the only substance I can think below it, it is probably the case that some of the very large, let's call it BRICS-based emerging countries are still probably shifting some of their portfolios from major currencies to gold, I'd guess. I mean, I don't know. But otherwise, I don't really quite get it.
Yeah. All right. Well, I wanted to put the question to you nonetheless.
Okay, Albemarle. A lot of the metals and mining stocks, Albemarle, lithium, Albemarle breaking out. Albemarle.
Productivity improvement. I was online listening to some of things being said earlier. There are one or two tentative signs of that.
Pretty poor.
I'm not quite sure this notion that everyone's got to own gold because the world's falling.
Okay, what is
necessarily holds together.
Yeah. Well, you mentioned AI. I certainly would love to get your perspective on that as well. As you know,
USAR?
Talking about it for obvious reasons.
USAR.
Yeah, I mean,
That's one Frank likes to, Dr. Frank likes to trade from time to time. UMAC going. UMAC going.
Sort of again, as another old guy like me, do you see
UMAC going more. Futures is still sitting here. Okay, what do we got here? BINI, cheap penny. BINI, that was active yesterday. Benny coming off the low. Benny. Applied Materials, chips. Okay, yeah, nice bounce there, Rob. I like it. UMAC still going.
In addition to the marginal employment data,
UNH.
in a number
UNH, looking for that to bounce more. The healthcare stocks grinding along.
There might be something going on in terms of AI, what economists would call is sort of diffusion out to beyond just.
All right, super micro, inside day for now. All right, starting to see some buying at the low of the day, maybe. Is that what we're seeing? Super micro. All right, trying to get something going. I don't know. With junk bonds and high yield corporate pulling back, sending a warning signal, and core one, this dispersion between individual stocks and indices at a level you haven't seen since July 2024 or February 2025. This is clearly sending a warning signal. So with VIX lower, please buy some hedges.
I cannot see how you can continue this staggering wealth being created by those, or for those in the forefront of this, let's call it revolution, sort of being allowed to go on by all sorts of societies if we still have so many people feeling disgruntled about not sharing any of the pie. So I actually wrote something about this Project Syndicate a couple of weeks ago.
Are you there? Oh.
Kind of breaking up to me a little bit there. Sorry, repeat the question.
You're back, Jim.
Yeah, okay.
It's Sarah. Hi. So my question was actually on. Hi. It's always good to talk to you, and you know a lot about central banks, even though you're always very self-deprecating on all these topics. But on the Fed, so the Fed doesn't have the data now, and the question is it going to cut rates?
Okay, so that looks good.
Times this year, a bunch of times into next year. There's a big leadership change coming at the Fed. Next year, I noticed that Secretary Bessent did a community banking event.
UMAC is on the move.
The Fed governor and vice chair.
So temper your expectations, basically. Okay. We've had quite a bit of upside. Oracle looking really strong. Okay, Oracle having a strong day today. For Frano.
In the economy with regard to AI, but also as we try to figure out what's exactly happening on jobs and inflation.
SoFi. Okay, let me go look at SoFi. SoFi looks good. UMAC, nice bounce on UMAC. Only about 20 stocks, 30 stocks green on the NASDAQ 100 right now. Majority of stocks are declining. Let's go take a look at breadth. Okay, let's look at breadth here. No, I don't want that. VIX backing off. Okay, VIX backing off. Okay, all of these are pointing lower. Okay, so they have a long way to go to get down to minus 30 or even minus 20. All of these pointing lower. Short term.
Unless the core inflation data actually really starts to improve. Everybody seems to behave as though inflation's way past its troublesome times, but core inflation is not really coming down. And from my sort of cursory analysis, when you delve, it does look like it might be creeping a little bit higher. So with the markets having this very confident expectation that the Fed's going to do, considerable moves, and partly because of the pressure from Scott and from obviously the president, those are things that I think have to be looked at really carefully.
Jim, always appreciate you taking some time with us. Thank you.
My pleasure. Thanks for having me on, guys. Good luck.
Busy morning as Delta reports earnings. Novo makes a deal.
Futures continue to move lower.
We'll get some morning movers to watch after the break.
Okay, futures continue to move lower. All right, so we're going to definitely test this 6720 zone. I don't know how reliable this 6720 bounce might be, so we'll have to take it. We'll take it when it gets there and see what it looks like. Take that with a grain of salt. Looks like S&P is going to go down and test 6720. Okay, it's been a short this morning. S&P has been a short this morning. How many times have we seen that in the last few weeks? Gap up, and S&P just fades the entire day. Gets down to Captain Condor's short strikes, down at 67.20, and then reverses. We'll see if that happens. Red Cat RCAT, another drone stock. Pulling back at the moment. UMAC, that's pulling back as well with the index. Okay, NVIDIA, Netflix is hanging in there.
Coach, and the CEO also adding that cash sales even picked up in July. Revenue from that high-end segment, which is everything from first class to the extra leg room economy seats, increased about 9% in the quarter. Main cabin revenue actually fell about 4%, but was offset by those gains that we saw.
All right, UNH.
Domestic passenger revenue overall increased.
Doji at the highs. UNH breaking out of a TTM squeeze. Let's look at the 10-year yield. 10-year yields. Okay, 10-year yields have been just chopping around here. Fair value just overhead at the 50-day.
So midpoint well above expectations. And as far as revenue for the last 3 months, expecting about 4% growth when they previously had forecast for 1.7% growth. So really improving trends here. CEO Ed Bastian said, quote, "We're back on track to where we were looking to be originally."
Supermicro.
Fourth quarter, we will see hopefully the best fourth quarter.
Okay, so an inside day still.
So quite a statement from the CEO to
looking at stocks that are actually on the move today. Metals and mining related. Lithium, magnets. What's UUU doing? Axon, body cams, etc. Axon, Insulet for diabetics. Insulet. Okay. Netflix still pushing. Netflix at the highs. Apple, Microsoft, all of the New York FANGs have pulled back except for a little bounce in Snowflake, little bounce in Meta. Even NVIDIA is starting to fade a little bit right now off the high. Tesla's trying to do something. We got Netflix a bit higher. Oklo, the nukes. Oklo's trying to do something here. Looks a little timid. The volume tapering off.
We might also see volatility on the rise with it. That's it with Delta. I think it's just a fantastic report. We're seeing a lot of stocks jump after reports or jumped after a positive news sentiment. It seems like people want to jump in and buy the stocks on that big gap higher. That's not the way that I would do it. I'm not looking.
Coinbase or Bitcoin pulling back. Coinbase just sitting here. Bitcoin. All right, so these are risky signals, right? Risk on, risk off. If Bitcoin rolls over here, okay, that's another risky asset.
That's about at the money right now. And I'd look to sell the 60 put and collect some premiums while I'm waiting to see if we're higher or lower. Obviously, love it to be higher, just collect my premiums. If we do go lower, that's great too. I'll be able to buy Delta at a lower price.
All right, if we roll over on Bitcoin, yeah. Oklo, I'm going to just take a little bit off here. Oklo. Okay, Oklo. I just cut my position in half. Oklo.
What are your takeaways on the market action today?
Yeah, this is par for the course. Touching record highs. It's obviously great news. Certain stocks doing better than others.
Let's see, SoFi.
I think the narrative just remains the same. It's been the narrative for the past.
SoFi just sitting here.
This AI infrastructure build out, this hyperscaling of these data centers
is just the name of the game. Some stocks I'm watching are utilities today, maybe boring old utilities that are actually having
CoreWeave up a bit
recently because we're going to need to power these data centers too. So it's just an amazing thing to watch this whole economy transforming. Big picture though, next week we're going to start to see the earnings for the.
All right, let's look at CoreWeave.
Love to see great reports.
All right, that's looking okay. CoreWeave. Put credit spread on that one. Let me just go ahead and take this off.
These data centers, all this money, is it filtering through the rest of the economy? Are the banks taking advantage of that? We'll start to see maybe a picture of that. I want to see their guidance for next year to see if the steepening yield curve should help a little too.
Yeah, we've got to get the money from somewhere as well. Joe, always a pleasure. Thank you so much for joining us today and unpacking your thoughts.
S&P still drifting lower. S&P.
Equity Armor Fund. Coming up, we will take a closer look at the sectors on the move this morning and what's moving markets overseas as well. More Morning Trade Live comes back after this.
UNH. Okay, we only have about 20 stocks, 24 stocks advancing on the NASDAQ 100. We only have 132 on the S&P 500. All right, so you got 368, basically 370 stocks declining. Advanced decline looks poor. You've got junk bonds lower. I would be reducing my exposure. That's what I've been doing.
I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email.
All right, UNH, I had credit spreads on. I'm going to go ahead and take those off for $50. Okay, let me go take a look at that.
It's your number one broker with the best full service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention Schwab is a team of
UNH.
specialists in taxes, insurance, and estate planning.
Don't want
all
that.
with low fees.
We're experiencing technical difficulties.
Carl.
UNH. All right, I just took these puts off.
Schwab, a modern
I doubled up on the put side. Call side I took off before we got to break even. So this was a successful trade, UNH.
It's now time to look at the sectors that are moving markets this morning. Very pleased to say I am joined by Kevin Hinks over in Chicago. So we're continuing this sort of trend that we've seen this week of sort of one day up, one day down. Kevin, all but pretty range bound, you could say. What stands out to you?
Yeah, these aren't big moves, Sam, but there's certainly a bit of a weakening, and it seems to be getting slightly weaker as we get towards the 11 o'clock hour. But these are big moves. S&P only down about 0.3%. The NASDAQ down just over 0.4%. So I think my take on these markets is they're just getting a little choppy up here, Sam. That said, right now we have 8 of the 11 sectors in the S&P 500 lower. You can make the case that 2 are unchanged and only 1. And that is
UNH, I'm out those. All right, so I'm going to take these off.
Are the only one that's a little higher, which normally rally in a softer market. So energy is down again for the second.
All right, so this is doing fine. I could just hold on to this, but for 50, whenever I get down to $50, if I sell something for 150, 175, 200, in this case 285, plus I took the call side off. If I can get out for $50, I'm fine with that. Nice credit, nice profit. All right, eliminating some of these credit spreads. If we do start to pull back, many of them will test the low side, the put side. Let's see what else we want to do here. All right, I'm just as the markets are kind of cruising down towards 67.20. Okay, I'm looking for this to get down to 67.20, so I'm not in a big hurry to do anything until we get there. Nvidia pulling back. Okay, what is this?
What do you make of the moves we're seeing in the Mag 7?
You know, that's an interesting thing. So many parts of the Mag 7 are lower, yet NVIDIA, the leader of the Mag 7, that underachieved on Monday when AMD made their big deal, has fired right back. When you start to realize, and Jensen Huang has been out there this week doing a lot of media and making a lot
Okay,
of
GE, that one worked out really well. Let's see, GE, I sold 10 of those. Let's see what I can close these for. Wait a little bit longer. GE, I'll wait a little bit longer.
He's basically, instead of loaning the money, he's taking stakes in all these companies. The
Okay, let me take a look at GE. Okay, GE, I have an iron condor on this one, GE. Whoops, GE. Iron condor on this one, okay. Got four of those.
For the investments that they're making.
Yeah, I mean, was it $2 billion or something in XAI? And he came out and said, "My only regret is that I didn't do more," which is very telling. So yeah, fascinating stuff.
So that's a that's about what, $70 per contract profit at the moment. Okay, we just took that, what, 2 days ago, 3 days ago, whenever you guys started talking about GE. I liked what I saw. Bollinger Bands coming together. What's Oracle doing? Oracle, all right, basically basing. Looks like a base. Netflix. Netflix still flagging. All right, all the New York FANGs are
minus 800.
okay. 67.20 is what we're looking for. All right, S&P 500 67.20. Okay, we'll see what happens when we get down to 67.20. We're getting very close now. 67.20. Okay, 67.20.
This move is being seen as leverage ahead of a potential meeting between Trump and Xi in their ongoing trade negotiations. Meantime, the Chinese A-share market coming back online after a week-long national holiday. Stocks jumping in Shanghai to the highest level in 10 years, thanks to AI and gold plays as traders played catch-up on the rally in both sectors globally over the past week. Although tourism shares slumping on disappointing holiday spending data, and Hong Kong's biggest local lender, that is Hang Seng Bank, rallied 25% in the Asian financial hub overnight after its London-based parent HSBC proposed to take it.
Okay, let's see what's going to happen here. All right, so hedging flows. This time of day is right when I'm starting to look for this to happen. Okay, we're getting down to 67.20. Oh, I didn't mean to do that. Didn't mean to do that, Benny. Okay, that's all right.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or
Okay, let's see what's actually
saving,
moving.
spending, or even retiring, you can count on Schwab. Market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
Sorry about that. Did close the wrong window. Okay, so let's see what's working here. SPY. Okay, we got lots of puts on SPY. 520s, 570s. Rigetti calls. Okay.
This is a make or break level for this stock. That could certainly be a short to near term catalyst. Next turn investing, 1 p.m. Eastern.
Only on Schwab Network.
Okay, we got Boeing too with calls, 205 call. Let's go take a look at these. Rigetti, RGTI. Okay, so they probably sold those. SPY puts working. Okay, we are looking for a bounce. We are looking for a bounce. Let's see, S&P, B fly, B-fly, BFLY, Butterfly Network. All right, not that interesting. Fly.
Real-time access,
Nope.
data-driven analysis from U.S. equities.
Netflix. Netflix hanging tough. Netflix, some solid buying on Netflix. CRML. All right, CRML breaking higher. UMAC pulling back. CRML breaking out.
Is an opportunity for the company to showcase Agentforce traction in its first year after the launch and set the stage for second half earnings. So let's go inside out on this name, Salesforce, ahead of next week's Dreamforce event. Joining us now, very pleased to say, is Melissa Otto, head of Visible Alpha Research, S&P Global Market Intelligence. It's so nice to see you, Melissa. Thank you so much for joining us once again today. So the next catalyst for this name is going to be Dreamforce. So what are you expecting from that event?
Hey Sam, greetings from London. Here on a business trip. It's nice to speak with you today. You know, I think it's going to be interesting. The market would really like to see how the company is going to get back to its historical growth. And that's going to be, I think this Dreamforce event is going to be a critical one to try to set the tone and provide some visibility for that. Right now, based on Visible Alpha consensus, the market is expecting $9.7 billion into the upcoming quarter. That's flat quarter on quarter. I think the market would probably like to see a bit more of a growthier run rate come through for the company, especially since they generate about an 85% gross margin. So any meaningful incremental uptick in their growth rate on the top line could be really impactful on the EPS line.
Yeah.
CRML looking for a nice little rally there. Critical metals. Any news on this one, CRML? Okay, S&P is starting to turn. Watch the hedge flows here. Let me go to the hedge flows real quick. Okay, we could try an initial entry here. 67, maybe 67.50. Let's see what S&P looks like. S&P 67.50s. Let's go 14. Those are $4.
Salesforce is not alone in that camp, but I think since they have essentially
67
AI such a critical anchor around their forward-looking strategy and around how we need to think about the outlook in their business model, it's going to be an important dimension to what we can hang our hat on.
You know, and as far as some of these commercial trends that we've been seeing, as far as,
67.50 call, lottos.
What your research is telling you right now, particularly with these expectations very much being priced in of further interest rate cuts, what that's going to mean for some of these budgets, etc., from enterprise.
Okay, so I bought some S&P, looking for a 67.50 bounce. A bounce could pull back into this fair value gap, so it's a small position for now. I'll leave it alone. I'm not going to scalp it or go too active. If it doesn't work, it doesn't work. That's it. All right, so this time of day is when I'm looking for that change in direction. Look for it to get confirmed by Trace and and by the hedging flows that we're seeing right here. The hedging flows turning up markedly.
team has expects about 3 cuts for this year.
Okay, so CRML. CRML looking good. CRML.
We're getting on a pace where it may become more attractive of an environment for these smaller caps and these smaller companies that Salesforce is selling into, and that may be a healthy driver for them. There could be increased consumption patterns that come out of those companies.
Okay, you're boring. You're boring. Okay, what do we got going here? Okay, S&P, look at the far right chart, the daily. Don't forget, this is an upward sloping pattern, basically. All right, so this is upward sloping. For now, until proven otherwise, it needs to take out yesterday's low. If it takes out yesterday's low, okay, I would definitely be adding to hedges.
So I think we're going to see consumer spending grow slowly to a pace that's more consistent with income growth. So that would suggest weaker economic growth in late 2025 and then in 2026 than what we've experienced over the past couple of years.
And do you think that the Fed cutting rates will be helpful to juice growth? I mean, there have been some questions about the effectiveness of the Fed cutting rates to help the labor market, for example, particularly if it's more of a supply problem than a demand.
ASTS, okay, looking good.
That sort of so-called transmission mechanism.
Okay, nice move on ASTS. UMAC. UMAC, a little dip there on the 1 minute. Looks okay on the daily. UNH took off the credit spread on UNH. Put credits for a profit. $1,110 on that one.
Yeah, David, apparently stocks and bonds are for boomers. Millennials are way more invested in alternatives than the older cohorts. The generation with birthdays between 1981 and 1996 has about 20% of their portfolios allocated to alts, areas like private equity, venture capital, and private credit. That proportion is double that of Gen X.
UNH turning up. CRML. Critical metals. Let's see what they got going on here. China tightened export controls on their precious metals, so everybody's buying whatever has any kind of metals name in the company name, it seems. Okay, so all these stocks are lit. Okay, what's NVIDIA doing? NVIDIA trying to bounce. Netflix is hanging in there. Broadcom trying to bounce. All the New York bangs are off except for Meta, NVIDIA, and Netflix at the moment. Broadcom's trying to do something. CRML coming in a little bit. Meta, let's see what Meta looks like. Yesterday, Meta was trying to get above the 720 call wall. Yesterday. Okay, we got just shy of that. This morning we got above it. Meta could get going here. Watch Meta. Meta might do something. Okay, coming into the 11 o'clock hour. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We're looking for the S&P to continue climbing. It is October the 8th, Thursday. Okay, S&P still climbing here. Hedge flows turn the corner. All the New York fangs are off at the moment, so that we don't have that risk on indicator. We got a risk off indicator in that respect. 7 of 10 are lower. We got junk bonds lower, high yield corporates lower. We got the core 1 month. What's that symbol again?
the next marginal buyer as these generations continue this shift, if it were to continue? What does that mean for stocks?
Core.
If the marginal buyer is far more invested in the private market,
Core
the public market.
1M.
We like marginal buyers.
We do. Yeah. Good thing there's still a lot of boomers out there. Exactly. Thank goodness for the boomers.
Core 1M. Okay, this is down below 8. Right at 8 right now. If it drops below 8, this particular implied correlation index, if this drops below, that's going to be very similar to February. You remember what happened in February? We had to pull back into the April low. All right, so I don't expect that kind of price depreciation, but I am hedged. I do have SPY 660, 660, 650 put verticals. Okay, I got a nice size position there. I will double up if the S&P loses yesterday's low. Right now we're bouncing, so there's still an appetite out there to, I don't want to use the word gamble, but there's an appetite out there. There's just an appetite out there. The bulls still buying dips. Okay, the seek and destroy algo took out some of this. It still looks like they're there. 6720s. Okay. All right, so a little bit's coming off. It looks like 195 million now. 99 percentile. We basically got very close to that level. So I'm looking for this hedging flow to continue to point higher. Okay, that would mean that we'll be looking for more upside. S&P 6750s. All right, let's see how those are doing. I'm not going to mess around with those day trade. I found out that scalping I wind up taking or giving back some of the gains. So this is going to work to the upside or it's not. Okay, so 6750s are what I bought down here, right in this area, right here in this fair value gap. Maybe a little bit higher, I guess. So this is starting to go. S&P. Those calls are up. They're up $50, $55 per contract right now. All right, what's Circle doing? CRML rather. CRML, that's drifting a bit lower down to 15, looking for another bounce. S&P, okay, so we got the reversal we were looking for. Okay, so if we get back up here, that's about 2 to 1. It's about 2 to 1.
Interview before what's going on with consumer packaged goods companies, and that was my own world and wellness foods, etc. Our Canadian cannabis business, was up mid to high single digits. Our international cannabis business was up, mid to high single digits. Our beer business was basically flat. So from a standpoint, yeah, cannabis is had a really good quarter for us, and we're in the midst right now of integrating all these beer businesses that
hedging flows continue to turn up.
We also gone through where we were delisted and buying some of these products and getting them relisted. Because not everything happens at the same time, and you got some good ones and you got some bad ones out there, and hopefully the good ones make up for the bad ones.
Yeah, and when you bought some of those beer brands, we talked about them a little bit, and at the time I said okay, so how do you buy these beer brands and make them better? How do you turn the sales higher? As you say, you're in the process of kind of doing that, rationalizing the SKUs, changing the marketing, what have you. So where are we in that? Do you expect sort of a bigger unlock at some point? Because I know some of the overall secular trends are against you with beer consumption as well.
Listen, the beer category is not growing, if anything, is declining. On the other hand, what I come back and say is this year we own today over 18 different brands and
Hedging flows continue to point upward, looking for more upside.
And how do we come up with some innovation? And that's what we've been doing, whether it's a non-alc, some of our, lighter beers, some of our unique beers, and we're seeing some of that paying off for us. The other thing is when we bought some of the brands from whether it was Molson's or from ABI, just from the timing, most of these brands were declining. So number one, we went through SKU rationalization to clean up some of the SKUs.
All right, CRML looks like an early ABCD pattern, CRML.
And getting distributors excited about that. The other thing is we originally had 10 breweries out there integrating some of our breweries and taking costs out. So far, we've taken $25 million in cost out, and there's more to do. So, again, we only been in the beer business since the end of 2020, and we've brought.
Okay, I get it. We're gonna get a peace deal with Hamas and Israel. That should be good. Okay, S&P 500. Palantir. Look at Palantir. This thing rips every time it dips. Buyers keep showing up. Pretty wild. Mm-hmm. I need a masseuse. Somebody crack our chiropractor. Somebody crack my back every day. I just weird sitting this way. I gotta stand up or something. Let me stand up. Stretch. Oh, yeah. Gotta crack those vertebrae. Mm-hmm. So Oracle had a dividend paid out today. Was it a special dividend or what? 50 cents a share? Okay. Generally, the stock would pull back on that news, right? Not always, but sometimes. All right. It's kind of slow right now. Looking for S&P to do something. Okay, top of the S&P 500, the top 10, Albemarle, Delta Airlines, Oracle's number 3. It's up 3.86%. United Airlines, number 4. Costco, number 5. KVUE is number 5. Number 6, sliding in number 6, Costco, PepsiCo, NVIDIA, Insulet Corporation, PODD, and Axon, Body Cams, Axon, Live Nation. Okay. BINI is turning up. $2 stock, BINI. Bollinger Aviation Innovation. Bollinger. I wonder if it's related to John Bollinger. Meta. Okay, Meta. I've been looking for that 3 day. There goes Meta. Good job there, Corey. Keeping an eye on Meta for us. Meta through the 720 call wall. Dealers squeezed above that level 720. Okay, let's take a look at Meta. We got the 520 call wall, 720 call wall, then 750 next. 720, 750. Okay, so that's good. All right. All right, let me just take a picture of this. Oh, Meta, you're looking so fine. So fine. Okay, Meta. 750 is the next call wall, so we could see a big squeeze here. Okay, let's go, Meta. LETSGO. Weekly, trending, intraday.
Welcome back to Yahoo Finance. I'm Brooke Thomas. We're live on the NASDAQ. Let's get a quick check of the latest market action because we're about 2 hours into today's trading session. And after we've seen record highs, now we're seeing all three major indices reverse into the red. Taking a closer look at the YF Interactive, after the Dow opened just slightly higher, it's now seeing some downward pressure, down about 0.3%. The NASDAQ also experiencing some downward pressure, down also about 0.3%, and the S&P 500 also down about 0.3%. But I do want to get some trending tickers because despite this red that we're seeing across the major indices, we are seeing a bit of excitement still around NVIDIA. That stock is up about 2.5% after an incredible run this year. And the momentum that we're seeing today is based upon the fact that Cantor Fitzgerald analyst CJ Muse, he raised his price target to now a street high. And also, the U.S. approved exports of NVIDIA's chips to the United Arab Emirates. And that's really what we're seeing, the momentum. Shares rose as much as 3%, really extending yesterday's gains as well. It also hit an intraday high of about $195.30. So we'll definitely keep a closer eye on NVIDIA as we make our way throughout today. But I also want to take a look at something else that has been gaining a lot of attention, and that is commodities, specifically gold futures. Gold futures crossed $4,000 per an ounce for the first time this week. Now we are seeing a bit, just a tad of downward momentum after that record rally that we saw, that crossing that threshold. And also, I want to take a look at silver futures because silver futures actually ever so slightly topped $50 per an ounce for the first time in decades during today's trading session. The metal climbed as much as 3.8% on Thursday morning, and that surpassed the 2011 peak. We are seeing some downward pressure after that record run up throughout today's trading session.
Squeeze. All right, on Meta, squeeze.
We are seeing other precious metals gaining momentum.
Let's see.
Also up about 1.5%. Once again, taking a step back, all three major indices now in the red as we make our way into today's trading session, all down about 0.3%. But keep it right there now for finance. We'll be tracking all the market moves throughout the session.
Intel is introducing new products and manufacturing technology as part of the company's turnaround strategy. Joining us from Yahoo Finance tech editor Dan Howley. Dan, what's new here at Intel?
Yeah, they just showed off their new Panther Lake chip, codename Panther Lake. Panther Lake. And the real name is going to be their Core Ultra Series 3. Now, these are their first chips that they're selling commercially built on their 18A process technology. And this is a big deal because they introduced two unique technologies at the same time. This has been a big issue for Intel.
Okay, Netflix looking good. NVIDIA back up. Okay. Meta looking really strong. Nice move on Meta.
Can they get this out in time to draw interest from potential customers to use this particular technology for their own chips and basically act as a third-party fab similar to TSMC? So this is their first rollout of these chips.
So they made these chips. They fabricated these chips.
Yeah. So these
and
are
this is the first generation of them. They've ever done this.
Yep. First generation.
Okay, Meta still pushing here. Meta looking good.
They're also interestingly being built at their new Fab 52. It's a new fabrication facility in Arizona.
Netflix pushing.
Wins for Intel. First, they have their 18A coming out. They're going to start shipping in volume next year, early shipments at the end of this year. So think, your laptops, desktops, things like that. But then also the fact that they're building them in the U.S. in this fab is also a good signal for the company, especially as President Trump really leans on tech companies to build in the U.S. So it's a win-win for them. The big test, though, is going to be, do these chips live up to expectations? If they don't, and ATA doesn't have that kind of big blow up moment that Intel's hoping.
All right, we're coming into 11:30 here. All right, starting to get into that window where we don't want to take on a lot of risk in this window between now and 1 o'clock, more or less. 12 to 1 is fine.
I think it'll be the earnings report after the coming earnings report. We'll see, usually the holiday season, big time for laptops and sold back to school. That's already come and gone. These chips are coming out towards the end of the year, so imagine around that period, and then we'll start to see if there actually is an uptake. There's also this ongoing discussion of the sunsetting of Windows 10. The Windows 11 kind of becoming the main.
Okay, Meta still pushing here. Meta looking good. Meta. Okay, Meta's looking good there. Meta. Let's see. How much do I have a Meta? Probably want to do some more here. Okay, something a little closer. I have January calls on Meta. Meta. Don't want to do anything right this minute because it is taken off to the upside. It's above the 720 call wall substantially. All right, so we're about 4 points above that level. So you'd be chasing here. I'd be looking for a B and C pivot if you're looking at an entry. I'd probably be focused on the 17 October calls, 725s or 1420. So I'd sell a vertical, or I'd buy a vertical rather. Okay, what else here? Oracle. Still well below I have call credits on Oracle. Let me just go take actually Meta's taken off here. Meta just keeps going. 720, that's actually 750, not 725. That's changed since that last one. Okay, looks like we're going to pull back a little bit. S&P pulling back. All right, so those 6750s tapering off there. Let's go look at hedge flows here. Hedge flows turn back down. Okay, they're going to test this level before pushing higher. Okay. Netflix. These stupid commercials.
Should continue to grow in the near term. Now, these companies enter a hypergrowth phase generally very quickly, and we try to capture them as early as possible.
Okay, Intel. What's Intel doing? I haven't looked at that one in a couple days. Intel. Okay, still flagging here for the past 5 days. Intel. IBM pulled back.
We use a quantitative process. It's systematic. We screen for companies, first of all, that are generating the fastest growth, and we focus on that group of companies.
Apple. Scott Redler saying that he's annoyed with Apple. Apple pulling back.
On average, and we start to look deeper into those companies to figure out which ones we want to invest in. Now, importantly, we screen out companies that do not have adequate trading volumes, that are not liquid enough in order to qualify for our screens. Because we trade frequently, because we're an active manager, we want to focus on the companies that are growing, that are trading, and with good liquidity, so that we can enter and exit them as easily as possible with minimum market impact. Now, what's also important is that we focus.
Bitcoin's still fading. All right, so Bitcoin fades. Bitcoin continues to move lower. That is a risk-off signal. Okay, so just keep that in mind.
Those companies very often will go on to make additional new highs.
So this is not a buy the dip scenario. We are not
Netflix having a good day.
that are performing and having a strong market response.
That's correct. This is really a long-term investment play. The important thing about investing in hypergrowth is it's cyclical like any other investment style.
Okay,
Over the long
Netflix.
term, we should be able to generate very high returns on the portfolio, but it happens in spurts.
Okay,
Hypergrowth is very rotational.
GE. Okay, I have a Iron Condor on this one. Looking for it to stay inside of the Bollinger Bands.
Where the growth is occurring now, and over the long term, we feel like we can generate outsized capital gains. That's different from existing growth funds out there.
And Mark, as you focus on hyper growth, how does this offer diversification to investors?
Well, it's interesting.
All right, so we're about $1,090 in credits here.
When you screen for these companies, you get
GE looks okay. Let me look at IBM. IBM, I also have one on this. IBM.
Now, if you look at a lot of the
IBM.
rated funds that are on the market right now,
Iron Condor here as well. Starting to get a little bounce. Another $1,000 there. Between the two, $2,000. Staggering these. Okay, we're continuing to move lower. S&P. Okay, so it looks like we're going to do that 6720 S&P. Okay, looks like we'll test 6720. It's right down there near that estimated move. Bulls kind of relinquishing the control here, it looks like. For now, anyway. Still looking for this test of 6720. I don't know how this Captain Condor character can make any money. The call side, he took off. 6780. You can see that's gone. The 6780, the upside, 6775, 6780. That was the call side of that Iron Condor. But we're coming down here and testing the put side. Still looking for a bounce. We got a nice little bounce, but it didn't follow through.
First of all, most people don't know this category exists. Hypergrowth was really only defined about 15 years ago.
Netflix still showing strength. Meta doing well.
Initiated by the World Economic Forum in academic research that they did
Meta.
several years later. What we've done is we've taken that academic approach and we've applied it to the investing world. So that what we do now is focusing on companies that are going through this very, very high growth rate. Now, because people typically think of technology and biotech as key features in a growth fund, it's important for us to let people know that there are other ways for growth to be recognized. If you think about 10, even 20 years ago, technology was the real place where people used to look for growth. But the times have changed, and all of the products that have been developed by those technology companies, the software as a service platforms, the hardware, the software, have now trickled down into the economy, are being used by regular traditional companies in order to manage their operations. That's allowed companies to scale at rates that have never been seen before. So that gives us a different type of portfolio and a different perspective on investing in growth. And as a result, we are trying to educate people as to how they can get access to these companies and how they can invest in them without investing in companies that they're
Okay, Meta taking out the highs again.
Exposure to. So we have our most recent website, which is called investinginhypergrowth.com, which highlights the features of our research and explains why hypergrowth is different and why it's a superior investment, we think, to other investments that can be available.
Meta back up to the highs.
Being with us to talk about this new ETF and also the importance of education in a very fast-growing space here. That's Mark Zucaro from Golden Eagle Strategies. And coming up next, we're going to recap Delta's earnings, the dying King Hall, and then George Tillis will join us for Disruptors. We'll take a look at Oppo after Canaccord initiated the stock with a buy rating. Trading 360, we'll be right back.
Oklo got an upgrade. Canaccord. Okay, Oklo. Canaccord getting an upgrade. Oklo. Canaccord going to upgrade these guys. Okay, that was earlier. Initiated a buy at Canaccord. Okay.
The energy ticker EXE, it's up around 10% this year. What moves this one higher?
I think it's the stability. So we're not looking to get out of gas and go into oil, or we think of more.
Meta holding the highs. You can see the strength in Meta, just persistent. Look at the volume. Meta.
But they have a good quality of resource. They have position in the Appalachia Basin. They have a position in the Haynesville, two of the best biggest areas of gas production. And what we like is the stability of their financial strategy. Some may call it risk averse, but what they do is they have a good balance sheet. They're paying down debt. They're accelerating debt reduction, which I think in a cyclical business is a good thing. They have a thoughtful cash return strategy beyond the dividend. And so I think they're well positioned. And if gas prices strengthen or at least remain at the levels they are, they're a pretty good story to tell.
Great to have you on the show today. Appreciate your time and those picks, sir.
All right, did we hit 67.20 yet? 67, we're right above it. Okay, you can see where the supply is. 67.20.
So let's start with some earnings basics. Revenue is the top of the funnel. It's how much money goes in the door, and it's also called sales. Net income is what's left over after all the bills are paid. You can also call it earnings or profits, and if it's negative, that's a loss. Earnings per share, or EPS, just slices the pie of profits into a per share amount. And then there's GAAP, generally accepted accounting principles. It's the official
Meta.
And it's required by law. But companies often decide to keep a separate set of
Nice volume here, Meta. I don't know if that's shorts covering or what, dealers.
More on that later. Finally, free cash flow is king. It pays dividends, funds buybacks, keeps the lights on. Now, let's clear up some misconceptions that might be common. A beat means that the company exceeded analyst expectations, but that's not always.
All right, so let's say we do have a pullback in the S&P. Okay, let's say we have a pullback. I am looking for the fourth quarter to be strong. It is October. We have had some pullbacks in October. Obviously, everybody knows that if you've been trading for any length of time. Just watching right now.
Always read the fine print, as many games can be played here. Finally, many companies have a fiscal year that's different from the calendar year. You'll soon hear some Q1, Q2, and Q4 results in October and November.
All right, still okay. We're about to take out yesterday's low. If we keep doing this, if we keep moving lower. We do have warning signals that are telling you that you should consider hedges if you need it, short-term hedges. Next couple of weeks.
Sometimes all investors want to hear is a confident tone. Nuance matters. And bulls also want positive and ideally increasing cash flows. Stock buyback announcements, they tend to broadcast strength. And the same principle applies.
S&P looks like it wants to pull back some more. S&P.
Backlogs turning up, that means demand is strong. Then we have the bearish side. A miss on sales or EPS plus a cut to future guidance, that's pretty negative, unless the street was expecting much worse. Then you have shrinking or compressing margins, which means the company isn't able to squeeze as much profit out. And if it's worse than its peers or competition, that's a big red flag. And we already talked about the games that companies play with non-GAAP or adjusted numbers. It is there are never-ending series of one-offs each quarter, or is management always blaming the weather, or a strong dollar, or the weak dollar? That's a pattern, not an excuse. And softening cash flow or inventories creeping higher, that's a canary. Now, here's how to trade the print. where the secret is discipline over market chasing. Remember that after-hours trading can be very thick. What does the market, where does it open on day one, and then how does it close relative to that open? If a market jumps higher on the open and then sells off all day, that can be a bearish tell. Then always know your time frame. Is it hours, days, months, years? Always address the dominant trend on your
Okay, Meta.
And remember, an uptrend is a higher
Just below the highs of the day. 750 call wall is way up here.
And finally, keep in mind that the big players with strong hands are not nimble, and they have to play the
750 way up here.
Watch for breaks to the upside or the downside that are quickly reversed. Bottom line, when earnings season comes, do not chase the headlines. Keep a level head and be prepared, and always have a plan. And tune into the Stocks in Translation podcast.
Okay. Meta looking good. S&P trying to hold this level. Okay, Google's trying to turn, Amazon a little short covering. Bitcoin completely erased yesterday's gains like it wasn't even there. That's not good. That's a risk off signal for now. Risk off. Lots of risk on off signals at the moment. Junk bonds, high yield corporate debt, core one, correlation. Drops below. If it drops below 8, that would tell you. Yeah, is it dropping below 8 right here? Currently trading right at 801. All right, so if this drops below this 8 level, that's yet another signal. Last time this happened was February, dropping below 8. The last time it happened was February of 2025. You know what happened after that. So I'm not trying to scare anybody, but short term, we're probably going to see some weakness. We've been looking for it. Hasn't happened yet. So if you've been super bearish, you're probably disappointed that we didn't get the pullback you were looking for. Okay, we're still up here in an ascending pattern, higher lows, higher highs each day. Frustrating for many. Oracle, bucking the trend. Oracle's up on the day, looks good. Oracle's up, what, 4%? Looks good. Congratulations if you're trading Oracle with Frano and others in the trading room. All right, so what is S&P? S&P trying to bounce. Volume picking up, shorts covering right there.
The 3-in-1 slicer, shredder, and sanity saver that spins veggies and more. Potatoes, boom. Chips in seconds. Someone say cheese? Look at that.
17% pullback from the current price, approximately. If the stock does pull back to the break even of
Talking Oclo.
So as long as the stock holds 120, that $5 premium that you sell for today will roll to zero, and that's the whole objective of the trade. It gives us flexibility. If the stock continues higher from here, that's fine. And if it does nothing, that's fine too. But it also gives us flexibility for a pretty substantive pullback in the double-digit range.
All right, a flexible example trade for a volatile stock on Oklo. George, thank you for giving it to us and walking us through that Canaccord report as well. That's George Tillis. Coming up next, it's time for our 360 round.
Interesting that they would be taking put credit spreads with the markets threatening a potential pullback. A lot of these trades that they're talking about on Schwab, you have to think about what they're telling you. The guy was just presenting Oklo with a put credit spread. That's great. But what if the markets take a dump? You know, the likelihood of it dropping below 120 is not that great, but that's a 20-day moving average. I'm looking for Oklo to continue higher. Okay, S&P grinding back up. The plane.
I'm Alex Coffey. And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. That could certainly be a short to near term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network. Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Okay, Meta's still pushing here. Meta's looking really strong. Okay, dealers are getting squeezed.
The torch has been passed to me, and my advisor Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations.
Meta.
Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead.
Dealers
Fast
getting
Market
squeezed on
weekdays at noon
Meta.
Eastern, live on Schwab Network and schwabnetwork.com.
Meta. Looking good. Got the nice hammers.
I'm Marley Hayden. It's time now for the 360 round. We'll bring in our panel to discuss the earnings from Pepsi. Joining us are Garrett Nelson, the Vice President and Senior Equity Analyst at CFRA Research. And
Okay, Meta's still going. Looking good.
IFMA, the Food Away from Home Association. Garrett, I'd like to start with you and just get your thoughts on the report. You currently have a buy rating and a $170 price target.
Yeah, thanks for having me.
Meta getting squeezed.
The bottom line was about 3 cents ahead of consensus. The beat was driven by a stronger than expected top line. Margins were a little light, so that was a bit of a concern. And the top line beat was really driven by higher pricing. Volumes were down both 1% on the snack side and
Meta going here. Meta's going.
The guidance was unchanged, except they're expecting currency to be
3 hammers.
Headwind, because of the continued decline.
4 okay.
Relative to the
Buyers underneath these candles 4 days in a row.
Actually, so that implies a slight increase.
Squeeze above 720.
Adjusted for currency. So it was a solid release, and I think that's why you're seeing the stock trade up modestly this morning.
And Phil, what were some of your takeaways?
Yeah, I would agree that they had a really good quarter. They're starting to really work on some things. With Elliott in the background, the analyst, the aggressive analyst activist that wants them to move along, they've done some good work on focused internally with their cost savings and their initiatives, the cost cutting, closing down some plants. They even are starting to focus on innovation. They're a little late to the game with the snack side of their business, but it seems like they're making some innovation changes. They will be back in some aggressive form with marketing on naked Doritos as they try to move flavor and food together. So they're doing some things right now that they're getting credit for this morning. I would agree with Garrett.
And Garrett, coming back to you, Phil just mentioned the unveiling of this naked Dorito, the naked Cheeto, which is not using any synthetic dyes in any of their products. This move sort of to make America healthy again, and also unveiled the new Lay's potato chip packages that say there's no artificial colors or flavors on the package itself. How important do you think these moves are going to be to the top bottom lines?
Yeah, I mean, we think that's starting to negatively impact the company on the margin line. These things, incur additional costs on the company anytime they come out with a new product. And so I think if I had to guess, that's probably one of the main things weighing on the disappointing gross margins for the quarter. So, in our view, the Make America Healthy Again is really fully discounted in the stock price at these levels. This stock has underperformed pretty dramatically so far this year. It's in a sector, consumer staple, that's been very out of favor. And so, we see value after this sell-off. The stock is yielding roughly 4%.
Okay, S&P with a nice little bounce, just chopping people up.
High yield for PepsiCo. So there are positives. As was mentioned, the Elliott Management involvement with their activist stake that they took, $4 billion stake they took in the company last month, and some of the things that they're suggesting in terms of divesting non-core or underperforming assets, are potential value creators, we think.
And Phil, coming back to you, they say improving the North American performance, particularly in the food segment, we're seeing, weakness across the board here.
Ooh, Meta getting squeezed big time here. Wow, nice little look here. All right, 750 is back up here, closer to the 50-day. Big day on Meta.
Improving the ERP systems. They're looking again hard at their marketing. They've got some work that they've done that's come back with the acquisition. When you think about Poppy,
The squeeze is on.
contributor on the beverage side, they do have to hurry up and make some improvements on the snack side.
The Huey Lewis voice.
Because in the aisle, they're only like 1% of the protein products that are in an aisle versus 13% of the product categories in snacking. So there is work to be done there. But I think the other side of this thing is they've got margin improvement coming from their food away from home business, which is very good. And they are reacting to what they're seeing with consumers, particularly around value. And I think some of the volume gains that they picked up on had to do with their aggressive value propositions, particularly on the retail side. So despite volumes being down, there was improvement. They did remain bullish with their year end. They said they're going to meet and hadn't changed their outlook. Plus, Ramon and the team is trying to get back to flat and even better than flat going into the new year with snacks. So they've got to hurry up, though. There's a lot going on with consumer headwinds, and they also indicated that they have mitigated some of the tariff issues and the supply chain issues that they were dealing with the front part of the year.
Well,
Carl, thank you very much. Welcome to the halftime report. I'm Scott Wapner, front and center this hour. The bull market 3 years in, the anniversary this weekend. We'll discuss and debate where stocks might go from here with even more questions about a potential bubble brewing. We will discuss all. Joining me for the hour, Josh Brown, Shannon's coach, Shabil Baruch, and Jim Blaine.
All right, it's 12 o'clock.
We turned red. We got a little work to do, but as I said, we're turning 3. October 12th is the official anniversary, and Truist says upside remains. Quote, the combination of continued economic growth, resilient corporate profits, and a supportive policy backdrop provides a solid foundation for maintaining a constructive stance heading into the 4th year of this cycle of the 7 bull markets that extended beyond year 3. All saw further gains during the following year. Josh Brown, you're first.
I think the big takeaway for people is that it's very expensive to miss a bull market. This is a conversation we have with our wealth management clients all the time. You almost never recover if you sit these types of things out and watch from the sideline, or you're way under invested, or you spend the entire time waiting for it to end.
Yeah, I would agree with Josh a lot. So what do you do in that circumstance? Well, you hedge. Stay long. Most of my positions are longs. But just in case, I have a hedge. It's like insurance. You don't want to have to use your car insurance if you don't have to, obviously. But you need it. You need it. You must have it, right?
Dispersion at the edges, but we're less than halfway to that average bull market return. In terms of duration, the average bull lasts 5.5 years. So
Staying out of the markets, missing this move can be very expensive.
but there still could be a lot to go. And the thing I want to tell you about year 4, Judge, the average gain for the S&P 500 in year 4 of a bull market is still 16.2%. So if you were to apply that to where we are today, that would put the S&P 500 at around 77.10. Now, of course, we're just talking about averages. It's not a price target, but I think people
Okay, Meta
context.
hanging out now at the highs. S&P, okay. Did we get down? We didn't get there. We didn't get to 66.20. Nice little bounce there, S&P.
Maybe this looks a little long in the tooth. Maybe we're brewing a bubble. Others say there's a big runway ahead for a variety of reasons. And Truist, I thought, was pretty good in listing them out of the catalyst for stocks to continue to go higher. Even people like Paul Tudor Jones, who says this is probably not going to end well, but you don't want to miss out on what's likely to come.
Snowflake, nice follow through. Meta looks like it's going to keep going here. Meta. Okay, Meta looking good. Nice move today on Meta. The squeeze is on. Huey Lewis, man, that was a great group. Really enjoyed him. Happy music, you know. Happy music.
That margin improvement that comes from increasing productivity, that can allow earnings to potentially grow into some of these valuations, Scott, that continue to be the problem with the market. Just because we've been up this much, just because valuations sit at a certain level, you're making the you're kind of setting the expectation that earnings aren't going to accelerate. Because if earnings are going to continue to accelerate, and you might not necessarily get the same absolute level of earnings that you do.
Okay, there goes Meta again. Meta. Goodbye.
The rest of the S&P 500 is continuing to grow. Why couldn't we be setting up for a 2026, which is more deregulatory, perhaps a reacceleration in areas like production in the manufacturing economy? All of those things sort of point to a tailwind, and you're actually seeing monetary stimulus that you may or may not need, but is going to come because of this deterioration in the labor market.
Bill, JP Morgan takes a look at the retail investor through their retail radar, where they suggest retail accelerated their weekly purchases of stocks. Net purchases were $7 billion this week, well above the 2-month average of 5.3 per week. Retail investors continue to favor ETFs over single stocks. What does that tell you about the momentum that suggests is still behind this market?
The flows are strong. And I think looking at hindsight, I've been on the show over the last month or two and saying that we're trimming little bits here and there. And we had a good opportunity to do that, kind of just managing our overall risk and outperforming the market. It allowed us to do that. But I think in hindsight, you look back at June, July, the S&P was only up 10% year to date. In the last 2 to 3 years, each year, 23 and 24, more than 20% year to date or yearly gains. And right now we're only at 15%.
Goes Meta.
If we match that, there's still a lot of runway here this year.
Big move on Meta. Thank you very much, Meta.
You have in the NASDAQ, the Qs, it's 70% is 8 stocks, as you cited the concentration. 40% is a makeup of 8 stocks in the S&P. And we're starting to see some deterioration in momentum in the near term. We're starting to see some of that breadth continue to deteriorate. Now, I'm not sitting here bearish. I think there's going to be a strong finish to the year. But I would imagine that we get some sort of little bit of wiggle here to kind of refresh. And I would like to see that. I would love to put cash to work in what we've raised in order to capitalize on what's going to be a strong finish to the year and at least carry into April of next year. I expect whatever pullback we get in October to November is going to be a very strong thrust higher in through April of next year.
If you get the pullback, I mean, we got to wait for tech earnings. It's going to be the whole show. Tech earnings, and they don't come for a couple weeks, 2-3 weeks. So
Meta still squeezing.
Real critical market moving information until you get to those numbers, right?
There is an air pocket. I don't think that's enough to be bearish at all. And, Shannon, Josh, and Bill just went through reasons to be bullish. I'm going to go through reasons not to be bearish. Consider that notwithstanding the tech earnings are a little ways off, that we are looking at approximately double-digit year-over-year gains in profits. Consider that the economy is very far from a recession, with Atlanta Fed GDP at 3.8%. Consider that the Fed is cutting rates. This is a very hard environment in which to get bearish. If somebody were to get bearish, I find these arguments really to be quite hollow. One would be, well, the shutdown's happening and we don't know how that's going to end. History shows that.
Oh boy. S&P, come on, S&P. Let's get some giddy up here. S&P is disappointing. Just kind of sitting here doing nothing, chopping around, chopping people up. Maybe in the evening session, maybe we'll get a ramp back up to 6750 or so. Just looking at the hedging flows, just sitting here, price just kind of little W-shaped pattern. Meta's still going. Play of the day, Meta. Meta looking good.
Carlisle shows a pretty nasty picture of what's actually taking place within the labor market. And there are many other surveys that are out there that I just don't
Meta's up $18, no, $10, right? 10. Meta.
There isn't a lot of firing going on, all right? And we see that in the weekly jobless
Okay.
claims, albeit it's been 2 weeks since we've seen them. There isn't
$10.
a lot of firing, but there isn't a lot of hiring.
Right, no hire, no fire. That's sort of what other people have been phrasing it.
That certainly could be a lot better. I have 2 young adult children. I would like it for their sake to be a lot better, but that's not enough for me to get bearish.
I don't think there's an air pocket either. I reject the premise. You're going to get bank earnings starting next week, and these earnings are going to be explosive. Bankers are telling us these are the best of times right now. M&A, capital formation, deal making.
Meta was getting squeezed. Squeeze that lemon.
And I think when you think about the financial sector and its importance to the rally continuing this year, cannot be overstated. This will be the 4th strongest earnings growth of all S&P 500 sectors in Q3. The financials as a group are expected to have earnings up 11.5%. Anybody want to bet me that's not going to be an upside surprise? More like 12, 13, 14. All 5 industries within the S&P financials are expected to have earnings growth compared to same quarter last year. Banks themselves, 9% growth. But you're going to see strength in insurance. You're going to see strength in anything related to the stock market, asset management, investment banking. And I think these fintech names have a lot to justify recent rallies.
Gonna squeeze my lemon.
It's just, in my view.
Okay, Coinbase turning back up. Coinbase. All right, so Bitcoin, is it going to be a shakeout? Is that what's going to happen with Bitcoin? They're going to shake us out, show a bearish signals, and then reverse it. I'm talking about everything: junk bonds, high yield corporate, etc. Are they going to bounce this? Still looks very ugly. It's below the 50 days, so this is a risk-off signal. Unless this jumps back above the 50-day for some reason, that would be incredible if it did that. But if that's the only thing that would change this signal, basically. All right, Meta's looking good. Meta just squeezing the hell out of this lemon.
You're paying for growth, but look at the last 3 quarters. Pick your favorite 3 or 4 large cap financial stocks. Is anyone not doing well?
But you don't even need the exciting stuff that you talked about. Just basic loan growth, like it's likely to accelerate. Insurance, like you said, that's not an exciting business necessarily, but all of those are set up, to your point, to continue to show both top line and bottom line growth. And so you're right. I mean, it feels
like aggressive activity. So ICE steps up with a $2 billion investment into Poly Market. Like this. None of these things would have been happening even as recently as a year or 2 years ago. Fifth Third steps up and takes out Comerica. There's a lot of aggressive activity happening in the financials that has absolutely nothing to do with how many GPUs.
Sure, but why have many of the names within the group, the largest ones, over the past 30 days, not done all that much?
Because look what they did in the first half of the year. These are all still in statistical uptrends, but stocks that have gone up a lot. Here, there's your chart.
But you're saying that earnings are going to start the next leg for this group.
If we see anything even close for the money center banks,
okay, take that once out.
Goldman says to buy Citi calls ahead of earnings. So if you want to do something ahead, buy calls. Citi's on track to meet medium-term targets driven by solid fee growth, efficiency improvements, and strategic divestments. The option implied moves capturing earnings are attractive versus its average 8-quarter earnings day move.
Citi has a very specific set of circumstances to it, not necessarily applying to Bank of America or Goldman Sachs, but they're about to do the Banamex transaction sometime in the next 3 to 4 months, spin that out. And after that happens, I see absolutely no reason why this should trade at a discount to tangible book value. It's just below that right now. I mean, you look at something like Bank of America at 1.9 times tangible book value, and I say rhetorically, why shouldn't Citigroup be there? And if that were to happen, that would be almost a double from here. Now, it's a little bit provocative. We'll talk again when we're at 120% of tangible book value, which would be around 120, 125.
Well, I mean, it was provocative way back, pull the chart way back when you first got into it.
It was like 50%. Made the case for Citi in the face of what appeared to be a lot of headwinds and what appeared to be an extremely heavy lift by Jane Fraser. I mean, she's lifted.
She's done a good job. She's done a really good job. She hasn't gotten full credit for it yet.
I mean, no, come on. Look at the stock. What do you mean she hasn't gotten full credit?
Okay, because it trades at less than. Good question. Because it trades at less than 10 times earnings. As I said, just a hair under tangible book value. And you got Bank of America, fine bank, trading at almost twice the multiple of tangible book value and about 40% higher multiple earnings. So I think there's a lot more opportunity left to come. It's
sector wide. The beat rate for financials 80%. Okay, the last version. Well, that's my point. Is like so we're taking Q4 numbers, which were reported to us in January, right, and taking Q1, Q2. Now we're going to have Q3 reports. 80% beat rate in this space, and tons of upside to guidance each time they reported. Even during the spring, these stocks held up pretty well, considering how scared most of the market was about the impact of tariffs. I think they deserve the benefit of the doubt. The one that I'm in, JPM, one of the best performing stocks in my portfolio, probably in the whole S&P 500, depending on the time frame. This stock has just been explosive during the last 2 years of this bull market. This is a company that's still looking to post $4.83, which is a 10% year-over-year, 10.5% earnings growth. 5 and change percent revenue growth. It's a 14.5 forward multiple with it's a company with 20% net profit margins. Like, who's hitting the show on us if they choose a number? I can't even imagine why you would. All the record highs within the last 3 weeks. Now, if you're looking at them, they typically spike. If they get good earnings, you're going to get a spike. They typically come back in a day or two following that. But the earnings story will tell you what to look for and then to buy that pullback. It's always good to hear from Jamie Dimon, of course, which you will, and we are, because we did yesterday. He was asked during an interview.
SoFi had a nice little bounce. SoFi.
Many are weighing in on whether there's a bubble in AI and maybe some other places too. I want you to listen to what he had to say. You're not going to see Jamie, but you're going to hear his voice. Listen, we'll talk on the other side.
It's really impossible to tell the burst. And I've looked at, you look at history with all, the 74 crash, the 82 crash, the 87 market, the 90, the internet one that you mentioned. Yeah, no one's really forecasting that. And there's all that hype out there. And then you also take AI, there's a lot of money going into it. But the better way, I look at the better way, AI is real. AI in total will pay off. Just like cars in total paid off, TV in total paid off, but most people involved that didn't do well.
Okay, so that's Jamie on whether he thinks there's a big bubble in this market. It doesn't really sound like he's all that worried about it now. AI is real. AI in total will pay off. Goldman agrees. We're not in a bubble yet. Valuations look increasingly stretched, they say, but not yet at the levels that were typically in other bubble periods before they burst. The biggest risk is that earnings disappoint and investors start to question the sustainability of their current rates of return. I mean, I think it's a little obvious, right? I mean, we talk about that, Shan, kind of every day. That's the greatest risk, but I don't think anybody's that worried about.
Yeah, but they also, they're talking about Jamie Dimon. But remember last year, early last year, he was talking about bonds and how bonds were telling us the markets were going to hell in a handbasket, basically, and everything else. He's not always right. None of us are always right. I'm certainly not always right on a daily basis. At least my wife tells me that. But Jamie Dimon was talking bonds last year, like we were going to, have a substantial pullback. The February pullback that had more to do with Trump than it did Jamie being correct with bonds. But you're going to take what these people say with a grain of salt. I found that following money flow is the most effective way to understand what's going on in the markets. Let me show you what I'm talking about. All right, so first thing I like to do is I like to look at the New York Stock Exchange. 2,000 stocks a broad measure of market participation, 2,000 stocks. So if 2,000 stocks short term are starting to pull back to the 20-day, last time we did that was 3 weeks ago. We bounced. We kept going. The trend kept going. So if you're trading within a window of, say, okay, I want to be long for a few days or maybe a few weeks or a few months, that makes a big difference. Right now, I'm just seeing some money, a little bit of money coming out of the markets, a little profit taking on the New York Stock Exchange. Let's take a look at the S&P Equal Weight Index. That'll remove the weight of these New York FANGs that aren't preparing right now. So I'm watching the flow. Is the flow in or out? I'd say the flow is starting to trickle out. All right, like me, like some of you in the trading room, I'm taking a little bit off the table. I'm hedging, but still long. I'm mostly long. UNH Healthcare. All right, so that looks pretty good. UNH is still going. Other levels like the U.S. dollar. Let's see what the U.S. dollar is doing. The U.S. dollar is starting to move. Now, this is going to put some pressure on some companies that sell products and services overseas. Okay, I haven't talked about it. I've talked about the dollar, but I haven't talked about the significance of a big move. The significance being it's going to put pressure on those stocks, those companies that sell products and services overseas. The 10-year yields hanging out. Okay, money flow, there's not much going on here. What about gold and silver? Okay, people have been running into gold and silver, pushing it to all-time highs. Okay, personally, I think this is a little bit overdone, but I've said that for the last couple of weeks too. I would have been wrong there. Silver. Okay. IONQ. Okay. IONZ. The short 2 times IONQ. Okay. Other things to watch. Breath. What is breath saying? Breath is telling us that they're mostly selling right now. Okay. All of these are pointing down. Short-term indicator. Let's look at VIX. VIX indicator should be red. It is slightly. It's neutral. We got a neutral signal on VIX. VIX is telling you, at this level, VIX is telling you that it's still somewhat inexpensive if you want to buy hedges. You want to buy puts when you can, not when you have to, right? So you don't want to buy puts on a spike like this because you'd be paying mostly implied volatility premium. Okay, you don't want to buy puts then. You buy puts over here, give yourself about a month, 2 to 3 weeks at least. You know what I might do also is take a bear put fly. All right, what can I do a bear put fly for? Let's see. Trade S&P. Let me go out a couple of weeks. S&P. Let me go to, say, 7 days, October 17th. End of October. End of October. What if I do an end of October fly? Okay, let me do buy a fly centered around 6,700. That's pretty interesting. 67, 66.90. Let me go $10 either way. 6,700. 67.10. Okay.
The reason why JP Morgan said they're chasing that is because
of
artificial intelligence. Now, Apple had a lot of headwinds going on this year, especially the first half of the year, to get through before they could get to artificial intelligence. And look, they had to take care of that because the tariff picture and so many other things.
Okay, S&P pulling back again.
For example, the overtures for President Trump, which actually paid off. That $600 billion spending.
Could do a 6,700 put vertical too.
President Trump, and Cook presenting, of course, President Trump with that golden apple trophy in the Oval Office. That won Apple some tariff relief, Scott, and that helped boost the stock a little bit.
We're kind of close there. Let me do
About $1 billion or so
6,700. Let me go.
Positive momentum in iPhone after last year's slump. Contessa Brewer, who's out in Macau reporting for us, she sent me this video you're seeing right
25
now.
points. Let's go 25.
Yesterday, that's a few weeks after the phone launched. They're all lining up, by the way, for the iPhone Pro Max, the most expensive model. That there are signs there saying that they're on limited supply because they're so popular. Now, look, let's talk about AI, because to get investors excited with this earnings report coming up, need more detail on the progress with Series AI update that Apple says is coming next year after missing the launch this spring. Even some kind of Apple-y hints, some marketing language like, we figured it out, you're going to love it, can't wait to show you next year. Something like that could get people excited, but we're not going to see anything tangible until next spring at the earliest. So listen for those comments. Apple is reporting earnings, Scott. 3 weeks from today, I'll be out there.
All right, good stuff, Steve. Thanks. Will, as always, of course. $5 away or so from a new closing high. We've been watching that stock's pulling back, obviously, a little today. What's your point here?
I just wanted to point out, Apple very publicly has made it clear that they don't see the value in launching a chatbot-like product direct to consumers in the Apple ecosystem. But
All right, I put a hedge on.
they launched something internally for their employees that is a chatbot, and it's Apple's own. It's not someone else's LLM in a wrapper. I thought that was really interesting, and some of the voices in the tech industry believe that it might be a head fake, and there might be a ramp for Apple to at some point actually drop their own like direct chatbot competitor to some of the prevailing. Now you might say, well, they're late because ChatGPT and everybody likes Perplexity. I don't know that Apple can ever.
Okay, I put a hedge on. I took a put fly.
They want to make that consumer-facing chatbot like the biggest thing in the App Store. Like they literally could do it overnight if they wanted to. So I just think like that's this wild card thing that's out there, pure speculation. But if they have a really good result internally with this chatbot-like product, and they decide, you know what, actually we can own this. My God, is that going to shift a lot of things about current market expectations for who's going to be winning the AI race in the eyes of the user.
All right, so we're going to take a break. Coming up, JP Morgan getting all up in Josh's grill before the lunch hour, no less, on one of his favorite stocks. We're going to debate it next.
Max risk 375.
CABA.
PXED may resume in less than a minute. ONMD.
Okay, so I took a hedge. I got 5 of those. So I'm risking $375. Max profit is $12,000. Now this is if the markets start to drift down towards 66.75. Okay, my upper strike on that fly is 6,700. Currently, okay, Meta's still hanging out here. Okay. Currently, S&P is just kind of chopping around, not giving us much to go on here. Okay. I don't like it. I don't like the way the market's acting right now. Short term, I'm talking 2 or 3 days. You know, we could pull back for 2 or 3 days. Last time we pulled back 2 or 3 days was right over here. Okay. That was what, the 23rd, 24th? This little pullback. That's all I'm looking for. Maybe. Okay, so my upper strike is cash is 6,700. 6,700, 66.75. That would be down in here somewhere. Okay. So hopefully I don't need it. I got about $1,000 in hedges right now. It's small. I'll double that up, maybe triple it up if we start to fade. Most of my positions are long. Okay, NUAI. I had a nice little pop there. NUAI. NUAI popping. NUAI. This is one from earlier this morning. Watching this one, a penny stock. Okay, NUAI. This one turned up. Nice little move there.
JP Morgan went and did it. Okay, my name's Shake Shack. A top short idea into year end.
Shake Shack. I was surprised. I always thought Shake Shack was more like a upscale burger joint, you know, like they had shakes. They had this one place in New Jersey, Mondo. I don't know if you knew where it was. It was like on Route 4. No, it was on Route 10. Route 10 and what is the highway? Let me see. Route 10, New Jersey. Let me see where it was. Route 10, New Jersey. Okay. It was on Route 10. Route 10, and what was that? Route 10 and 202. Right at the corner of Route 10 and 202, I think. Hampton Inn, Hilton. Yeah. It was right on the northwest corner of Route 10 and 202. Really great restaurant. I forget it was like a hamburger place. And they had great burgers, made to order, fries. They had like all these different kind of milkshakes. We used to go there with the kids. Man, they loved that place. And then, we left, of course. And I guess they closed it after COVID. What's there now? It's Tommy's Tavern is there now. Tommy's Tavern. You ever been there? Not Tommy's, but the place that was there before. It was like Zen Burgers or something like that. Anyway, right on the corner. Okay, it was right on the corner, right here. Okay. Route 10 and 202. Got the Hilton over here. Route 80, not Route 80. Route, what is that? 287. 287's over there. Right on this corner. Across the street from Kohl's. Kohl's is over here on the left. What's Vinny talking about? I tend to ramble sometimes when the markets are just shaking people out. Meta, let's see, Meta's still consolidating at highs.
Let's get the headlines with Bertha Coombs. Hi, Bertha.
Hey, Scott. Transportation Secretary Sean Duffy says air traffic controllers who fail to show up for work during the government shutdown could be dismissed. In an interview on Fox Business today, Duffy said the quote.
Remember the government shutdown when Reagan, the traffic controllers went off the job, and Reagan's like, you're going to get fired, whatever. I remember that. Those are the days, my friend. I thought they'd never end. We'd sing and dance to the music as it played.
Tesla vehicles equipped with the full self-driving system over traffic violations following a series of crashes. The National Highway Traffic Safety Administration cited.
Man, they just cannot let Tesla alone, right? Here's Tesla coming off the low here. Tesla, nice little turn here.
That resulted in one or more injuries. Tesla has not commented. And SiriusXM has signed a new
Tesla, nice turn here for a. Looks like that might. Okay, 2 dojis in a row. There's buyers at the low above this 420 area. Tesla. I'm reluctant to take on a lot of new positions. I'd only do day trades for now. Meta showing some strength. I'd like to see Nvidia pop up a little more. Netflix is hanging out at the highs. I'd like to take that. Netflix, I'd like to take that put credit spread off. Coinbase is back up to the highs. Coinbase had a nice little bounce. Coinbase. Okay, that's trying to break out. You see the daily over there? Coinbase. trying to break out. I have CONL calls for January, but I would like to take some of that off, only because I'm thinking that the markets are going to pull back. They keep pushing. They keep pushing on this downside. So that's why I took that put fly. Put flies are really inexpensive. A lot of times you can get in for 30, 40 bucks. I took some for $75. I took 5 of them. So a put fly basically kicks in as prices gradually move lower down towards 6,700, which I think we could see. 6,700, 6675, 6650. So you buy the wings, you're long the wings, and then you sell twice as many of the body. All right, so let me show you what this looks like here. So a fly has these wings, right? And then you have the body. This is more the profit loss curve, really. Okay. And then you've got the wings. Okay, the wings. Let me just do this a little bit, because as it starts to cruise lower, these wings start to kick in. But it's not until you get the center. The center, that's where you have max profit. Okay. So I got 5 of these plus 5. Okay. I got 5 of these plus 5. And then the center strike, I have twice as many. Minus, I sold these minus 10. Okay, so this all equals out. Okay, minus 10 plus 5 plus 5. Now, if the S&P, all right, to the left, this is 6,700 right here. 6,700, 66, whoops. 6,700. This is 6675. So the object is I want to get to 6675. As it starts to get close to 6675, I'm getting my max profit. Okay, max profit. Okay. I start to profit as I go to 6,700. 6,700. And again, these are cheap. I'm not suggesting you take them if you don't know what you're doing. 6,700. Let me just pull this up here. 6,700. Okay, this is 6650. 6650. So I'm thinking it's going to stay above 6650 and hopefully eases down to here. So this is max profit at the center here. These wings really aren't that long. They're more like this. It's more like this. Okay, so it looks more like that. It looks more like a pyramid. As prices start to move to the left, as prices move beyond 6,700 towards that 6675, that creates. Okay, let me just take a snapshot of this. That creates the maximum profit right there. So that would be $12,000 right there for 375. All I want this to do is to just gradually move lower, like over here, like right here. This is all I want the price action to do. This little dip right here. Okay, that dip right there, 3-day move. So 6,700 is right below this area. This is 6,700 right there. 6675 and then 6650. Okay, now that I beat that to death, now you know what I'm doing. A fly, okay?
Big shift away from the institutional investors. There are lots of product innovations, things that are semi-liquid,
a bit more transparency, playing around with the fees a little bit, then
So by selling a 6650 and a 6700, or for buying rather, for buying a 6650, 6700, I can sell twice as many of the 6675 with the hope that prices, if it does pull back, I'll be protected substantially. 375.
They believe in and that can truly make an impact in terms of financial for them. So I think it's a little bit less about just a, kind of private markets democratization story and more about this idea that millennials want to take control of their finances and invest it in a way that perhaps is a little bit outside of that traditional framework.
Yeah, it's nonsense. If you were born in 1996, you should have 100% stocks, and every time you get paid, you should take whatever.
Yeah, it's $75 per fly at the time that I got filled. Those will fluctuate quite a bit during the day.
Decades to endure the risks that come along. You do not need alts at 27 years old. Nobody needs it. It's. By the way, this is a survey. I actually don't believe those numbers.
Things like that too. It's not just private equity.
Fine.
There's other
Substitute crypto for like very aggressive.
Don't forget
stocks.
the gold. Get the gold portfolio.
I don't believe that survey. I do not believe people in their 30s are 20 or 25% alts. I think they are maybe, but they're definitely not.
It might be 25% crypto.
They have shoes.
You think across the whole spectrum of 1,000 high net worth millennials, they're 25% crypto?
Okay. Snowflake looking pretty good. I didn't do anything on Snowflake. I was going to do it yesterday. Okay.
Well, a lot of these have been invested in Bitcoin or other coins for the last decade. Since they first put it on their app.
Yeah, alternatives is such a bucket here. That's like you need.
It could be almost anything.
Yeah.
Maybe it's a pretty stock.
It's appreciated.
They work at.
Yeah.
Okay, fair.
Okay. We're going to take a coming up, doubling down on the betting boom. Contessa Brewer, she's live in Macau today for us as that tiny territory looks to become the high stakes capital of the world. Hey, Contessa.
Let me make a gambling metaphor to something completely unrelated, like, say, driving. I mean, after the pandemic, you had gambling in Macau like a slow Sunday driver. Now it's like a millennial has gotten behind the wheel, filled the tank with gas, and put the pedal to the metal. I'm going to leave the metaphors behind and bring you the real numbers after this on Halftime.
All right.
CSL. DUST.
All right. Monitor. Beach. What do I have here? What do I have? Alfie. BJDX. BJDX. Oh, I only have 100 shares. That's why. 100 shares left. That's why. That's why, dummy. Okay. BJDX. Okay. Five. Hope everyone's having a good day.
PATH. DUST.
All right, GDRX and UA. All right, S&P just keeps threatening this low here. S&P. It's the third time we've tested this level. We know that 6720 they're still short there. They're still short with that the lower leg of that iron condor at 67.20, still a 99 percentile. Maybe we go down and tap it and then reverse it. That's what I'd be waiting for. If we get to 67.20, I'd be marking it out on my chart. 67.20 is right there in the middle of that supply, right where you would anticipate, not supply, right in the middle of this liquidity is 67.20 right there, you can see. Okay, so if we get down to 67.20, I got it marked as 67.19. It's actually 67.20. Okay. If we get down there, look for a reversal.
Well, back casino stocks, they've been on a tear since the April bottom. One key region of the world doubling down on the betting boom. Contessa Brewer is live in Macau for us today. How's it going out there?
I mean, it's pretty good, Scott. It's pretty good. Macau's booming. Its investment in these non-gaming amenities, which were sort of forced upon them, are drawing a totally different crowd. I mean, for one thing, the serious gamblers are still coming to Macau, but now they're bringing their babies and their teenagers for the K-pop concerts or the NBA China games, which start tomorrow. The 8-day national holiday known as Golden Week just wrapped up, and a JP Morgan analyst wrote this week, and Las Vegas Sands, and all of them pointed to rising consumer confidence from their Chinese clientele. They say they're seeing green shoots in high-end retail, which of course we saw pinched earlier this year, and a real shift from pre-pandemic junkets and VIP, a transition that's been happening over a decade or so. Now premium mass is where it is. They're big spenders. They come in with cash to gamble or spend. And Citi this week said Macau will likely get $33.3 billion in gaming revenue this year, with 6% growth in average bet size. And apparently the gamblers are all loving this new side product. It's called Baccarat Side Bets. Popular with the casino crowd, very profitable for the operators themselves. And so all of this combines to drive that recovery in spending that investors have been wanting to see for so long.
I think this is your first time there. Correct me if I'm wrong, but I'm curious, just through your own eyes, like the vibe that you feel and see in the casinos relative to what you've seen in Vegas for all these years is what?
I mean, first of all, I was warned this is not like Vegas. It's a very serious, joyless gaming floors. Everyone is in it to beat the dealer, and that's what they come for. That is not at all what I'm seeing. The palpable sense of a Vegas-like bubbliness it's just everywhere. And I asked about that. I said, this is not matching what I was told Macau was about. And they said that shift in the pandemic where gamblers returned with their families in tow and their friends, and now it's not that the gaming amenities themselves. I mean, if you go to the spa and you spend $400 on massage, it's not that that is going to immediately give you back a return on the $7 million overhaul of the spa. This is what MGM Macau did. But altogether, it's driving and supporting the gambler to sit down at the table and spend that cash. And now all these properties are competing for that premium mass customer. And so they're
all right, looking for more. S&P, no drop.
That I've seen in my visit here, it's like I'm walking through the modern day Versailles, even with the Eiffel Tower over this shoulder here. I mean, it's just astonishing. They're not for rent. They don't put them out by the night. It's only to reward their high rollers.
Oh, interesting. Contessa, thanks. Contessa Brewer in Macau for us. Steve Leisman, our senior economics reporter, has some breaking news. What do we know, Steve?
Michael Barr, the Fed governor, saying the Fed should be cautious about adjusting policy And I'm making a point of this, Scott, because there's a contingent of people out there, Fed folks, who have been using this term cautious approach. And that was in the minutes yesterday. Lori Logan used it. Barr is saying the Fed's price stability goal faces significant risk. He's skeptical the Fed should look through higher inflation from tariffs. The quote from his speech that he's giving right now says, "There has been nothing one-time or predictable about these tariff increases," arguing against some of the folks who said the Fed should be looking through it. He said the Fed is heading to missing the 2% inflation target for 6.5 years, and that is if they hit the target as projected by 2027, the longest period since 1993. He said, on the other hand, the Fed needs to prepare for possibility the labor market is softening and could become worse. The labor market is the shocks here. So it does talk about both sides of it, but the absence of data. He talks indeed about the shutdown, saying it's hard to judge what's going on with the shutdown right now, but it should be a hit to GDP now and come back later. One more piece of Fed news here I want to tell you, Scott, that I think is important for folks to think about, which is this idea that Dallas Fed just moments ago put out a paper saying the new break-even rate for the payroll numbers is just 30,000 now. So that's all we need to do to keep the unemployment rate stable. Scott?
Wow. Steve, thanks very much. That's Steve Leisman, our senior economics reporter. Coming up, an update for Josh Brown's best stocks in the market.
All right. S&P. Okay, Oracle. A nice update. It's got spinning top, larger body candle, I guess you could say.
Ever wondered what your home looks like from space?
No.
Enter your address and get a 360-degree satellite view.
Yeah, don't care. Don't care. NUAI is still going here. Okay. Looking good.
ASTX.
NUAI, that one's still going. Penny stock. Everybody's trading. There's a bunch of people trading this NUAI. Still going here. Nice reversal. Looks good.
ASTS.
Is it ASTS? ASTS. Okay, that's still moving. ASTS. Any news on this one? ASTS. AST Space Mobile stock rose 16% to 86.42, announcing a deal with Verizon for space-based cellular broadcast services. Set to start in 26. Okay. ASTS, nice trade there, Frano. I know you're in that one. I don't have a position. I think Dr. Frank might. Mm-hmm. Netflix pushing highs. Meta stalling a little bit, so people taking a little profit. So we'll see if we get another little bump in the evening session. Meta. S&P bouncing. S&P. Kratos. We looked at that one yesterday, right? Kratos, KTOS. I like that one. I like that company. Yeah. No. Can't believe people actually cut their grass and have to make all that freaking noise where I can't hear. Can't have my window open.
I want to talk about Netflix.
What is it with
I
people?
brought this up with Sean Russo back in July. 87 days ago, the stock has basically been flat. It's done nothing. It's sat out this entire AI mania. But I think that could be about to change. Company reports on October 21st. I am long the stock personally, by the way. You can see this thing has bounced off of its rising.
Okay, Netflix getting a goose.
And I think the fact that it sat out actually works in your favor here because expectations are not terribly high. This is a company that's had massive hits during the course of this quarter. Jim, do you know what a K-pop demon hunter is?
I've heard of it, Josh.
Okay.
Does that count?
Low tick alert minus
Nobody actually
800.
knows what it is. I'm going to tell you it's the biggest hit that Netflix has ever had.
Nor has he ever heard of it, by the way, but that's okay.
325 million.
Thank you very much.
325 million streams of this. This has beaten every single Netflix show or movie in history. The music from this thing is number one on the charts. That's the kind of thing that drives increased subscriber ads. That's where you get that kind of upside to the ad platform as well. So they report in a couple of days. I'm long the stock. I like the risk reward headed
Coinbase, BJDX, MRM, no follow through MRM.
That would be about 20%
CRML, 14, down from 15.
Still in an uptrend, still very close to a breakout.
Palantir hanging out.
DUST. CGMSP halted. GMSP will resume at 12 hours, 58 minutes, and 45 seconds.
Given the paucity of data we're seeing because of the shutdown, I think we should be paying attention to things like
Tesla.
confidence numbers from the conference board or consumer sentiment from the University of Michigan.
Tesla.
Looking at spend data from credit card companies to see if the shutdown is causing consumers to pull back, obviously, in areas where there's a lot of federal government employment. So I think we do expect a negative impact from the shutdown on the economy. It's likely to be made up after the government reopens and workers are paid their back pay.
All right, S&P coming back down again.
Damage the shutdown can do, and it can cause a loss of confidence in the economy.
And we're also, I guess, getting a little creeping closer to the holiday season. Do you think that the pace of growth
Okay.
through the year is going to be slowing, or do you think it's going to hold up?
I think it's going to be slowing, in large part because job growth is slowing, wage growth is slowing, particularly inflation-adjusted wages after higher prices from tariffs. So we've seen that this personal savings rate, the share of income that households are saving, that's been falling in recent quarters. That can't continue indefinitely. So I think we're going to see
We're still
slowing to a pace that's more consistent with
just kind of grinding along here.
Weaker economic growth in late 2025
S&P.
2026 than what we've experienced over the past couple of years.
And do you think that the Fed
Netflix.
will be helpful to juice growth? I mean, there have been some questions about the effectiveness of the Fed cutting rates to help the labor market, for example, particularly if it's more of a supply problem than a demand problem. So how are you thinking about that sort of so-called transmission mechanism?
Yeah, I mean, there are certainly questions about how monetary policy is transmitted through the economy. In particular, for example, the link between Fed funds rate cuts and mortgage rates, and therefore the housing market is attenuated now. But I do think there are still sectors in the economy that are heavily dependent.
Okay, what's happening? Tesla trying to turn more. Tesla, what are we going to do here, Tesla? We're going to keep going. We got supply right overhead. 534 up to 536, 535. If we get through there, we could see a nice runner on Tesla. So I wouldn't mind seeing that, Tesla. Okay, if we get a little pop through this area. Okay, we got a buy order blocks. Got some decent volume, not jumping off the chart, but it looks okay. Apple's still grinding lower.
GMSP may resume in less than a minute. low, tick alert minus 800.
All right, low tech looks like we're going to move lower now. S&P.
Extreme low, tick alert.
Okay, so we're going to sell off here. Okay, we're going to start losing this level. Okay. Okay, a little hammer. What are we going to do here? S&P. Okay, so right back down to this area of liquidity, 6,700, 6,720, remember, is the level that we need to test daily. Quiet market.
Hope to join me, close the bell, 3 o'clock. The Professor, Jeremy Siegel, Tom Lee, Richard Fisher, Stephanie Lake, Keith Lerner. Good lineup. I hope you'll be there with us in a couple hours' time. Let's do final trades.
1 o'clock. Looking for maybe a reversal now, maybe.
Oracle is up about 10% from the Bud Fox moment 2 days ago. It's got more to go.
All right.
The abyss. Yeah.
Thank you.
Wall Street.
Bill Baruch, what you got? UUP, long dollar. It's closed above its 21-week moving average for the
Yeah, that's true. That's a good one. UUP. Probably going to start rallying.
That's the line from Wall Street. Man looks into the abyss, right? Okay, that was a little obscure, but keep going. Okay, not for some of us.
Shannon.
Materials, we see commodity price inflation, but also a trade on some China reacceleration.
Okay, JB.
Staying long Netflix. Wish me luck.
All right, so again, we started green, and we've taken a turn, certainly on the Dow. The NASDAQ's given up 23K, so we'll see what happens over the
Most of the New York FANGs are off for the most part. Netflix is higher.
Exchange. I'm Morgan Brennan, in for Kelly Evans. Stocks are lower across the board. The S&P and the NASDAQ retreating from fresh record highs hit at the start of the trading session. This is another Senate vote is underway that could end the government shutdown. Now in its 9th day, we're going to keep an eye on that. And we are also watching a rare earth trade. USA Rare Earth up 14% after China said it would limit exports to overseas markets. And shares of Oklo gaining on a bullish initiation over at Canaccord, the firm calling AI bubble concerns overblown, and says that it is uniquely positioned to benefit from, quote, the new nuclear age. The analyst joins us with how much upside he sees ahead. But we begin with the momentum in metals. The S&P Metals and Mining ETF, XME, hitting a new record high. Copper, gold, silver, platinum, all soaring over the past year, with investors piling into real assets for protection against the
Tesla.
dollar and other fiat currencies. Oil's the only outlier in what's becoming a broad-based commodity rally. West Texas Intermediate crude's down 15%, despite geopolitics and supply and demand concerns. But my next guest says that could change soon, as he sees a real bull market emerging across the entire commodity complex. Joining me now is Jeff Curry, Chief Strategy Officer of Energy Pathways at Carlyle. And Jeff, it's great to have you on. Let's start right there, because we've been talking so much about gold, and certainly gold has been kind of the pinnacle here, but what is moving the metals?
Well, I
Low,
think there's
tick alert
three
minus
factors driving
800.
it. One is de-dollarization. And starting
That's
with
funny,
the
Manda.
China block in Russia. I want to point out that the central banks now own 27% of their reserves are now in gold. It exceeds U.S. Treasury. So the de-dollarization theme been in place for 5+ years, continued to
Okay,
drive
Tesla turning back down.
the debasement trade, which really started to gain steam with the
Okay, Meta holding its own right now.
ETF have 110 tons of
Meta.
inflows in recently around the debasement. And then the third one, I'd just say diversification. Investors want to own something other than really, tight credit spreads in the fixed income space. And hey, you look at equity markets, they're kind of stretched. So, metals, and I'd throw in copper, silver,
Tesla turning back down.
the entire list you just
All right, so I don't like the market right now, and there's just a lot of risk that I'm seeing that we could drop off here.
government shutdown. But we look out, to give you an idea, central bank holdings going back into the 70s, we're running at 75%. So if they're at 27%, we could see these numbers go much higher.
So you're an individual investor, you're watching, you're tuning in at home. How do you actually invest in this? Do you invest into the hard commodities, or do you play ETFs, something else?
The ETF is an excellent way to play it because it's one of the few ETFs and commodities where you actually own the physical. You get to own the physical bars. And I think with gold in particular, investors want to know that they have access to the real physical. And that's one way in which you can get that exposure.
The industrial metals, is it a similar situation to what you just outlined with gold
Hedged.
and the other precious metals?
Just kind of
Or
sitting
is this
here watching price
reindustrialization?
action.
Is it trade dynamics? Is it tariffs? Is it other things? Supply and demand there that's propelling that?
It's all of the above. In fact, I like to say copper is like a perfect storm. Gold and copper were our big picks a year ago. We still remain very positive on it. You look at copper, it's up nearly 25% year to date. It has that
copper. That's good for the economy. Copper turning up.
Then you've introduced two unexpected demand
Copper.
surges, AI with the data
All right, so
centers,
Freeport
and the second
McMoran,
one
you'd
is
like you no doubt would see that. That's back today. Southern Copper, SCCO, that was taking a break. Silver, taking a big bearish candle there. Silver.
Extreme low tick alert.
All right, extreme low tick.
Escondido in Chile, and then Kamoa-Kakula in the DRC. All running into problems. You've lost about 500,000 tons of supply right now. So the market's in a deficit, flirting with all-time highs. We see a lot more.
Okay, those flies are starting to kick in.
Conversation, but crude has not participated in this. What is moving crude right now, and is there a point at which that shifts and this becomes a broader?
So silver, big reversal. Silver.
Well, crude has been under pressure now for over a year around the enormous supply glut that everybody's been expecting. Well, and that supply glut, or I must call it slug of oil, is you can see it on the water now. But I want to emphasize it has had no impact on physical markets. Crude oil on the front end is backwardated. The spreads remain prompt tight. You look at refining margins, distillate cracks near an all-time high. So the bottom line is, that slug of oil people have been worried about. It's on the water right now, but it has not impacted prices. And I want to emphasize, if it was going to impact prices, it would have already impacted prices. The OPEC producers don't own that oil anymore. The consumers do.
Okay, you're looking at
don't suggest they're going to store
you're looking at
suggest they're going to burn it.
Netflix. Let me just check one thing, Frano. Okay. Netflix. Okay, let's go look at this.
I think the main point here is
Netflix is fairly expensive, 65.86. 12.50 Netflix. So judging by what you've sent to me, 12. Yeah, you're looking for 12.50.
It's going to be the same story as copper and the rest of these other commodities. But I'm not going to say we can price it in tomorrow. But I think the concerns of the big sell-off, I think are exaggerated right now, given the fact that you can see it. It's the most telegraphed surplus I've ever seen in my 30 years of doing this. So the market has to have already incorporated all of the downside risks from that. I'm not going to say it's not going to happen, but I look at it. I guess what I find baffling is how convicted the market is around this oil supply glut, creating this downside, given the fact.
Okay, so all right, let me just take a look at that for you.
-6, -10 to +10. it's -6 short right now. So the upside is, hey, we get evidence that this surplus is not creating the big stock builds as we get to the end of this month and the first part of November. That big short of the market reverses, that could move you up $10 a barrel. I'm not, I'm the lone
October 31st. Okay.
right now in the face of that big
Netflix. You're looking for calls 60 12. Buy the 1250. That is a 48 delta. Buy a vertical. 1250.
They put those barrels out there
1280.
and they were nominated.
It's $11.93.
Record levels, and then you have a backwardation on the curve.
Yeah. Finally, I realize that we're talking about global markets here. Geopolitics tend to factor into commodities in a very big way. But how much is U.S. domestic policy around all of these different commodities factoring and sort of changing the supply-demand equation as well, and pricing equation?
I think, when we look at the policy right now, it creates upward pressure on prices. Whether it's the weakening of the dollar that we've seen since the beginning of the year, that puts upward pressures on there. But I think the key point is prices in the U.S. are on the energy side are so low that drilling is already coming on. Unemployment.
Okay, here we go. Bouncing the other direction now.
Which is going to create more stress on the system. So people like to argue, OPEC wants to wage.
Meta's turning back up. Meta's turning back up.
They don't need to. Drilling's already off. Employment is off. If people go, wait, Jeff, there's a big increase in U.S. supply recently. That is in the Gulf of Mexico.
Hedge flows are still pretty much sideways.
So when we look at the situation for growth in the U.S., it's going to struggle.
All right, Jeff Curry with Carlisle. Thank you for joining me.
Thank you for having me.
Well,
pretty neutral.
Rick Santelli is tracking the action at the CME. You've been talking about this all week, Rick. What are we seeing?
Yes, it's a very interesting auction. 22 billion 30-year bonds, actually 29-year 10-month, adding to an issue originally primary auction a couple of months ago. The yield at this 22 billion Dutch auction, 4.734%. The when issued market was hovering right around 4.73. So the actual Dutch auction had a slightly higher yield, which means a slightly lower price. So there was about a half a basis point or so on a tail. That's the only thing that was wrong with this auction. Gave the grade a B+ in terms of demand, solid demand. And even though you see on the chart, the yield's moving up a little bit. Sometimes, just like yesterday's 10-year, even a good auction can't stop a sell-off. The market does have a life of its own once it gets beyond all the dynamics of an auction. And this particular auction had some very special features. The dealer takedown was 8.7%. I have enough history here to go back about 25 years. I can't find a smaller amount. That's the smallest amount for a 30-year auction on my records that the dealers took. That's a very aggressive bidding by actual investors, and that's a good thing at this point. And I would continue to say that during this shutdown, another interesting feature is pretty much all week, if you look at a year-to-date of 30-year bond yields, we are hovering pretty close to unchanged on the year. We settled right around 477 at the end of last year, and every day this week we've been closing basically in the low 470s. I think it's important. Should we start to close above that, I think that would be a technically significant feature that would put more upward pressure on long maturity interest rates. Morgan, back to you.
Rick Santelli, thank you. Well, meantime, the government shutdown is halfway through its 9th day. It's now the 8th longest shutdown in history. No signs of reopening, at least not yet. Emily Wilkins is on Capitol Hill. She has the latest for us. Hi, Emily.
Yeah, Fernando, the 1250 is priced as a... It's priced as a 51 delta, so that means for every 2 points, you're going to make a buck.
It hasn't yet, but look, we know, basically everyone's voted at this point, and from what we see, it has yet again failed to reopen the government, and no real movement here. You still need 5 Democratic senators. Those senators are still holding out for more when it comes to the Affordable Care Act tax credits and finding a path forward on that. This is a position we've been in for the last week right now, and this stalemate is really seems like it can only be broken if one side begins to feel more pressure, and the White House is actually trying to do that right now. Trump again
trying to ratchet up the pressure on Senate Democrats to get them to vote to end the shutdown. This time,
1250. Sorry, the 1250.
Democratic programs.
Not the 1280. I typed that wrong. 1250.
And we're only going to cut Democrat programs. I hate to tell you. I guess that makes sense. But we're only cutting Democrat programs. But we're going to start that, and we have Russell, who can talk to you about it if he wants to. But we'll be cutting some very popular Democrat programs.
Now it's not clear at this point which programs Trump was specifically referring to. Of course, we're still waiting to see what happens with these massive federal layoffs that Trump has mentioned. Haven't seen those occur yet. And of course, some questions about whether some of these furloughed workers will get back pay, although now you're hearing on Capitol Hill more Republicans saying that they will make sure that that happens. But according, there are going to be other pressure points coming as well. Next week on the 15th, members of the military will not be getting their paycheck. That is going to be a big pressure point, and it doesn't seem like at this point Congress is going to act to ensure that they are getting.
Yeah, we traded quite a few names. Let's see, what's the other one? The other one's called what? BJDX. BJDX. And what was the other one? There was another one we traded. What was the name of that one?
The S&P and Nasdaq hitting record highs before reversing course, turning lower. We're going to look at how long this rally can continue. But first, Lululemon's founder is sounding off on the company, saying it's in a nosedive. It's losing its soul. But he's proposing a plan to fix things. We're going to tell you what it is, with shares now 65% off their all-time highs. The Exchange will be right back.
This is The Exchange on CNBC.
Let's see, NUAI. CRML. And what was the other one? TTRX. Yeah, that worked pretty good, Frano. I like it a lot. Just watching NUAI right now. It's still going. NUAI. Okay, I already have a good trade on that one, so I'm not going to do anything else. BJDX. Let's see. S&P just sitting here, threatening to drop, but it could be a trap for the bears. I'm thinking a trap at the moment. If it takes out the low, if it takes out 67.20, then we'll see this iron condor go away. And that could cause a pop. If they close this, it could cause a pop. Okay, the 67.20. They took off the upside, the upper strikes here. We got the 67.20, 67.15 right there. Hedging flows continue to move lower, so seek and destroy. Okay, just watching the hedging flows. S&P. Okay, if this drops off.
Welcome back. Let's drill down on one retailer, Lululemon. The company's founder, Chip Wilson, taking on an ad in the Wall Street Journal, saying the company's in a nosedive and it's losing its soul after nominating and governance committee failed to safeguard the company's long-term vision. So what is the solution for the athleisure maker? According to Wilson, Lulu needs to put product and brand back at the center.
bring entrepreneurship or entrepreneurial ownership, I should say, back onto the board, empower creative leadership over merchants, stop chasing Wall Street at the expense of customers, and recommit to the muse, the woman who inspires the brand. Well, shares are down 65% from their all-time high. They're on pace for their worst year since 2008. For more, let's bring in Courtney Reagan. Court, I want to get your thoughts on this, because there was a time where Lululemon was the upstart and the disruptor and made athleisure mainstream, and now there's more competition out there, including a lot of privately held new upstart names.
Absolutely. So look, I think
Okay, Netflix, go in there, Netflix.
but I think he also
Okay, finally got something going on Netflix. Thank you.
the category was sort of new. It was
Okay,
burgeoning.
let me see
It was
what.
a new idea. He's right, the innovation, the technical fabrics. It was something that the market hadn't seen before. But now, not only is Lululemon competing with the Nikes of the world, but also the upstarts like the Alos, the Vioris, that are trying to take a page from Lululemon's playbook. And he does somewhat address that, talking about sort of the other competitors that are coming in. But he really is very critical of the fact that Lululemon has lost its soul and lost its visionary, saying, you know, when a company becomes bereft of a founder, these things happen. But he does, as you point out, give these points to say, hey, look, you guys can turn things around. And I wanted to look at the board because he exited as CEO well before he left the company entirely and still had a presence on the board. And when I looked through it, there are currently 10 members on the Lululemon board, including CEO Calvin McDonald, who's been there since 2018. But there are also 3 current board members that overlapped with Wilson. So that's about a third of the board that overlapped with him at some point. 6 of those members of the board do have experience, personal job experience in either retail or consumer products, so a CPG type product. 2 of those 10 have founded their own companies, so are founders in their own right. So when I look at the board, I don't see anything that's extremely off. He points a lot and says, look, there's people that are short-term operators and they start to see things sliding and they can do things.
Okay, Netflix, looking good.
To juice up the financial results. Yes, Terry List is on the board and she has a lot of experience in retail, largely as a CEO role. And so maybe she had a hand in making sure that the finances were in good shape, which I wouldn't say is ever a bad thing. But to be fair, the stock price has taken a dive.
Netflix,
Down 65% or so since its high.
at the highs of the day, looking good. Netflix.
Competition is something that we should seriously point out. And also look at Nike, by the way, right? They have been a leader in so many areas for so long, and they have faltered recently. They have had to change CEOs.
Yeah, and of course they brought somebody back who had been at the company and had a very strong record in the past as well. Not a founder, but I do have to wonder, how much does Wilson still
All right, I'm taking it easy today for obvious reasons. I've been talking about it since last couple of days. We had that bearish engulfing candle, and I'm just anticipating people are going to get chopped up here. I've been reducing exposure. I do have some hedges on. I have a put fly, a long put fly. If we start to head down towards 6,700, that starts to kick in from here down to 6,700 and then max at 6,675. So I'd be taking that off into that weakness, risking $75 per contract. I got 5 of those, 375 plus fees and commissions, $400.
In a private equity deal. So I wouldn't say it's beyond the realm of possibility there for certain.
Okay, Courtney Reagan, thank you.
All right, Netflix pulling back a little bit.
Down another 1% right now. Well, coming up, we've got an inside look at Macau's evolution as the world's gambling capital tries to make a comeback. Contessa Brewer is there. She's live on the ground. She has more. Contessa.
I'm live up by the pedestrian bridge here at the Venetian Sands overlooking the Cotai Strip. And look, what I'm seeing is the kind of rebound that investors have been anxiously waiting for ever since the
All right, so Elvis.
And Macau opened its borders. What will they see for profits?
Elvis.
Coming back
Okay, that keeps moving lower. So Elvis and Wynn, those are the biggest casinos there, right? So, okay. No. Yes. Nah, that's why I'm here.
ALH.
TTRX.
PMI.
Welcome back from global gaming to the NBA's return. Macau is making some big bets reshaping Asia's entertainment capital. Our Contessa Brewer is there for a first-hand look. And Contessa, it's not what you expected. What's your takeaway?
I mean, one, it's almost like we're seeing Las Vegas as it was a few years ago, post-pandemic rebound. The pent-up demand, the intention to really live the experience in this entertainment destination is palpable and at odds with what experts had told me to expect from Macau in terms of its serious gaming history. They had described it as something bordering on joyless. That is not at all what I'm seeing here on the gaming floors and out in the corridors. But, you know, Morgan, this is very different from Las Vegas in several ways. Number one, and probably most obvious right away, when you walk in, there's no smell of smoke.
Okay, S&P looks like it's going to drift a bit lower.
Smoke inside. There are signs posted everywhere.
Meta, Netflix are holding on. Snowflake rolling over. All right, so we're starting to see the markets deteriorate a little bit. I think the bulls are starting to relinquish control. At least that's the way it appears. Okay, so we're testing yesterday's low right now. Okay, let me get rid of this. Okay, so we're testing yesterday's low right here.
Secondly, I saw yesterday for the first time ever windows in a gaming parlor. It was at the high limit club at the Wynn Palace. Beautiful windows overlooking its lake with fountains, but in the daylight, if you're gambling, it looks like daylight. I've never seen that before on a gambling floor. I think also it's interesting that in Macau, the casino floors are all cloistered behind screens so that if you're in shops or restaurants, if you're here with family, and there are families everywhere, small children everywhere, something I did not expect, they would never even have to see a slot machine or the gaming tables because the regulators do not want that to be apparent to families. Super interesting to compare and contrast the two.
Oh, this is fascinating. I have many questions for you. I guess the first one is, okay, daylight, at least on one floor in one casino, are there clocks?
I'm looking right now at a massive clock. It's Big Ben or the replica thereof that goes along with the Londoner. But no, I don't see
Netflix still going.
I don't get the sense.
Okay, Netflix looking good.
The signature sense that you might come to identify with the upscale casinos in Las Vegas. That happens here as well. You walk in and it smells very strongly
Netflix.
of particular fragrant. And that, like Pavlov's dog, that helps gamblers get back in the mood, or shoppers to restaurant foodie types to associate that with their favorite properties.
Now, I just want to go back to this idea that it's very family friendly and how that's structured and how that's different than what has always been described of Macau of old, if you will. What does that mean in terms of what's driving revenue and profits, and how does Macau continue to, I guess, spearhead that and continue to grow? What has to happen?
Okay, so first of all, you've got the NBA China Games starting here tomorrow, a return after 6 years for the NBA. It's a big deal. There are basketball fans everywhere. More than 50% of people who responded to a survey on social media say they follow basketball, NBA basketball in China. That's a huge number, and you can see it with the young people, teenagers and young adults who are out crowding around asking for autographs from the basketball players. Is that driving profitability in a return? Because after all, you'd have to sell a lot of tickets to make it up for even one hand of baccarat in these high limit rooms. That being said, what they told me at Wynn Palace, this beautiful presidential suite, the 7,000 square feet with a beautiful patio lawn, they said, oh, but now the gamblers are coming and they're bringing their families. And so what we'll do is we'll set up soccer, they called it football, out on the pitch. So they're still getting the money from the high rollers, but now they're getting all the extraneous spending on the amenities, or the amenities are bringing in those whole families and spending longer periods of time here.
Contessa Brewer, great reporting. And great to see you in Macau. Thanks for bringing this to us. Don't miss Contessa's continued coverage from Macau tomorrow. She will be looking at the NBA's return to China. You just got a little preview right there. That's all day
All right, Brando, I just took a Netflix trade with you. Okay, we're at the highs. Just a little small trade, 1250, 1255 on Netflix. A little over $2 per contract. So once Netflix gets going even more, if that happens tomorrow, I will spread it out. I'll roll it up and spread it out to 1260, 1280, something like that. S&P, they're just killing premium now. They're just sitting here, threatening a move lower, but they're not moving it lower. S&P 500. They're threatening the move, but they're not doing it. So people that are buying puts down at the low are probably regretting it at the moment. Looking for a bounce. Next hour and a half, looking for a bounce.
Our next guest is looking beyond the big names for potentially some big returns elsewhere. We're going to tell you where they are next.
Okay. S&P is just not dropping off like I thought it would. Just sitting here. It's testing the low, testing yesterday's low. Right there, we're testing the low. Yep. If we snap through this and start to move lower, 6,700 would be likely. Oracle, nice little move there on Oracle. Just pop back up. Oracle. Broadcom. Let me just take a look at a few of these here. If Wynn Resorts is going to bounce, it's right at the 50 days, so that might happen. Wind resorts. I'm reluctant to take many more longs. And what I've been doing is taking more and more positions off into strength, reducing my need for upside, and just trying to hedge the downside. So would love it if the markets continue to move higher. Let's see, Broadcom. Okay, Broadcom, I have an iron condor on this one, just sitting here doing nothing for the last 2 weeks. $1,500 in credits. Let me see how much I could close this for right now. Broadcom. Let's see. Create a closing order. Okay. Broadcom. What is this? This is Charter Communications. What's Charter doing? Charter. Okay, Charter headed back down to the 50-day, looking for a bounce. I won't do anything until probably tomorrow, Charter. I might have to roll this down and out in time.
Means a company spend billions. Here's another staggering stat, just in time for earnings season. Strategic is noting only 4 companies make up about 30% of S&P 500 capex: Amazon, Google, Meta, and Microsoft. My next guest still likes this AI trade, but she's looking for opportunities in small caps. Joining me now is Julie Beal, Chief Market Strategist at Kane Anderson & Rudnick. Julie, it's great to have you on, and it's interesting to hear that. Are you looking at names that could potentially benefit from all that capex spending by those 4 heavy hitters that we just laid out?
I think that's the place where I would say there's the most risk. We've seen a lot of companies rallying on the idea that the picks and shovels of this capex are going to be big beneficiaries. So the problem is that you have a lot of customer concentration risk involved in that. And that's the concern that I have, is you're relying on 4 boards of directors to continue to be extremely brave without a lot of evidence that they're going to earn a great return on this investment. And that's a concern for me. So I would
so Charter.
Companies that are already starting to use generative AI in their own operations, in software.
Let's see what else I want to look at here. Charter.
This technology is a great leveler. I think it's actually going to enable a lot of smaller
Broadcom,
businesses,
GE.
larger businesses.
Let's go look at GE.
Software, there are a lot of nice niche businesses that are profitable and that have
GE just sitting there.
The high beta rally that we saw in the 3rd quarter.
Okay, let's name some names.
So, companies I like are Descartes, which has a real information advantage in trade. They account for something like 2/3 of packages shipped touch their network. They have a real barrier.
Tesla pulling back again.
Enabling a lot of small banks to be more
Tesla.
competitive with the larger banks. And despite a really tough mortgage market, they continue to grow their business, which I think is pretty impressive. I think these are the types of kind of smaller cap businesses who can leverage generative AI right now to accelerate their product roadmaps, but they're also integrating a lot of this AI into their own products.
Tesla pulling back to 428.
For their customers.
And change.
There's been a lot of commentary. Some of it
Amazon. Okay, Amazon turning the corner.
I think about Jamie Dimon's comments earlier today in an interview around the froth in AI and whether a bubble is inflating here or whether
Amazon turning.
To go and the hype is real.
Shorts covering.
You mentioned where you see risk in the AI.
Amazon turning up. Shorts covering.
This and how is it, I guess, going into your investing thesis overall for this market?
Well, it's like, look, I've been spending a lot of time in therapy, and so especially couples therapy, and we always say, it can be both, right? We want to acknowledge that it can be both. So I genuinely believe that this transformation that we're seeing in technology, it's existential.
Okay, S&P turning back up.
Impacting us through the next decade. I really believe that it is real. It is not crypto. It is not 3D printing. This is a real tech transition that we're experiencing. I also believe that most tech transitions don't move in a perfectly linear way. and that we could have periods where we have major overinvestment and they're not able to really recoup all of that investment in a way that is great for investors. I worry sometimes too that this could be like aviation, where all of us really benefited from the innovation in aviation, but the companies actually flying and building the planes didn't start to really earn a return until the 90s. I don't think it's going to be quite that extreme here, but I do think that these numbers are really large and they mean that they're really hard to create huge businesses around them. And I just think we need to keep that in mind.
If I step back and just look across the market more broadly,
Meta.
it seems like expectations are
Okay, Meta just sitting here. S&P looks like it wants to turn back up.
Do you fall in that camp?
Yeah, I do. I think things are looking great. I'm so impressed with companies' ability to manage through the level of uncertainty that we had. We were talking about it as toxic uncertainty. I think one great thing that's happened and that really enabled companies to be more flexible is that with the pandemic and the supply shortages, every company really looked at their supply chain and tried to figure out how to be more resilient. And they got to test that right away with tariffs. I think what we will see.
Okay, so S&P is testing everyone's patience at the moment. We got, what, 2 hours and 21 minutes to go? They're just keeping it inside of this price action.
How closely are you watching the bond market?
67.20.
I think that's really an important place.
Okay, we're tested 67.20. I'm not sure why this condor is still there.
On the Fed, but frankly, the bond market is what really matters, and it's much harder to bully those guys than it is the Fed. I worry a lot that the level of deficit spending that we still are recording, despite taking in
S&P starting to climb,
is something that will really limit how much we can get any yield relief, and that impacts the rest of the whole economy.
Julie Beal, Ian Anderson Rudnick, great to have you on. Thank you. Coming up, Ferrari, pumping the brakes. It's on pace for its worst day ever. Despite raising full year
S&P climbing, S&P climbing out of the hole here.
That's next. And check out Boeing. Those shares are down nearly 4%, shaving 56 points off the Dow right now. That's after the Turkish Airlines chair.
S&P climbing very fast now.
Could switch its recent order for 150 MAX jets to Airbus if talks with Boeing's engine supplier don't make progress. The exchange will be right back.
Okay. 67.55, that would be up there near the highs of the day. If we made it back there, I don't think we will, but I think we're going to get rejected right in this area if we even make it this far. Okay. Meta looks like it wants to go again. Meta again. Looks like it wants to go. Meta. Okay, Meta, can we get Microsoft and Apple to turn? Meta's trying to go again. Meta. Okay, I've really cut back on the new trades today. Scalped a few things pre-market, but intraday there's not a whole lot to do. Took some Netflix. 1250, 1255s for earnings, maybe a little run for earnings. SoFi looks good. Let me take a look at SoFi. I might want to take some profits there. Reduce my exposure, SoFi. Okay, we got bank earnings starting soon. SoFi, just grinding along. You know what? I'm going to take SoFi. I'm going to take this off. Actually, that's pretty close. Pretty close. I have January 30s. They're not too far out of the money, but they're a nice profits. I'm going to go ahead and take profits on SoFi. Again, I'm just systematically reducing my exposure. If I have profits and it's not moving anywhere, like you see SoFi just sitting here for 3 days. Okay, Theta's going to kick in. I got January, so it's not going to be anytime soon, but I can always get back into this, in other words. What's Coinbase doing? Coinbase did show some signs of recovery. It's a doji for now. SoFi, or Coinbase did pull back. Looking for that to bounce. Okay, S&P, Bitcoin looking, I don't know. This just, to me, it looks like we are about to see some downside. I've been saying that for weeks. I'm surprised we stayed up here for so long. Okay, but this is rolling over. I could see at least 117, maybe 114, 50-day, 20-day. Bollinger Bands are really wide, so maybe some iron condors or something. Coinbase, Doji. Do I have I have a profit there too.
Market share climbing last quarter, but one company is not seeing a big pickup in sales. Ferrari. Robert Frank joins me with the story. Hi, Robert.
Morgan, good to see you. Well, Ferrari shares down 15% on fears of a slowdown in profits. This all comes from its investor day today.
Down volume continues to run the show.
The long-term projections going through 2030, analysts have been expecting profit growth of 10%. It's now looking more like 6% going to 2030. The company also scaling back its EV ambitions. It released details of the technology that's going to power its first all-electric Ferrari.
So if the markets do fade, I imagine most stocks will go with.
It will have electric motors generating 1,000 horsepower, 0 to 60 in 2.5 seconds. But it lowered its EV target. So EVs are going to account for 20% of its lineup by 2030. That's down from the 40% that it had projected. If you look at other high-end sports car makers, they're also delaying or throttling back their EV plans from Aston Martin to Lamborghini to Maserati. Now, in its earnings call in July, Ferrari said there's no indication that tariffs are impacting demand. Most of its models, Morgan, are sold out. The waiting lists are over a year. So this is not a story of rich people aren't spending or they're not buying Ferraris. This is a very expensive stock where any whiff of a moderation in profit growth is affecting the stock.
Netflix looking for more upside.
Right now. 1,000 horsepower, 2.5 seconds.
All right, UNH. All right, Doji at the highs. RSI showing muscle. Momentum is bullish. Volume looks good. UNH.
That's the great point, Morgan.
UNH.
To the Ferrari collectors and a lot of the dealers, it's about that engine
Turning the corner now. UNH
now,
moving higher.
There is going to be a way for this new electric car to have a sound, and there's a lot of technology around how they're going to create that sound, but it's not going to be a combustion engine. And there will be demand, but in 2030, it's going to be 40% combustion, 40% hybrid, and 20% EV. So that's at least how they see it right now.
All right, Robert Frank, thank you. Well, coming up, the AI arms race has so far primarily been between the U.S. and China. There's a new entrant, one with an energy edge on both countries. That's next.
Step patterns change, your trend has changed. And finally, keep in mind that big players with strong hands are not nimble and they have to play the long game, but they can cause short-term whipsaws to fake you out.
GE pulling back in. GE, I have an iron condor on this one. About $1,100 in credits.
And tune into the Stocks in Translation podcast for more jargon-busting deep dives. New episodes can be found Tuesdays and Thursdays on
To be clear, if we start to dive, let's say the markets take a trip lower over the next couple of days, I'll keep an eye on these puts. What I would do is add to my call side and reduce my size on the short side, maybe sell 2 of the puts or sell them all. Let it head back to the 50-day. Keep these up here, double up. Okay, this is GE. Okay, GE. Yeah, Meta gonna rip. Meta's gonna rip here. Watch Meta. All right, so that's GE. So That's fine. These are fine. Iron condors, credit spreads, these are really boring. They're really boring because, a lot of people are used to getting that leverage when you go long calls. Once it's long as it's moving, like Meta right now, for example, it's doing very well. But if Meta were to stop right here and just not move for 2 or 3 days, the theta would kill your trade, right? So you'd have to take the trade. You'd have to take profits off into strength, which is what I would do if this keeps going. 450 is the upper resistance level, upper call wall. But yeah, iron condors, put flies, not put flies, put flies too, call flies, put flies, long or short. All of these are pretty slow. They're less expensive, but they're also slow. And the credit spreads can seem like you're watching paint dry sometimes. But the eventuality kicks in at some point in the near future with these. I got the 21 November iron condor on GE, so that'll do fine. What's going on with the line? There we go. GE, Broadcom. Okay, Netflix. I have put credits on Netflix. Put credits on Netflix. I also have a long now. I have the 1250, 1255. So let me just put that on here.
To the UAE under a deal signed back in May. And I'd just like to point out that NVIDIA is declining to comment right now, but it's happening as America really faces this massive power crunch. NVIDIA and OpenAI recently announced plans to build 10 gigawatts of data centers here in the United States. Gigawatt sounds very abstract, but that's enough to power 8 million American homes. The problem is no one knows.
Okay, we're not too far out of the money, so that's good. So we're long. So this will be the opposite of what you're looking at on the credit spread. So 1250 is that strike, and I'm short the 1260s, 1255. So these are pretty narrow. We're getting close though. So maximum profit comes at 1255. Okay. Notice these are opposite. The closer strikes on the put side is a short. The closer strikes on the call side is a long. So this is a long. They're both longs. Okay. We're both looking for upside. I just wanted to get a little bit more leverage out of Netflix as it continues to get bid for the past 4 trading days. All right. So that's Netflix.
The UAE, though, now has cutting-edge NVIDIA chips and cheap, reliable power. The United States has the best AI companies, but an energy crisis. The real competition isn't about building the smartest AI. It's about keeping the lights on while you run it, Morgan.
Yeah, I would argue this is still part of the whole U.S. versus China AI arms race here, because it is this idea of technological diffusion and basically creating an alliance tied to AI between the U.S. and Gulf states, in this particular case, the UAE, to get that American-made tech out there and that full stack integrated into other parts of the world.
Which I have called personally digital colonialization. But in regards to China, the issue with China is that they are not power constrained either. So even if the chips aren't up to par and may not be as good quality as NVIDIA, they can stack and use more of lower quality chips because power is not constraining them over there. So that is another factor to consider. We're focusing on UAE because right now that's where the story is, but China has that same advantage as the UAE when it comes to power.
It's a key point.
Okay, Meta looks good. What else do I want to look at here? Meta, Netflix,
Here by the U.S. Commerce Department, where
GE,
I will only cite Wedbush.
Tesla.
I can't opine on that, but they are expecting more of these deals to get the green light. And keep in mind, Jensen Huang, the CEO of NVIDIA, has traveled around to the Middle East, has been with President Trump.
Tesla, we said.
Countries as they announce their sovereign AI data center build out. So perhaps that is going to help this case when it comes
to delete
to
this one. Let me delete
green
this.
light for many of these licenses.
Delete.
Yeah, of course, whether
Yep.
and how much that offsets any lost revenue.
Tesla.
Christina Parts-Nevelis, thank you. Thanks. Coming up, rare earths and critical minerals. Those names are surging today. U.S. rare earths.
Christina Snuffleupagus. Snuffleupagus.
More than 78% since the government.
Okay, Meta looking good. Meta.
Will China's moves spur even
Okay. Looks like Netflix, they want to poke the bear a little bit more. Looks like they're going to poke the bear a bit more. What do we got going here? NUAI. Okay. NUAI is back at it again. NUAI. Okay. NUAI. All right, let me take a 2-minute break. I'll be right back.
It creates competition with other sectors. We've had stories of some of our members who say that some of their employees don't even want to come to work because they're afraid, whether they're legal or they are legal, right? And so, or citizens, and they're worried about their kids going to school. So I'm hoping that settles down.
I'm hoping it settles down, but at the same time, there's no sort of comprehensive immigration reform that there was before President Trump was elected, and it didn't end up going anywhere.
Let's talk in a couple of months. Because look, we have a plan that we put in place before the first Trump administration, before the Biden administration. Actually, we had some traction in the first Trump administration because I think they really wanted to start to solve the problem. And then politics got in the way. The Biden administration didn't pick up the ball. So we're hopeful that we can come back with some recommendations for the current Trump administration to focus on the economic needs of this country. So that's what I think.
And then on the tariff side, the other big issue that we're worried about, how are they thinking about this sort of argument that in the long term, this will be positive? Will everyone be under so much economic duress that we won't be able to get to that other side of it?
For every one of my 14,000 members, I have 14,000 different opinions about it. They don't work. Generally speaking, there's two things that I hear that are causing consternation. One is the uncertainty. We just don't know what the road ahead is because there's the IEPA tariffs, there are the two tariffs, the one tariff.
And now there's legal challenges.
And now, of course, legal challenges, sure. So we don't know the road ahead on that.
Welcome back to the exchange. Domestic rare earth stocks are soaring today after China tightened export controls on its critical minerals. Even further, ahead of a possible meeting between President Trump and his Chinese counterpart Xi Jinping at the end of this month. MP Materials is up 4% on that news. USA Rare Earths have up a whopping.
They're finding it difficult because if our economists have calculated if every machine in the country is working.
Okay, there goes Meta pushing a bit higher. Meta.
Build a new manufacturing facility. That's the optimistic view. It could be as much as 30%. So you've got to import, let's just say, specialty machines that we don't typically make here yet. If we want to make those machines here and we want to build a factory to make those machines, we got to import some machines. And if you're adding 30-40% to the cost of that, those numbers don't add up. So we're looking at potential speed pass, if you will, to bring in some of those critical inputs. If those inputs are used to build capacity, new capacity, to come in duty free, and we're hoping the administration will take a look at that.
One other question I want to ask you on the labor front has to do with AI and how much of that worker shortage can be helped by increasing productivity through AI, or is it not the kind of jobs that you are looking for?
I think back, I'm old enough to remember the 1970s when technology was just taking off and everybody said, oh, technology is going to wipe out jobs, manufacturing jobs in particular. And then the internet came along, and then augmented reality, all of those things were always said to take away jobs or predicted to take away jobs. I don't see that with AI either. What I do see is just a change in the jobs, just like it's always been in manufacturing.
So how is that going to work in manufacturing specifically?
Well, about 50% of manufacturers today already have AI.
Okay, nice little rally.
That number
And Meta pushing a bit higher. Meta.
And then I think the number goes up to 80% by 2030. So it's just going to, you're going to need more people to be able to operate the systems and be able to utilize the design features and other features of AI in a different way than we have used technology in the past. And that's just a matter of training and education, which I think we can accomplish.
And I think also we still have this vision in our minds of what a factory looks like, where there are a lot of people.
Yeah, that's the perception issue.
And a lot of factories, if you look at the floor, they don't have that many.
There's a lot of people. Yeah, but there's people on the floor. There's people in the back offices. I think folks, when they think of manufacturing, only think of those shop floor positions. Right. But it's really a panoply of
All right, Meta trying to go some more. Meta looking good.
Design.
Meta.
To design all kinds of different things. I'm thinking you're going to be perfect for manufacturing if she wants to take that route. And most people don't even think that is not an option or an opportunity. And then I think of AI and how that is going to supercharge the design segment of a lot of these facilities. I think it's going to be pretty exciting. Yeah, thanks for having me.
Appreciate it. And that's it for Market Catalyst. I'm Julie Hyman. Thanks so much for watching. We're
Are you ready to master the markets and, dare I say, become a better investor in the process? They'll find tactics. Our new
Meta's still pushing. A little bit off the high here. CRML's trying to turn back up. Evening session. Meta coming back down a little bit.
It's 2 p.m. Eastern time, and we are live on the floor of the New York Stock Exchange. We did see some records earlier today for the S&P and the NASDAQ. We've had a couple of IPOs. One is up 20%, one's up 25%, and something like that. But the point is, we've had a lot of excitement here on Wall Street, but we've taken a turn, and we're not too far off session lows on the day. We have a big show for you today. We'll take a look at some stock picks for your portfolio. Also, which sectors could, in fact, be best positioned in the current environment. Then we'll discuss ETF investment strategies.
Wow, this one's really dropped. This was $30, $32. $32 earlier. TTRX, this was $32. It dropped down to 10. Wow, that's crazy. Meta looking good, Meta.
Some down arrows here, 67.25 on the S&P 500, down 30. NASDAQ 100 down 122 points, down 0.5%. Dow Jones Industrial Average also down 250 points, 0.5%. And the small caps, the Russell, worst of the four, down 0.75%. Oil and gold are both lower. Gold taking a big turn down. In fact, down 106 right now at 39.64. Troy ounce. Wow, that's a big move there. 2.6%. Oil 61.41. That's down 1.8%. Bitcoin down 2% today at 121,620. 415 on the 10-year. 99.17. That has moved higher than the dollar there. That's worth noting. They both moved higher. Got the yield and the index.
Okay, nice pop in NUAI. Nice little move there.
Look at the big picture. We're looking at some of the key names. I know you were looking at PepsiCo earlier today. Kevin, how are you feeling? What are you thinking here?
PepsiCo had a very low bar going into their earnings release, Nicole, as you know, and they jumped over it. They cleared a very low bar. Earnings per share $2.29 versus $2.27 expected on revenue 23.94 billion versus 23.88 expected. North America beverages up 2%, just over $7 billion. North America foods flat, around $6.5 billion. Latin America up 2%. Asian Pacific food up 2%. And Europe, Middle East, and Asia, there's where a nice jump, up 9% at 5.02 billion. Also, they named Steve Schmidt their new CFO. So when you have a low bar like you saw in Pepsi, didn't take much good news. Stock up, about 3.5% now, approaching $144. So a nice jump here out of PepsiCo, Nicole.
All right. What about Salesforce? We saw a price target hike cut on this name. And this is ahead of the Dreamforce event. There's a lot of key speakers at this event.
Salesforce struggling. Definitely, you can tell by the chart this morning. Stifel lowered the firm's price target to $300 from $325, but keeps a buy rating on the shares ahead of the Dreamforce taking place in San Francisco next week. Shares have failed to gain any momentum year to date. Notes the analyst who sees the event as an opportunity for Salesforce to showcase Agent Force traction in its first year post-launch. This stock, they grow by acquiring
minus
companies,
800.
and it seems like every time they acquire a company and pay that big price tag, it goes into a winter, it seems, where it just underperforms for a significant amount of time. I think you're seeing one of those right now, Nicole.
All right. Well, Kevin, it's great to see you. Really appreciate it. I can't get over this move in gold, too. Got a lot to talk about throughout this hour. And, of course, you're going to want to listen to the next segment with Matt Kaufman and hear what he has to say about the market and also about the big picture. Thank you, Kevin. And we bring in Matt Kaufman, head of ETFs at Calamos, to take a look at what's going on in this market. People are getting used to some back and forth once again. This morning, again, we hit records in the morning.
Okay, still going here.
I believe it was. Some of your thoughts on the market action. Why does it act like this?
Yeah, Nicole,
Okay,
near all-time highs.
NUAI, that looks good.
Categories. We have stocks near all-time highs, Bitcoin nearing all-time highs, gold nearing all-time highs. It does seem like we've entered into this more speculative phase of market growth. From a Calamos perspective, we're more long-term investors, but we are seeing people and financial advisors start to look to trim some of that growth. Taking some of that gains doesn't mean you're bearish on the market, but moving more toward a long-term perspective of having growth potential, but maybe adding some protection along the way. We are seeing that happen.
Are you finding more and more that people are getting nervous as the market is moving higher? They have obviously maybe seen some gains, or maybe they have FOMO.
Okay, let's see. Meta. Trying to do something here, Meta. Got a little bit of selling up here at the highs. Probably dealers trying to keep this down.
Are people getting a little nervous, asking you, maybe I can do an ETF that sort of protects me a bit on the downside?
Yeah, the fear and greed are no different today than they were maybe 100 years ago. We've seen these tech booms and some busts come and go. So we've got AI now. I'm not saying that that's entering into this hype cycle there, but if you look 100 years ago, we had radio stocks,
low ticker at minus 800.
Technology was coming out. We had video games in the 80s, and those are obviously still wildly popular. We had the tech bubble everybody's familiar with, and now we see AI, trending higher,
extreme low ticker
the market cap of the NASDAQ 100 and the S&P 500. Now we've got a strategy CPSL that has 100%.
Okay, we're starting to push back down now. Meta at the highs.
S&P 500 exposure.
And
so
Meta.
That gives you a little bit higher than the risk-free rate. So tough to just move into cash, move into a risk-free rate product when rates are declining. But now people are using that CPSL trade, just to put protection on in a manner that they choose, whether it's 10%, 20%, this gives you that protection, but still preserves some upside growth for their portfolios. So we are seeing people move into that.
100% downside protection on that one in particular. You also have CAIE, which I see all the time here in the morning when I come in. Every day it's up on the charts behind me. Some of your thoughts on that one, CAIE ETF.
And that's been one of the most popular ETFs in the market right now. about $100 million a month coming into that strategy. Historically,
BMO Capital reaffirms the positive outlook on Alphabet, Google, AMD, Microsoft. Asus introduces a expert book P3 series in Canada featuring AI-powered laptops with AMD Ryzen processors, advanced security, and AI tools for our businesses, starting at $1,350 Canadian. Okay, that's good to know. AMD, what is AMD doing? I haven't looked at AMD. AMD, that's still drifting lower. Okay. Palantir, just been sitting in the middle of the range all day today. Palantir, no selling, just range bound. Palantir
has about a 14.5% average weighted coupon. The majority of that income is expected to be treated as return of capital. So there's historically been no NAV drag in this strategy over the last 10 years. And all of that is treated as return of capital, or a large majority of it. So folks looking at derivative income for diversified income can now use CAIE to get largely tax-deferred income, which is a lot better than what they might find from a covered call strategy or from a bond fund that's kicking off ordinary income.
Well, also, yeah, as rates are coming down, theoretically, right? I mean, we're likely to see rates come down, and so the people may not be getting the same, so they'll be looking to something like CAIE, which also has been gaining in assets under management. I mean, it's only 3 months since the launch, right? And now people are learning more about it. I mean, as far as the investor demand, what are some of the questions people ask you about this one in particular, and that they say, hey, I want in too?
Yeah, exactly. So for CAIE, people are naturally asking about the tax efficiency. They want to know how the income level is so high.
Meta's going to go again. Here goes Meta.
Tied to a U.S. large cap index that has a stable volatility level. And so we're able to generate a high stable coupon by writing those auto calls off of that index. So
okay.
We'll be around 11% over risk-free rate on that income level. You can see that using an index MQ Auto CL. Encourage you to look at that index strategy. But we're about 11% over risk-free. So if rates start going down even more, you can do that math and see where our income level will shake out at. It's a lot different than other covered call or derivative income strategies that will have cap rates or income levels. Even looking at some buffer ETFs where the income and cap rates will vary with volatility and with rates. Here, you're tied to rates, but you are no longer bound by the volatility of that volatility. So your income is largely stable there.
So Bitcoin, crypto, everybody's got to get in there now. It seems, we're looking at obviously the big banks and every, brokerage house now is involved in it because everybody wants to make sure they're not missing an incredible new value asset. And so they look here to Bitcoin, and you have some options there for folks, and they range in risk, tolerance, right?
That's right. So Bitcoin naturally has become a mainstay in the portfolio now. That wasn't the case even 6 to 9 months ago. Now we are seeing large firms, large banks, wirehouses, asset managers all coming out with Bitcoin exposure and encouraging people even to move into Bitcoin. And one of the statements we've seen lately from one of the larger wirehouses, if you're not long Bitcoin and you're not owning it, then you're short. And so they're encouraging folks to move into Bitcoin. What we have done at Calamos is given you a bridge to do that. We have mapped Bitcoin to the traditional portfolio. We're meeting with financial advisors every day. We're hearing from them that their clients are interested in Bitcoin. They're not always comfortable with the high levels of
volatility. Didn't mean to do that.
And then there's
close my Thinkorswim. Meta's trying to break out.
The consensus historically has been just a couple percentage points, maybe sell your Mag 7 stocks to do it. A lot of people like Mag 7. They don't want to get rid of those stocks. A lot of people are exposed to those through an index. So you have to throw the babies out with the bathwater, so to speak. So here we can move into a 100% protected Bitcoin product or a 90%.
Meta grinding higher, torturing the bulls, torturing the dealers, having to Buy shares to hedge. Nice squeeze on Meta. Been looking for this for a while.
Protected Bitcoin where you have higher than risk-free rate upside, but then minimal or no downside risk over that outcome period. So this gives investors an opportunity to enter into Bitcoin, but in a way that works for them and works with their advisors.
Okay, great to see you, Matt Kaufman, head of ETFs at Calamos, giving us the scoop on ways to invest or have some downside protection if you prefer something like that. Coming up, Options Corner, and Tom White is standing by. He will highlight unusual options activity on the day, how investors are looking to trade on recent news of Boeing, Tesla, Microsoft. Stay with us. We'll be right back.
All right, Meta's still pushing. Still pushing.
Dumping expectations for earnings season, and we're stepping onto the court for tennis-themed one-day showdown. Stay tuned.
Okay. Apple off today. Apple still dropping a bit. Apple. Meta still pushing. Looking good, Meta. S&P just chopping people up. Longs and shorts. Okay, hedging flows continue to drop. I'm going to take these out. I'm going to take these condors out. Netflix, nice there on Netflix.
Love protection in every direction. Huggies Little Snugglers. Mark and Anna's front door gets a lot of use.
Love having people consider this to be a landing spot.
So when it needed to be replaced, they called West Shore Home.
I manage people for a living. It was frankly impressive to watch them.
Netflix. Okay, I'm trying to take this credit spread off of $50. Okay, somebody just closed the position or something. Netflix just keeps screaming higher.
West Shore Home. Remodeling, reimagining. Titanium.
Okay, Netflix, that's looking good.
Lighter than aluminum. Trusted in aerospace, medicine, advanced engineering, and now redefining the way we prepare food at home. The titanium edge is prized for its strength, purity, and resilience. Resists corrosion, never absorbs odors, and remains flawlessly food safe without ever breaking down into harmful microplastics. A breakthrough. 3-piece cutting board set. Double sided, ultra lightweight, and built to last. With a sleek metallic finish, it transforms.
Netflix, Meta. Meta's still going.
You've been eating corn wrong your whole life. Introducing the Cobb Gobbler. Just line it up and pull. That's it. No mess, no strings in your teeth. It is weirdly satisfying. Once you grab one of these, let's be honest, you never go back.
Okay, nice pop on. Look at that. Look at Meta go. Beautiful. Meta, nice move on Meta. Hopefully you got a piece of that. Meta. Meta. S&P turning back up. There goes Amazon. Amazon, nice bounce. Okay, this is giving you any bounces here like this we're seeing on Amazon. Gives you an opportunity to exit some positions. I got October 17th calls. I'd like to take some of those off. Took some off yesterday on that big reversal we saw. There goes Palantir. Palantir's trying to go. Palantir trying. LAES is ripping. Okay, LAES. LAES. Mhm.
I think that sets up a little bit of disappointment. But look, somebody told me a long time ago, and it throws me this question: do you really want to be short during earnings season? And you want to be negative, or want to be short? And really, the answer is no, because a lot of these earnings.
LAES. Nice pop there.
Give them a little bit of a break. There's some companies that look, technically they don't look very good, and if they disappoint, they're going to get punished. But companies that are doing better, I look at a company like Robinhood, which has been unbelievable. Over 300% since the
Okay, Seal just looks like the Seal stock is up, partnering with TSS to create secure chips. Okay, that makes sense.
I'd say not so fast. I'd say, look, you got to pay attention to what they say and what they're doing, and going forward, they have some great relationships. And certainly with AI and with crypto, they're doing a lot of good things. And maybe they only beat by a little bit on their earnings, but going forward, they might be do well. And technically, the stock is really in great shape. I'm wondering, what do you do during earnings season? Are you listening for certain things on the call? Are you looking for guidance? Are you looking to day trade with options? Some of the results, like what do you do during earnings season? Well, during earnings season, I'm looking for the highest quality names and the highest best looking charts that I can find. I'm looking for options flow. I'm looking for interest from big institutions that are coming in and buying these names. Because look, big institutions, they don't just step in there and one day just buy everything. It's very methodical, very slow, and they don't want to make a big splash and show everybody, hey, look, we're here.
A nice pop. LAES gets a partnership with the chips for the U.S. defense and government agencies.
When he's stepping in the room and buying stocks, because if he steps in water, everybody's going to get wet, and everybody's going to know about it. So I really tend to take this earnings season very seriously about finding the best trends, the best momentum stocks, and going with those.
What's interesting is there has been that discussion recently that there could only be 2 reports every year as opposed to the quarterly reports that we have now. When you think about what that could mean for investors' knowledge about a company, if you're just getting started, where else do you sort of get in to get hindsight or insight into the company?
Well, you just talked about volatility a few moments ago, right? Well,
Yes.
2 fewer reports a year is going to reduce volatility of the market, right?
Is that a good thing?
Well, for a trader, probably not. But I mean, for an investor, it's probably just fine. Look, I mean, it was about 6 or 7 years ago that a lot of retailers stopped giving monthly guidance, except for one. Costco was the only one that still gives monthly guidance. So, there's a lot of volatility around some of those numbers that came out with monthly guidance and so forth. They stopped doing it, and volatility started to come down with some of those names. So I don't think it's that big of a problem, that big of an issue. I mean, earnings are earnings. They're still going to, you still have to deal with them. If it's 2 times a year or it's 4 times a year, you're still going to have volatility.
Dr. Frank, I don't know if you're listening.
And people want to get prepared for this. You mentioned charts a minute ago.
We're thinking about you, bud.
Use some technical analysis. Tell me about some of the tools that you like. What's in your toolkit? In my toolkit, I love to see momentum indicators like RSI or like the RSI, like the MACD. I also look at money flow indicators like the accumulation distribution, change in money flow is one of my favorites. I also pay attention to what's happening on the price chart because look, one indicator is the price chart. Number 2 is
Okay, here we go. LAES is on the move. Starting to move here. All right, good job. Nice pop.
I really get a good read for where the market's going to go, where a particular stock is going to go. But I have always those supporting indicators which help me really get a much clearer picture of where things are at. So by the way, we have all those on the Yahoo Finance app and site for free.
LAES is on the move.
That's fantastic. But as far as the price is concerned, moving averages are so important because moving averages act like a magnet and pull the stock to back. It's like self-fulfilling.
Volume looking good.
When stocks get too far away from the moving average, it pulls it back. When it gets too far down away from the moving average, it pulls it right back up again. So you can kind of really define the space where you can start getting in and getting out of stocks.
moving into the end of the year, we talked about those S&P 500 targets. We talked about the momentum that we're seeing behind AI. We also are seeing momentum behind alternate assets as well. How do you make, what do you make of this year-end momentum that we're getting, especially into those alternate assets? And how do you sort of understand where to go right now?
I think you're talking about gold, right?
Bitcoin.
Yeah, let's talk crypto and gold. So crypto and gold. So I think that there's a lot of enthusiasm and a lot of excitement with alternative assets. I think we've seen some weakness in the dollar and quite a bit of distrust.
Down about 9% year to date.
Sure, it's a lot of distrust around the world with U.S. dollars, and it's
Worst thing, to not have your health. I understand.
continue to grow for the United States. I think there's a lot of countries out there that are worried how we're going to pay our bills. And we have a president here who's got different policies.
All right,
Other
so
presidents in the past, and who knows,
looking good.
Putting different ideas together. Investing in companies like Intel and other that's kind of unprecedented right now, but things are different. So I think the uncertainty there creates this demand for alternative currencies aside from the dollar. So that's where you're seeing a lot.
Okay, there goes Amazon.
Bitcoin and gold and silver, platinum, all these names.
Amazon running.
But I do think that the excitement and enthusiasm about Bitcoin is going to push that through, probably through 150,000 by early next year.
150,000.
We're 23 right now.
Yeah.
All right, that is a target. That is a
I'm writing that down.
All right, now we have got a market stake on a classic Hollywood gab show staple. Who wore better? Today we're channeling the tennis court. On the left catwalk, confidently strikes the big serve. It's power first, make a statement, then win the point before your opponent even blinks. In market terms, that's the
S&P trying to rise some more. Meta keeps pushing.
We got the perfect return. This is composed, calm, see the ball, send it back with purpose. In markets, that's patience under pressure, absorb the hit, read the bounce, turn defense into opportunity. So Bob, which style owns the runway today? Is it the big serve that blasts through, or the perfect return that flips the script?
Oh, you're talking my language here. I play tennis 4 or 5 times a week, so I'm right there.
Excellent.
I love to play tennis. I'm mostly doubles and with my wife, mixed doubles, and I play with that. So I love it, and it's been so much fun. But I'm going to go with the big serve. Okay, that's what I love the big serve, and big serve can really take your opponent out of the game and
really dial in what they need to make more profits. I still think you're about maybe 3 to 6 months away. Again, we need to have that rate cut cycle happen, which hasn't happened yet, and we need to have more visibility on trade. So we all know stocks move 2 to 6 months ahead of the future. So last couple of weeks, you've seen Robert Half's come to life.
Okay, looks like we might climb a little more. Futures, Meta just grinding up there, torturing the bears. Okay, got Microsoft turning the corner. Microsoft turning.
Start to come up and start to play. People like me who are in that value.
Welcome to the Art Venture Fund. Today,
from that labor market churn increasing.
Do you feel as though this particular move by Robert Half is one that we can say more closely in the future will also align with that jobs picture? We know the historical correlation has been
App
there. Do you
loving.
expect that to continue?
I do. As soon as we
Mobile games into shipping.
really okay letting maybe a
What?
go and not hoarding labor and really ready to hire somebody new, especially in that accounting and finance, which is oh so important. That's telling you that profits are there. That's telling you that you need more. The CFO needs more help. They got, you got to count that cash. You need more people to do it. So when you see Robert Half move up, I think that's when you know you have a healthy job market. Because even if you have a recession, the stock will work. But the main thing is we've got to get out of the no hire, no fire zone, or it's going to calcify. We don't want to end up like Europe.
Or maybe even Japan in some instances. All right, so here, speaking of spending, one bonus one before we let you go. If you look at spending, it's not just about the jobs market, it's also about kind of the consumer commercialized market. We're talking about things like advertising, online especially. Take us through your trade for one of these particular moves in the trade desk.
Oh, it's another Liberation Day loser. Down, it's eviscerated, down half, just like Robert Half. I love Trade Desk. Everybody's worried that Amazon DSP, which is how they sell ads, is going to eat their lunch. But half of what this company does at Trade Desk is connected TV. That just means watching TV not on your iPhone, not on your tablet, streaming on a television for those younger people who don't know. And with half the revenue there, what's happened is that while we have concerns about Amazon, we have concerns about AI, at the end of the day, there's more and more ads. Because remember, streaming, we're getting more ad-supported streaming from Netflix, from Hulu, from Amazon. So the pie just got huge. So this is my way of playing ads not dead. This is my way of saying just because Amazon comes into your space doesn't mean you're toast. It's the only independent.
Okay, S&P is trying to do something here.
You're going to go to Trade Desk to buy.
Meta starting to see a little profit taking. Meta. Netflix at the highs. Netflix at the high. Netflix coming off the high, I should say. We got Amazon at the highs. Amazon's going. Amazon running.
All right, great stuff, Lee. Dom, thank you very much. Right on deck, a real power player, one of the great energy and power deal makers in the world, is here. Doug Kimmel, next.
PYXS.
Okay.
I think the market continues to do well, mostly on the back of AI.
ZSPC.
And then otherwise, I think we have a fairly
ZSPC.
consumer spending is rising, but
ZSPC.
more and more on high-income folks to support continued growth. And business investment is hanging in there, and corporate earnings growth remains double digits. So overall, I think that's a pretty favorable picture. And then you throw interest rate cuts in there on top, I think things look pretty good.
So when you think about some of the names that you're picking for us today, people want to have some, cushion for some of the volatility. How do you go about sort of providing that? I know there's no way to really, unless you had a, crystal ball, but how do you do this?
Yeah, I think one way you can do that today is invest in the healthcare sector. Healthcare has been one of the worst performing segments of the stock market for years now. Danaher and MedPace are two companies that we own in Origin's large cap ETF, which is ticker ABIG. We think those companies they're economically insensitive. If the economy slows down further, if AI spending pauses, I think that companies like Danaher and MedPace, whose businesses are driven mostly by the drug development cycle and R&D spending for drug development, will continue to do well. And I think valuations, particularly for Danaher, are attractive today after that stock has underperformed for the last couple of years.
Whether or not the Fed cuts rates in the next meeting.
All right, so Amazon fading from the high.
Both those companies benefit a little bit because their customers are interest rate sensitive. So lower interest rates are good for small biopharma companies who spend money with MedPace and Danaher. But yeah, Danaher's business and MedPace's business specifically are not, impacted to a significant degree by rates.
$5 million float, ZSPC, trading 11 million. All right. All right.
Turn on to a name like Blackstone. Where does that fit in and why?
PYXS. GGAL.
It's a company who's, dependent on capital markets, prefers lower interest rates, which is, unfolding. Benefits from an open IPO market, benefits from tight credit spreads, all things that are in existence today. They're investing heavily in AI data centers. So Blackstone has a lot of exposure to a lot of these emerging tailwinds that are boosting markets today. And I think it has a particularly strong outlook. We like a lot of the alternative investment managers, but Blackstone is our favorite today.
Okay, understood. I mean, when you think about the investment managers, and I know Blackstone's your favorite, what are you looking for in those? I mean, there are some that you probably eliminated right away. I mean, what's definitely something either on the balance sheet or on the mantra or mission of the company that you align with?
Yeah, a track record of successful investment performance is the first thing that we look for. So we want to see companies that have exhibited cycles of strong fundraising and then following with good investment performance and returning that capital to their limited partners. Blackstone certainly has that. We also like to see a track record of new product development and organic expansion into adjacent categories. That's what provides and allows for growth for the business, which is something we as equity holders care about. And then finally, we want to invest with management teams that have a track record of allocating
S&P chopping people up. Amazon's still pushing.
that is paying
Amazon looking very strong. Amazon, sorry, wrong symbol.
More in years where profits are
Amazon.
high and less in years when profits are low. But they're sharing those rewards with shareholders, and we like to see that.
Understood. And then when you turn your attention over to what's going on in tech, you were talking about Taiwan Semi and NVIDIA. Do you like both those names or what?
Yeah, we do. NVIDIA is the largest position in our strategy. We think that AI infrastructure investment remains feverish. Demand for AI compute remains quite a bit above the supply. And believe it or not, the gap between those
Amazon
two
looking
has
strong.
expanded over the last 6 months. So we think NVIDIA is an outstanding investment here over the next couple of years. We think that CapEx numbers for the big hyperscalers and also the kind of tier 2 neo clouds, which includes Oracle, which you just mentioned a few minutes ago, their CapEx spending is going to continue to be revised higher. That's been happening over the last year or two. I think it's going to continue for the next year or two. And that makes NVIDIA one of our favorite ideas.
Amazon.
When we think about how this market could turn, what are your expectations for this market? I mean, Jamie Dimon today, actually, I saw that he had a 30% likelihood of a correction, and then he was a little more worried than most, but he often is, right? He always sort of gives us the downside scenario. That's sort of been his track record. What is
Yeah, but
scenario,
he wasn't right
maybe a
about
base case
bonds.
on this market, and if it does
Nicole.
what do you do?
Yeah, Jamie Dimon is they tend to be conservative. I would know my dad was a lender as well, so I have experience with that. Typically they're able to look and see the downside, before maybe they pay attention to the upside. So I take his comments, but with a little grain of salt too. I expect AI to continue to lead the market. I think AI spending expectations are going to be revised higher, as I mentioned, and then we see token usage from the big hyperscalers, also Google, OpenAI. Those numbers are doubling every couple months, and that indicates that consumers and businesses are engaging with these chatbots and other AI applications, and it's growing dramatically. I think that's going to continue, and so I expect these big tech AI leaders to continue leading the market. That includes NVIDIA, Google, Microsoft, Amazon, Oracle. You can go on down that list.
I actually had a guest today who said, I still like bonds in a portfolio for the next decade. And I just don't really have a lot of guests who say that anymore. We always thought about how our parents were saying, 60-40, or, equities and bonds, and that bonds were the
Oh,
same.
you're boring now. You're boring me.
Gigawatt deal over here. We're going to do a 5 gigawatt deal over here. By the way, this is
Okay, Amazon's trying to go. Amazon.
of millions of homes worth of power just being handed out like candy, right? 10 mega, you get a megawatt, and you get a gigawatt, and you get 10 gigawatts. What are you thinking? Is that power production going to be there?
Well, it's massive. Let's just go through the math a little bit. The U.S. has about 1,200 gigawatts of power generation capacity, 1.2 megawatts if you want to put it in megawatts. Data centers right now are about 2% of that, so maybe 25 gigawatts.
Okay.
And we're talking about going to 10% of electricity needed for that. So,
Five-fold increase.
Yeah, so maybe another 100 gigawatts or so. But the big one we're forgetting, right now we're about 40% of our power comes from
100 gigawatts is effectively the state of California
exactly
being added to the grid.
Yeah, but I'm going to give you 2 more. It's almost triple that. We're nuclear and coal. We used to be 70% of our power came from that. We're down to 40%. It's still shrinking. They're old as well. Maybe 150 gigawatts could be lost, right? And then on top of that, we're talking about AI demand. You're forgetting a whole bunch of pieces of demand. LNG export, highly electricity intensive, right? We've got to refrigerate that gas, liquefy it to send it off. Cryptocurrency mining in Texas. The electricity load for crypto is bigger than the entire city of Houston. Onshoring of manufacturing. Obviously, we have that under the president, a lot of it electricity intensive. And, we can put in the equation if we want, and all of that, not just the crypto mining.
There are no new nuclear plants currently under construction in the United States, though.
Amazon's still pushing. Not doing a whole lot today. The S&P is not going anywhere.
There is nothing, and there's not a lot of natural gas either. Where is this coming from?
I had a friend this morning said to me, he's focused on the PowerPoint reactor, meaning it's a beautiful PowerPoint presentation.
Oh, I love that. That's fantastic.
But where's the reactor? So number one is we've got to not have as many retirements. Secretary of Energy Chris Wright very focused on the word net. We've got to slow the retirements of coal and nuclear. That's first and foremost. Second, brownfield expansion. Take existing site. It takes a utility 5 years to get you an interconnect. So let's focus on existing sites where we have a lot of the infrastructure and expand that. Don't forget about solar and battery storage. Even with tariffs, even without subsidies, it's cheaper than natural gas, and you can get it online within a year. Then we get to gas, which is going to be enormous, and that's going to be the big driver, adding a lot of capacity.
You didn't mention offshore wind. We know the president has very strong views about offshore wind. A lot of our viewers have very strong views. Maybe they don't want to screw up their view with the windmill, but the reality is they do produce a lot of power.
It's irrelevant to what we're talking about. They don't produce that much power, and it's highly intermittent. A data center operator needs 5 nines, 99.99% of reliability. That's going to be driven mainly by natural gas. Nuclear, we would love to have.
All right, Amazon's still pushing here. Looking good. Looking good, Amazon. I like the volume I'm seeing here, too. Volume's looking good.
And we got a new FERC commissioner that just came on board, which is great. We've got the NEDC, the National Energy Dominance Council.
Palantir turning back up, finally getting a bid with an hour and 21 minutes to go.
By the way, Power Lunch is going to be in our San Francisco studio in a couple weeks, beyond my home state of California. And I know you and your lovely late wife have a wonderful tennis facility you're doing in downtown LA. I never want to forget that for the underprivileged community. We were talking about shutting down Diablo Canyon nuclear plant in California like 4 or 5 years ago. It's roughly 9 to 10% of the state's daily electricity production, and it's always on, and it's 100% reliable. My guess is we won't be having conversations about shutting down Diablo Canyon anymore.
Well, the U.S. is still the world's largest producer of nuclear power, right? France has got a higher percentage, but we've got a bigger base. We need it. Here in New Jersey, they shut down Oyster Creek. I used to do some fishing down there on Barnegat Bay. We need plants like that back.
We're still 40% nuclear in New Jersey.
In New Jersey.
Thank God.
The country, about 20%. But San Onofre was shut down in California. They only have one left. They can't shut it down. We've got to not just slow the shutdown, put money in to extend the life. Right? We've got to expand some of these.
I used to go to the beach at San Onofre.
Nice.
Trestles is the name of the surfing beach.
Very good surfing.
What are they gonna? What's gonna happen with that?
Well,
and Indian Point, which I think there's some talk about
San
reopening
Onofre is
that.
not coming back as a nuclear plant, but think of the infrastructure. Think of the transmission line that go in there. We should put something else there. Probably gas-fired facility. Could be
PAT. Are they saying path? Path on the move.
Energy Capital Partners, always appreciate your views. 43 years, just getting started.
Started when I was 2, so it's not.
Sorry, 1.5.
Okay.
UiPath. Didn't they do some kind of deal? They did a deal with AMD, right?
Brian, Homeland Security Secretary Kristi Noem said today her department will purchase buildings in Chicago to work out of. It comes after the city's mayor signed an order banning federal immigration agents from using city-owned property. Noem says the department is also
Looks good. Looks good.
in Portland, Oregon. Alex Jones has asked the Supreme Court today to pause an almost $1.5 billion defamation judgment imposed over his false
PATH. PATH. Let's see what we do here. PATH.
filing, Jones said the court's immediate involvement is needed.
Daily looks good.
Website InfoWars is on the verge of being turned over to the satirical news site The Onion to help fund the payments to his victims. And President Trump will go to Walter Reed National Military Medical Center Friday morning for what the White House says is his routine yearly checkup. It is his second visit to Walter Reed this year. It comes after he was diagnosed in July with chronic venous insufficiency, resulting in swelling in his legs. Brian, back over to you.
All right, Bertha Coombs, thank you very much. All right, coming up next on Power Lunch, why it could be finally a very big time for some smaller stocks. That's next.
PATH, UiPath, moving higher, UiPath,
PATH.
PATH. UiPath, they did that deal with AMD. Let's see what else they got going here. UiPath has teamed up with OpenAI to develop ChatGPT connector, integrating OpenAI's models into business workflows to improve automation. That was a few days ago, right? Why is UiPath up today?
PATH.
Automation software company jumped 12% afternoon session as the stock extended its positive momentum as the company announced a major push into advanced artificial intelligence through an expanded platform and several key partnerships, namely AMD, blah, 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 blah. Okay, so that looks good. And okay, UiPath, Path. Are you going to get anything else out of this? All right, so S&P pulling back, so chopping people up. Path, P-A-T-H, P-A-T-H, P-A-T-H. Yeah, big move on the daily. Nice volume, P-A-T-H. P-A-T-H, big move there. P-A-T-H. UiPath. Okay. Big move today.
GGAL.
Apple.
Today's Power Check has a special smaller cap focus for you because while the Magnificent Seven and the mega caps steal most of the headlines, we've said for a long time that there are a lot of really great companies that could make you money. And Ari Wald of Oppenheimer is here to highlight 3 of them. Ari, great to have you in person. Thanks for coming in. Really appreciate it.
Okay, Palantir, still going. Palantir, nice pop. This thing always dips. Some point in the day, it always dips and then rips. That's a signal. That's a sign that institutions are picking up shares. It's holding up here. Didn't continue lower as many anticipated. There goes Palantir.
The radar sources of strength has been in small and mid-cap industrials. We like momentum. This is still a sector we like. It's really broad-based throughout this group. In the capital goods industry group in particular, and so you have a name
Dip
like
and rip on Palantir.
as much as the other names. You had a big breakout this summer. I think that confirmed and completed the reversal. It's been sideways since then. That's really your textbook time correction, just building sideways, working off those prior excesses. I think that sets up a resumption of that strength to the upside. I think you move back to the March 2024 high with the potential for a breakout to new all-time highs.
Potential for a breakout. All right, from Cleveland.
Palantir, nice move on Palantir.
Next pick, Ascendus Pharma, based in Denmark. Not gonna lie, I tried to figure out what they do. It has something to do with technology and
Palantir.
biotech. Got a unique platform, but the stock is in a big year. It's up 54%.
Yes, it trades as an ADR. We do cover it at Oppenheimer. It's an outperform rating name, so there's some fundamental coverage here. Our analyst likes it. He's outperform rated, so there's some fundamental support behind it. And I bring it up as we think about this pharma group that's really underperformed through this bull market, coming off a multi-year relative low. But we're starting to see some emerging strength in the healthcare momentum index, which, listen, we always advocate for leadership and momentum, and I think you really have to do that in this sector. But against that tough top-down headwind, you have a stock here that's just breaking above levels from 4 years ago. It was an important breakout about the 185 level. I think that's
Palantir continuation.
demand coming in for the share price. I think you see higher highs.
Okay, Palantir. Is there some news here or something?
It's a real standout.
Palantir.
All right, finally, the next one sounds like a movie about neon motorcycles and flying discs. It is not. It is Itron, a Washington State-based water management company.
Palantir going vertical.
144. That implies a pretty good amount of upside. From here, do you see the same technically?
And here's another name. We don't discuss these names often broadly, but they do get a lot of attention at our firm. This is another one. It's covered at the firm, and it was recently highlighted in the firm's mid-cap standout report. This is one of our best.
Okay, Palantir going straight up here.
Got standout fundamentals, and it's really got a standout chart as well. If you look back here, it's breaking above 18-year resistance dating back to the great financial crisis, going back to 2007. I think, again, this sets up for a stock that can move significantly higher. That breakout level is at 115. The 200-day moving average is there. You've actually seen a little bit of a correction there. I think that sets up as for a near-term opportunity to buy this emerging long-term strength.
Okay, I love the three picks: Lincoln Electric, Ascendus, Itron. Do you have a macro view on the market
End
in
of day.
general?
Palantir end of day.
7 days in a row, we're down one. We keep going up, we're down one.
It's overbought, but you see how tough it is to time pullbacks. You got to stick with it. The market is behaving in a manner that should move higher, that is consistent with one that should continue. And I think you want to play for higher market highs, and especially with a Russell 2000.
Even overbought, it's like,
Overbought could be a good thing. That's
185, 190, above 190.
When you get some broad-based participation behind it, I think.
Aren't we at like one of the longest periods in decades above the 50-day moving average on the NASDAQ? It's like some stat I'm trying to pull out of my head.
Some stat, somebody, there's always a new stat out there. Listen,
Above 185, Palantir.
Market cycle. It's definitely
Needs to stay above 185.
Duration and magnitude, but that doesn't say it can't become an extended cycle, and that's what it's setting up to be going into 2026.
Gary Wall, glad you're here.
It's the Drive in the Fall event here at Myrtle Beach Chrysler Jeep. Get as low as 0% for 60 months.
Okay, very nice.
A mystery chart for you folks. Before we go to break, we're going to give you more on which stock investors slammed the brakes on this morning. The car pun is a bit of a hint. That's the chart. We'll tell you the name and the story coming up.
Mm-hmm.
STEX.
Okay, looks good. Palantir. Need to take out that upper strike.
STEX.
Palantir looking good.
FMFC halted. FMFC will resume at 14 hours 56 minutes and 35 seconds.
Palantir trying to take out that 185. If it does, it's going to squeeze. It'll likely squeeze above that.
Low tick alert -800.
Okay, we're testing the lows again, S&P. What are we going to do? All right, so this is just chop, chop, chop. What did the Iron Condor still there? The lower strikes, that Iron Condor still here? I'm surprised it's still sitting there. Wow. That's amazing. Anyway, yeah. We've got an hour and 7 minutes to go in this regular session, October the 8th, October the 9th. Yesterday was the 8th, Vinny. October the 9th, Thursday, 2025.
Well, fair to say that Enzo Ferrari would not be real happy right now. Not only is his race team third in the Formula One standings behind McLaren and Mercedes, but his beloved car company is having its worst trading day ever. Let's find out why. CNBC Wealth editor Robert Frank joining us now with more on Ferrari. Robert.
Brian, good to see you. Well, let's go back to Maranello today because that's where this news is all coming from on their investor day. There were two numbers here that really concerned investors. The first was about profit growth. Now, they had been guiding for annual profit growth of around 10% going through 2030. They're now sort of projecting, or at least analysts are, profit growth of more like 6%. So that's really a moderation that's weighing on the stock. The other thing
15. Ferrari's down 16%. Wow.
One time that EV sales would be 40% of their lineup by 2030. Now saying it's going to be 20%. So
time to buy a Ferrari, huh?
Their lineup will be 40% combustion,
S&P.
40% hybrid, and 20% EV. Now, there doesn't appear to be a lot of demand right now for high-end EV sports cars. We've seen Lamborghini, we've seen Maserati, we've seen Aston Martin all either delay or roll back their EV plans. So I don't know that that's a negative factor. The fact that if Ferrari is sort of agreeing with the market that there's not a huge demand.
I don't know. I don't know you ever get around the sound of a Ferrari.
But these are the two things that came out of
How do you drive a Ferrari? I guess if you just like the styling, you don't mind it. You don't mind not having that sound, engine sound. Ferrari, very distinctive.
Demand is down in the all-important U.S. market. The waiting list for these cars is a year, sometimes 2 years long. They're basically sold out of everything they make right now. So at least for now, it doesn't appear to be a demand story.
Yeah, and I want to make it clear, and this kind of blew my mind today because I knew you were coming on, so I checked. That Ferrari's market cap is $23
Okay,
billion.
BJDX is finally moving here.
General Motors. Now, I know market caps are impacted by debt levels, and so that's kind of dragging down the market cap. But
Okay, Riot turned up.
it's a bad day today, but
Riot.
Ferrari arguably is probably the most
BJDX.
car company in the world.
UiPath is on the move.
Is it not?
BJDX. It's one of the most valuable luxury companies. It trades like Hermes on a PE basis. And just to wrap it up, the reason that any sort of concern moderates the stock is that it's such an expensive stock, like their cars, that anything that just shows a slight moderation in demand, you see a big swing in price.
Yeah, and I know my Ferrari is like 7 years out, Robert. So I don't know about yours, but I'm still waiting here. Robert, it's a Matchbox. Robert Frank, thank you very much. Coming up, a special RBI for you and a stat you've got to hear around gold and buying a home. And yeah, they go together.
LIDR.
Okay, S&P, man, it's just like keeps trapping both sides, both calls and puts. Keeps trapping both the bulls and the bears. This price action on the S&P. All right. All right. UiPath looking like it wants to go. UiPath. Again. PATH. PATH. Starting to go again. PATH. Palantir above 185. Palantir. 185 is the call wall. Okay. And then you got 190 above that. Come on. Palantir. Just rip it. Rip it good. Rip it. Palantir is trying to get through this 190. 187.50 would do it. 187. 188.50. Sorry. 188. 188 would do it.
PATH. PTIR.
Mm-hmm. All right, there goes PATH is on the move.
PATH.
PATH is on the move. UiPath on the move. Nice rally there. Big gap up. What is that? Okay, something just dropped off. What is that? FMFC. FMFC. Who is this? FMFC? FMFC. I don't know. I don't recognize this one. Condai Ventures. Okay, that's a big drop there. Okay, I don't care. I'm not trading it. I don't have it. I've never heard of it. Palantir. 185 is the level we need to stay above.
LAES.
PATH.
It is time for an RBI, and today's stat has to do with gold and its amazing run. Because while you know that gold is at $4,000 per ounce, did you know that what gold can get you now is basically the same as what gold can get you 40 years ago, in a good way? That's a house.
Okay, we got an hour to go.
If you bought a bar of gold,
We got an hour to go.
Bar, standard gold bar is about 27.4 pounds, 434 ounces. Gold $4,060 an ounce, give or take. That means a raw state gold bar worth about $1.76 million. The median price of a home about $460,000, meaning you can get 3.8 median priced homes with a bar of
What's
gold.
Netflix doing? Netflix is still pushing the highs. Netflix. There goes PATH.
$30 an ounce. So gold bar around $143,000 and a house price less than that. In fact, you get 3.8 median priced homes today with a bar of gold, doubled just 40 years ago because the US dollar has done this. Random, but interesting. Thanks for watching. See you tomorrow. Closing bell starts
PATH.
Brian, thanks so much. Welcome to Closing Bell. Scott Wapner live from Post 9 here at the New York Stock Exchange. This make or break hour begins with high expectations for stocks and why 7,000 for the S&P might be conservative before year end. That is the call today from Fundstrat's Tom Lee. You will hear from him on this program momentarily. In the meantime, we'll show you the scorecard here with 60 to go in regulation.
TTRX.
Steadily deteriorating kind of trading day, really. Green to start.
Reversing.
Red now. Dow's down about 2/3 of 1%. S&P negative. So is the NASDAQ. Most sectors are red, including tech, though. NVIDIA and Meta, well, they've been positive throughout the session. They still are. We'll watch them vote. Prior show was talking about Ferrari today. Robert Frank just was getting dented big time. Weaker than expected outlook means the stock is now tracking for its worst day ever. It's down 15%. We'll follow that. And how about shares of Lowe's today? On pace for their 9th straight down day. Just a brutal stretch. Home Depot not doing all that better. Not quite the same losing streak, but nonetheless, it's one to watch. It does take us to our talk of the tape. The rallies road ahead. I mentioned that call from Tom Lee. He does join us now. He's a CNBC contributor. It's good to have you back. Welcome. Great to see you, Scott. So what do you make of just how the market's trading today? We've had a nice run. It's given a little bit back. Maybe some concerns are out there about the strength of the economy, the labor market, some other stuff. What do you see?
Well, I think markets are
TTRX, watch this one, could go.
because we are navigating a little blind because of the government shutdown. But we also know that the
Okay, watch TTRX here, folks.
the equity market and the economy has been AI, which is not affected by this slowdown.
TTRX.
So I think stocks are in this sort of zigzag pattern, but given we're in that seasonal period from October to year end, and we think the S&P can get to at least 7,000. It has been, and then we've seen it this week. These pullbacks get bought, so we could be weak today.
TTRX, watch this one.
In general,
Shorts covering.
Be bullish into year end.
Are we whistling past the graveyard, Tom, on anything that could be concerning to you? I see a story right in front of me from Axios mentioning a Moody's analysis. 22 states are in recession or close to it. There was that Carlisle independent survey the other day showing the labor market is much worse than expected. Gold's been going up. Some suggest that's de-risking from the U.S. AI bubble. You mentioned the shutdown. Are we complacent towards any significant risks that we might be missing?
Well, I do think markets are less skeptical.
Meta.
In April and even in
We had a good day on Meta. Nice pop. Big reversal. What really stands out is the 4 wicks down low. Monday, Tuesday, Wednesday, Thursday. Monday, Tuesday, Thursday.
I think the AI story is actually strengthening, Scott.
Leave the gun. Take the cannoli.
With both companies and investors, it actually seems like the payback for AI, whether it's applications or services or companies' actual ROI, actually has improved in the last quarter or so. So I think that's what's helping actually create demand for spending. So I think we may be underestimating the sort of profit creation coming from AI. And I think that's why there's still legs to that story. But you're right. On balance, the data is mixed, and we don't really know because we don't have government data.
Yeah. You gave our producers this line that you still think it's the, quote, most hated rally. And I've asked you about this every time you've been on with me. I feel like now that's a little bit far-fetched.
Palantir, still going here, Palantir. Palantir is at the high of the day, still going. Okay, look out, Palantir. Look out, Palantir. It's coming.
Even from those who were cautious before, like the stock market's going higher. Now, it may end poorly way down the road, but it's going higher. So how can you suggest that it's still so hated?
Well,
LAES still strong. LAES still strong.
Say something positive about the market, but they're really bearish because when I hear people say, "Oh, well, this reminds me of 1999," or they're ringing the bell on the top of AI stocks, they are maybe acknowledging that the market is strong, but then they're trying to mark the end of that rally. And I think, for me, who was an analyst in the 90s, people forget that Cisco in September 98 was almost a 60 PE when the Fed made its first cut in 9 months, and then its PE went to 200. NVIDIA is that stock today, and it's trading at around 27 times forward earnings. I mean, it's got a lower PE than Walmart and Costco, which are like 35 to almost 50 times. So I just think a lot of good news has been accepted by markets, but I don't think it's necessarily priced into markets.
Tom, give me a sec. I'm going to come back to you in a moment. I got some breaking news. I want to get to Eamon Javers.
Okay, LAES is at it again. There it goes again.
Here from Treasury Secretary Scott Bessent, who is writing on social media
a strong note of support for the government of Argentina and for Argentine financial markets. But the technical details here might be worth looking at. What the Treasury Secretary writes here is that Argentina faces a moment of acute illiquidity. The international community, including the IMF, is unified behind Argentina and its prudent fiscal strategy, but only the United States can act swiftly and act with will. The Treasury Secretary goes on to say, to that end, today we have directly purchased Argentine pesos. Additionally, we have finalized a $20 billion currency swap framework with Argentina's central bank. The U.S. Treasury is prepared immediately to take whatever exceptional measures are warranted.
Okay, Palantir is still going. LAES is still going.
Argentina and its financial markets here from the Secretary.
Palantir strong. Strong like bull. Palantir, Meta, Amazon.
Which has been finalized, a framework for that swap, which has been finalized. So that's different from executing a swap. That is finalizing a plan. And he says that Treasury is prepared immediately to take whatever exceptional measures are warranted. He doesn't say that they are taking those measures, but says that they are prepared. So a vote of confidence for Argentina here from the U.S. Treasury, but maybe reflecting some concerns in the ag sector that Argentina had been engaged in business with China, that the United States ag sector should rightly have in the view of the U.S. Maybe that's why the full bailout for Argentina is not taking place, at least according to this posting, Scott.
Right. I mean, the controversy, I guess, if you want to call it that, was that Argentina had cut its export taxes to China, making it cheaper for China to purchase soybeans and the like from Argentina rather than from U.S. farmers. That was one level of criticism. We can deal with that first. I have a couple other things for you.
Yeah.
Oh, I'm sorry. I thought you were going to comment on that. I mean, there's the other idea here. That's my bad. I should have made it more clear to you, Eamon. That's my bad. I mean, the other idea is that, are bond purchases gonna follow this? We bought some currency, we swaps, etc. The bottom line idea is that this will, we think.
Okay, we got 51 minutes to go. Markets cannot break out of this sideways mishmash. It's another day for the bulls and the bears trying to figure out which way we're going to go. So I've taken cheap hedges with that in mind, looking for more.
Looks at the Milei administration in Argentina and sees a kindred spirit. They want to help him with his austerity regime. They want to see that experiment in free market capitalism and austerity succeed in Argentina. They think he's on the right track. And so to the extent that they can be supportive, they're going to. You might look at this post by the Treasury Secretary as sort of an attempt to jawbone Argentine markets and see, if you don't necessarily need the whole swap that they're talking about here, if just markets respond to the United States sort of flexing its financial bazooka here in this way, that might be enough. If it's not enough, Treasury Secretary is saying here, they are prepared to act.
Well, I mean, jawboning sometimes works, especially when you have a figure as powerful in the world carrying the big stick that a United States Treasury Secretary.
I need somebody to crack my back.
In the days ahead, what happens?
Goose, can you stand on my back, Goosey?
Yeah, absolutely. I mean,
Goosey Goose.
Can work,
Kitty cat, can you stand on my back?
Take action, and certainly if you're the scale.
Oh man.
This is not a difficult thing for the U.S. government to do.
I'm hesitant taking a second Dr. Pepper. I didn't finish the other one, by the way. I drank half of it, so that's good. Drink half as much. Wasted half, depending on how you look at it.
Of the White House, as you saw there, we were speaking, of course, with Tom Lee about what sentiment is this market. I mean, that is another thing.
Palantir above 185 can get us 190 if we can see that follow through.
It just brings up geopolitical issues, the fragility of some other nations, and certainly their maybe financial stability, which we are keeping a close eye on. The market doesn't seem to be too overly concerned about that. In terms of
we got 49 minutes to go.
About what's happening here, I thought it was notable that J.P. Morgan's retail radar paper today
said that investors were accelerating their purchases in stocks. This goes back to what I was asking you about. Is it really such a hated rally if retail is leaning in even more? $7 billion this week in purchases. That's well above the 2-month average of 5.3. Do you want to address that?
Well, as you know, retail is really the cohort that saved the market in April because they were buying that dip. The other three cohorts in the market are, of course, institutional.
S&P. All right, maybe S&P can get something going here.
I'd call family office and super high net worth. Of those three, I think institutions have been reluctant and now are allocating in the fourth quarter because there's beta. And this has not been a great year for many stock pickers. So this fourth quarter is their chance to catch up.
S&P at the 105.
Much of the flows were out of the U.S. and into non-U.S. stocks.
105 EMA on the 1-minute chart. S&P.
And then on the high net worth, I think there is still a stubbornness about being skeptical of stocks, and that's why I think they're still.
They didn't close these. They didn't close these. All right.
Has not hated this rally. They have been buying since April.
Nope. There's nothing above. If they start to rally this, there's nothing above. Boring. Boring. LAEF. Palantir, PLTR.
There's been a number of upgrades of not only emerging markets, and we just showed the EEM, the ETF that tracks it, and it's straight up to the right. And other developed markets like Europe as well. I think there's still a fair amount of optimism as the U.S. performance trails that.
Emerging markets.
Yeah, Scott. I mean, it's. I think that when we look at the balance of flows, as you know, the U.S. has outperformed non-U.S.
Flagging. Meta.
And we are seeing a little
Meta pulling back from the high. Great day on Meta, even if we don't hold the exact high of the day. Amazon reversing back to the high.
Investors are buying non-US.
Applied Digital starting to get a little bid here. APLD. Okay, that's flying. Grinding. APLD. CoreWeave, CRWV. CoreWeave, all right, trying to push something there. CoreWeave and Applied Digital partners. Okay, got rejected there. S&P rejected.
This Sunday marks 3 years since the start of the bull market. Dom Chu is here with more on that. Hey, Dom.
All right, so Scott, along the lines of what you and Tom are chatting about right now, that kind of
what's Netflix doing? Netflix still pushing.
Spring has led to new record highs, of course, but in the context of the 3-year bull market that we've seen, even the Dow, the laggard, is up about 58%. The S&P is up 87%. By the way, that translates into roughly $27 trillion in market cap over a 3-year span. And the NASDAQ composite more than doubling, 120% gain there. So this move here, even since the volatility of the spring, has been major. Now, with regard to the
Amazon, wonderful.
Higher in that 3-year bull run, no surprise here. It's the most important ones. It's technology up 180%. Communication services up about 160%, and even industrials.
TTRX starting to push up again.
Performing sectors. Now, the laggards, when it comes to that, have been some of the less likely ones and even smaller ones. Real estate, healthcare, and energy have been the real laggards, even though they are still in the green in this bull market. And the stocks that have been real headliners, the 3 best performing stocks in that 3-year span in the current S&P have been AppLovin. Yes, it just made it in this past fall in September, is up 3,300%. Palantir celebrated its 1-year anniversary in the S&P just this past September. It's up 2,200%. And NVIDIA, we'll put a star up here because it is the existing legacy member of these 3. It's up 1,565%. So if you want to talk about the key stock, no surprise stock, Scott, it's
Microsoft.
been NVIDIA. It has been for years, especially in this 3-year bull run.
Meta.
Send things back over to you, Scott.
All right, a nice look at that, Dom. Thanks so much. That's
Meta. Let's see, Meta. Meta's still pushing the high of the day, Meta.
Leslie, of course, as you see, is still in the conversation too. Keith, I go to you first because this plays right off your note that you put out today.
Meta.
That I cited on the halftime report.
Meta, nice reversal.
too old in
Okay,
this,
we're
so
above
we can
Friday's
really go
candle now.
up from here.
Yeah, well, first, great to be with you as always.
Okay, there goes Riot is on the move. Riot moving. Riot.
Going back to the 1950s, there's been about 10.
What's Coinbase doing? Riot is on the move here. Riot's above 20. Riot. Coinbase, COIN, Coinbase. Okay, still a doji on Coinbase.
This bull market, a lot of different narratives as far as the economy, inflation, but what's continued to surprise to the upside is earnings. So that's going to be a key given
Tesla, nice pop. Tesla.
But as we look at the way that the evidence now work, we
Tesla with a nice bounce.
Upside as we think about the next year.
Amazon's still going.
What do you think? I mean, Tom Lee's big calls that you go up higher than 7,000.
Amazon looking good. Okay, we're trying to get above the 50-day, just like we did with Netflix recently. That's a good sign. Netflix yesterday looks exactly like Amazon does today.
Is about to embark in a cutting cycle. I don't know how many times they're going to cut, but they're cutting. Earnings, as Keith just mentioned, running double digits. We have $7 trillion of cash in money markets on the sidelines. It's not all coming in, but it's a nice tailwind. You have the credit spreads are the tightest since 1998, and you have deregulation, which has just begun. And so I think you have seen a great market, right? Almost all-time highs, really close to it.
Amazon on the move. Okay, Google turning.
Getting a lot of pullbacks because only 30% of portfolio managers are outperforming their benchmark.
Okay, Meta high of the day looks good. Netflix. Wonderful. Netflix, wonderful.
Because you are seeing productivity improvements and you're seeing at the same time lower costs. That is very powerful combination. So I think you're in the early innings, and that is helping our economy growing at 3.8%.
The critique of that is that you have probably a slowing economy to some degree. I mentioned, this Moody's survey today. There's others who think the labor market is much weaker than what we're accepting. And is only going one direction from here. It may not be a tremendous
TSS.
at this point. It's kind of no hire, no fire.
Yeah.
Okay, that looks okay. TSS partnering with LAES to make secure chips for the U.S. defense and government agencies. U.S. Defense Department and government agencies. LAES at 211. Putting together a partnership with TSSI. TSS Inc. That looks good. LAES looks good.
Carlisle's data the other day was like junk. That the labor market's not in a great spot. The report wasn't junk. What it said was.
Initial claims are a leading indicator, not non-farm payrolls, not ADP.
Okay, Palantir. Palantir is certainly scooting higher here. Palantir looking really nice on the daily. Palantir. Palantir. Pretty decent looking chart, actually. Palantir. Pretty. Okay, Riot continues to push higher. S&P is moving higher. We've got 40 minutes to go. Can we do something in 40 minutes? Hey now. Hey now. Tesla, nice pop on Tesla as well. Tesla with a little tiny handle hammer. Tesla turned the corner, which is good because I have put credits I was contemplating. That bounce is helping.
I wouldn't say it's carrying the whole thing. I think it's leadership, but we have to think about recently. We just over the last week, the equal weight S&P just made a new high. The Russell just made a new high, but the leadership is clearly
ACHR, pushing higher. ACHR.
We continue to be positive on that. And even in a day like today, we're seeing a little bit of cracks below the surface. We're seeing NVIDIA make a fresh
ACHR motoring higher here. Watch ACHR. Archer Aviation.
I do agree with Steph as well, though, that as we move into next year, on the margin, we should probably get a bit more clarity and maybe a little bit improvement in the overall economy. I don't think we need gangbusters for the stock market to do okay, but one, we'll have this one big beautiful bill. There'll be more spending because of that as we move further along on that. I think we will have some improved clarity on the tariffs. At least companies are used to it now, a little bit more numb to it, and they're adjusting as well. And then we also, as we mentioned, have
BJDX will
the
resume
Fed
at
cutting
15 hours,
rates. So put that all
25 minutes,
together,
and
I think the
57
backdrop
seconds.
is still positive. But I also
IONX.
want to say, I mean, are we not going to have some hiccups along the way? No, we probably will. We've got a long time without any type of pullback, so I don't want investors to be complacent. But I think in our work, we're going to focus on that primary trend. That primary trend in our work suggests that we still ultimately move higher. And going into the fourth quarter, seasonals are positive. One factor when you have momentum in the fourth quarter. Heading into the fourth
Okay, Riot's on the move. Riot, good job, Riot. Riot.
I would say stick with the trend. 3 to 5% pullbacks are an opportunity. We ultimately still see upside in this market led by 10.
Here's a headline that plays right into Steph's forecast of how she sees things. Microsoft forecast show data center crunch persists into 2026. It matches what Michael Dell said on Overtime the other day on this network. Yeah, we may get to an overbuild, but I don't see any signs of it yet. This is your key part of your outlook.
FMFC will resume at 15
a lot
hours,
more data
26
centers,
minutes, and
and you
51
need
seconds.
a lot more power to power the data centers, which is why those power type plays are a big portion of what you want to do.
And you have to upgrade the grid. So you have all of these industries that are being impacted. That is very encouraging. It's not just tech that is spending. The sector industrials are going to spend almost $80 billion this year. Utilities are going to spend almost $200 billion this year. All of it is related AI data center grid power. And that is very, very important. It's really widely distributed. And I would also say one thing, it's not just AI that's driving the economy. The consumer has held up remarkably well. And that is very important.
In certain areas.
But it's 70%. Services is above, the ISMs are above 50 for the last 2.5 years. So services is 75% of consumption.
GTRX trying to turn back up. It was $32 pre-market. Take a look at TTR. This is I think it's it's an IPO, right? TTRX. Look at this thing. Look at where it came from today. That big candle. Jeez. They ran this up after hours. Okay, they cleaned the shorts, if there are any. Look at where this thing came from. Wow.
Visibility is much better. Tech is not the pure cyclical group where you actually sell it at low PE and buy high PE. This is a group that you buy because
it was 32 pre-market.
And I do think that the PE expansion isn't going to just be tech going forward, Scott, because the ISM, and you guys had this conversation just now, has been below 50 for 31 months.
TTRX Turn Therapeutics. S&P still pushing. S&P coming off the low, but got a lot of room to the upside. I doubt we're going to make it through much of this.
I think there's still a lot of upside into your end.
Don't make that the last word, Tom. Thanks, Keith.
What is that?
Of course, thanks for being here. Post 9, Stephanie Link. Let's send it down to Christina Portanovelos for a look at the biggest names moving.
SOBR sober.
With shares of Tesla dropping actually after a U.S. agency said it's opening an investigation into nearly 2.9 million Tesla vehicles that were equipped with its full self-driving system over traffic safety violations. The National Highway Traffic Safety Administration says it has reports of Teslas driving through red lights and driving against the proper direction of travel when switching lanes. Shares down less than 1% though. Oracle, look at those shares moving the other direction after Baird initiated coverage of the tech giant with an outperform rating. The shares are up almost 4%. The firm actually said Oracle has positioned itself to really take advantage of what else? The AI craze, pointing to its 5-year, $300 billion deal with OpenAI. Despite the leverage needed, shares you can see
Palantir, GE, Netflix, Meta,
hitting a fresh all-time high. That comes since the U.S. government approved several $1 billion worth of NVIDIA chip exports to the United Arab Emirates. This according to Bloomberg. NVIDIA are commenting right now. I also want to point out TSMC, Taiwan Semi, posting a 30% increase in sales for the third quarter because of AI sales. That could also be helping NVIDIA as well.
TMC.
Back in a bit, Christina. Thanks so much. We're just getting started here.
Okay.
Next, the former Dallas Fed president, Richard Fisher. He is back. He'll tell us what he's
I'm surprised TMC is still affordable. TSMC. I'm surprised it's still somewhat affordable. It's at $300 a share. You would think this would be $1,000 stock. You know, it makes all the chips for everybody. The funny part was, I find the funny part is, because of the China risk, Warren Buffett sold his way back over here somewhere. And all it's done is rise since he sold it. Now, I'm not one to criticize Warren, just a note. Yeah, so this is 6x, 7x, 8x since he sold it. 5x since he sold it.
NBIS.
Okay, Palantir is still going here. Palantir is still lifting. Palantir is going. Okay, you can see what happens with Palantir. See what happens? Okay, see what happens? That's cool.
NBIS. ALH.
Pow. Palantir. Okay. Riot looking good. Palantir above 185, still pushing here. 15-minute chart, 5-minute looks even more ridiculous.
EJDX may resume in less than a minute.
Nice move there. Got above the call wall at 185, and this just thing took off. The volume picked up. 185.
What role does a high-flying stock market play in deciding what the Fed might do at their upcoming meetings? Let's ask Richard Fisher. He's a senior advisor now for Jefferies. He's the former Dallas Fed president, also a CNBC contributor, and it's nice to see you. Welcome back.
Thank you, Scott. What's up?
You know, I thought that was notable yesterday in the minutes, where they said some note financial conditions suggest policy may not be
where's the
particularly
190?
and how they might look at this record run in the stock market amid calls that it's going to go even higher, and think about what their own policy decisions could do in fueling that.
Well, the head of the New York Fed, which is the
SERC may
most
resume in less than a
important
minute.
person among the Federal Reserve Bank presidents, John Williams, made a comment on this yesterday.
JFU.
That he didn't feel that markets were necessarily being restricted. And of course, the question is, how much has AI, which you just had a long discussion about, been fueling this market? But you should know that, again, the Federal Reserve doesn't really look at the equity markets. They look at the credit markets. And the credit markets are still
GGAL.
pretty wide open. We haven't seen a real backup in spreads or yields. And I think that's really what he was referring to predominantly, not just the equity markets. And equity markets come and go.
Oh.
As you point out, rally here that's significant. In fact, incredibly impressive.
JFU.
NBIS. I must say, though, for all those that are critical of the Fed, if you believe the Atlanta Fed number now, number 3.8% growth in the quarter, and stock market an all-time high, kind of hard to criticize the Fed here for not having run monetary policy that is in liking the securities markets. And again, its spreads are still low. Remember that.
Yeah. The great debate in the room, so to speak, seems to be, and I kind of reference it about how restrictive we are or we're not. Obviously, Steve Myron thinks that you're way too restrictive. Others are not so sure. And there's like a battle in the room over that idea. And it is central, of course, in how it's going to guide policy decisions going forward. What do you think?
Well, look, if you really look at the minutes with a keen eye, you'll see it's roughly divided 50-50 in terms of those that might want to continue to ease, that is, cut rates a little bit further, and those that are, I think, 10 indicated out of the 19 total. And Mr. Myron has an interesting view. He has to convince the other 18 people at the table of his view, and thus far, they don't seem to be going along with it. But I think it's good for him to present a counter argument. And we'll just have to see how others cotton to that argument. Nobody else forecast 5 cuts going forward, as Myron did. But to be fair to Steve Myron, he's presenting an intellectual alternative, and that'll be carefully listened to. And his job will have to be to convince the 18 others to go along with him. Not an easy task. So I do think it's evenly divided, Scott, and we'll just have to see what obtains here. If you listen to John Williams, you get a sense that they might be leaning towards 2 more cuts this year. We'll see another quarter perhaps. If you listen to Governor Barr, who just spoke, it doesn't seem to be going that way. So we'll just have to watch this carefully. Right now, the economy is obviously, we know, struggling on the employment issue, even though that we don't have the official data coming out.
Palantir.
And there is skepticism.
All right, that was a nice little run on Palantir. I'd like to see more of that.
Getting down to the 2% target is going to be very
I'd
difficult.
love to see more of that.
Inflationary bump.
Palantir.
Off inventory that they accumulated in anticipation of the tariffs.
What do you think? What do you think, Richard? The move in gold is suggesting.
Okay, Netflix is just destroying the bears.
If at all, are thinking about it.
I'd like to see it close right up here. Amazon, nice. Meta, nice. Meta still working here.
Purview, as they always say, it's that of the Treasury Secretary. We already know that, but nonetheless, this move in gold has captured
Palantir.
Yeah, and I think a lot of it is driven by Chinese accumulation. We've seen an enormous.
LAES is turning up again. LAES turning up again.
SCRV. It indicates a lack of confidence going forward, and perhaps, at least for those that are worried about us, in terms of our economy, a skepticism as to all the different programs that have been put forward by our new president. But it indicates a weakness in the dollar. Now, Scott, you'll notice, of course.
There goes LAES popping here. LAES popping. Okay, let's shift gears. Let's go to LAES popping right here. End of day.
But to me, the vote for gold and also silver, by the way, is a vote against the dollar. It expresses concern. And I think, again, having been a central banker and having been a hawkish one, I think it's also a vote of concern about not just inflationary impulses that might be released here in the United States, but chaos everywhere.
FMFC may resume in less than a minute.
Look at the Germans.
TE.
Look at what's happened with the Japanese parliament now with the new election. And then, of course, the threats that are posed by North Korea, by China, by Putin.
Very important.
There's enormous uncertainty. And when there's that kind of uncertainty in the world, it's not just relative to one currency. It's relative to fear. And that's, I think, why gold is rallying.
Sure. But I mean, the prospects, as you put them, of quote unquote chaos everywhere, it isn't showing up in the stock market. At least not yet. And that's interesting in and of itself. If somebody like you uses that phrase, and it's not really top of mind for investors. I got to ask you one more thing, and then I got to go, Richard. So forgive me. The Texas Stock Exchange just got regulatory approval, didn't it, from the SEC? And you are a strategic advisor. I've talked to you about it before. How meaningful?
Meta still going here. Jeez, beautiful. I thought today was supposed to be a bearish day, Vinny. Huh? What's wrong with you? Hey, I'm equally happy, but I'm not stupid either. I know to hedge when we're 10 weeks up without a pause. Doesn't mean we have to pull back, but at least I'm protected. I have a lot of longs. I don't really want to take everything off because many of them are swings for longer time frames, but got to pay attention as the risk grows. So find cheap ways like put flies to leverage and protect your downside. If you're still going to hang out with the longs, a lot of these stocks are still breaking out.
And it'll be slow to gain its momentum. But I'm fully supportive. Obviously, I will be the
Meta.
the advisory committee for the listings, and also am an advisor to it. And I think it's time.
NBIS is going? Okay. NBIS. Okay. Looks good, NBIS.
Texas offices here in Dallas. To me, that's just costume jewelry. We are the real thing. And we'll just have to see how we can grow this over time and become a significant exchange that provides more liquidity, better postings for the companies that want to list with us. And we also plan to share the market data that we accumulate, which the other two exchanges do not do. There's a lot going on for Scott, and we'll talk about this more as we go through time.
Nobody wants a stained, dirty toilet.
I mentioned that Moody's
But many clean.
data earlier, their analysis of the economy here in the U.S., and I said 22 states.
NUAI still wants to go here, huh?
Or near a recession.
What do they do, NUAI? What does NUAI do?
Richard, it's good to see you. Thank you. We'll see you soon.
NUAI. What do they do? NUAI. What do they do? NUAI. I have no idea. It's got AI on it, so I don't see any news, I don't know what they do. I have no idea. LAES looking good though.
LPTH, CRWG, HYMC, ASTX.
New Era Energy and Digital. Okay, so maybe they do something here. NUAI.
HUT.
LPTH.
CRWG, WULF. LPTH, CWVX, HYMC, CRWU.
LPTH.
CRWG.
BJDX.
Okay, Meta.
HYMC.
Meta still going here. All right, Meta. NUA.
CRWU. LPTH.
LPTH.
LAES still going here.
HIVE.
Hive, HIVE. That one's on the move again. Hive, HIVE. HIVE for Cayman. There goes HIVE. Hive Digital. Okay, something's going on with these digital stocks. Anything with digital in the name seems to be popping right now.
CWVX. BTDR. HIVE.
Welcome back. Is the market showing signs of bubble trouble? More big names weighing in on that key question today. Now let's ask another. Jeremy Siegel is the Wharton School Professor of Finance. He's Chief Economist for Wisdom Tree. And he's with us now. It's good to see you.
Good to see you, Scott.
I mean, we have had a plethora of people weigh in on the issue of a bubble. I want you to listen to what Paul Tudor Jones told Squawk Box the other morning, and we'll react right to it on the other side.
BBAI.
Feels exactly like 1999. I don't know whether we'll actually replay it exactly, but I think all the ingredients are in place. And certainly from a trading standpoint, you have to position yourself like it's October 99.
VSME
I don't
halted.
see why.
Okay, HIVE is on the move. Hive. HIVE on the move.
First week of October 99 and March of 2000. So if it looks like a duck and quacks like a duck, it's probably not chicken, right?
All right, so let's take that.
That's pretty funny.
Professor, the idea that he says, quote, it feels exactly like 1999. Do you agree?
CWBX.
No, I don't agree. I mean, and Tom, he was talking about forward PE ratio. Forward PE ratios on the S&P, including Mag 7, are about 23. If you exclude the Mag 7, you're down to about 19 and a half. Then at the peak in 2000, we were 30 going forward. The interest rates were much higher. In fact, back then you could buy 10-year tips, Treasury inflation protected securities get over 4%. Today you get 1.7%. I mean, the alternatives are not anywhere near as good. No, I mean, you know, some people say we're like 1997, which it was in December of 97 that Alan Greenspan talked about irrational exuberance. And then the market kept on soaring in 98, 99, and it did not peak until it reached crazy levels in 2000, and we are not at those levels.
UAMY. Okay.
Paul's point, and maybe the most salient one to my next question in our conversation is, yeah, it feels exactly like 99, but I'm paraphrasing, of course. I'm no dummy. I mean, you saw what happened from October of 99 until the spring of 2000. So why wouldn't you be positioned for a much higher stock market from here? Is that how you see it as well? Lean into this market because we're going to have a big upside from here?
I mean, absolutely. I mean, the momentum is a very powerful factor, and the momentum is there. I do want people to understand, and it's been said before, but I think it bears listening to. You know, Wall Street and Main Street are not the same. We were talking about how strong is the economy. Should the Fed cut? I think the gap between Main Street and Wall Street.
We have 15 minutes left. S&P.
You know, you have AI pushing, you know, a group of stocks that is 25 to 30%. The AI hires employs about 1% or 1.5% of the U.S. workforce, and all the other companies that aren't really doing very much.
LAES is still going.
So I mean, we have a big gap, I think, between these two, and
LIES, HIVE still going. Hive, HIVE, LAES. Palantir, everything is pushing a bit higher. Palantir. Meta still going. Meta at the highs. Meta's still pushing. Jeez. Amazon still going. Amazon. I'm so disappointed that the Yankees are not. They're out of it now. Yankees are out. Toronto's in. Who are they going to play? The Cubs? Amazon's still pushing.
Well, I mean, this was what I was discussing with Stephanie Link, who made the point earlier on the program, whether you heard it or not, I'm not sure, that the economy is still strong, and so is the consumer. So we should be focusing more on that. There aren't as many concerns as some would like you to believe. It sounds like you disagree with that.
Well, no, we have strong investment. We strong AI investment. I don't think we're going to get the 3.8 on GDP. I think it's going to be in the mid twos, but a lot of that's investment. And we also know that the consumption of the high end, the better off individuals, because their stock market is doing great, their bitcoins are doing great, property values are still
Meta, Amazon, still going, looking good.
Spending is pretty lackluster on the bottom half. So, when you say strength of consumer spending, you have to talk about which consumer are you talking about.
No, I hear you. Finally, before I let you go, Tom Lee said you could get past 7,000 this year. In the remainder of the year.
Riot still rising. S&P still rising. We got 13 minutes to go.
Make the trend your friend. And what he said is, we're beating estimates. Take a look at Delta, raising estimates. And that's a sensitive commodity. Again, they say we're filling first class better than the economy. Same sort of story, but nonetheless, they're beating estimates with AI growing and firms saying to themselves, listen, if I'm going to try to offset those tariff costs, I've got to use AI more to increase productivity. Yeah, I can definitely see 7,000 by the end of the year.
Professor, we will leave it there and we'll see you again soon. Thanks for your time.
Thank you, Scott.
Jeremy Siegel, the Wharton School up next. Run you through what to watch for when Levi Strauss reports an OT when we come back.
All right, S&P is still climbing. We've got 12 minutes to go. 12 minutes to go. A very fine Thursday, October the 9th. There's a lot of stocks that moved today. Meta, nice surprise move on Meta. Amazon took all day, drifted lower, then finally popped in the last, right around 10 o'clock, 10:30, it turned the corner and started making higher lows. Microsoft looking for that to turn back up. Netflix working pretty well. Got earnings on deck. Dip buyers, Tesla pushing back off the lows. Okay. So, what else is working here? Netflix. All right, HCPG talking Apple. Okay, Palantir off the highs of the day, back down to 186.
FMFC may resume in less than a minute. DLO. AMBO.
Amazon's still pushing. Palantir coming off the high. Meta, Amazon. Nice day all together.
GSRT.
Okay. CRML. Critical Metals making a new move here. CRML. I got shares and I got calls. Looking for this to turn back up. CRML.
LAES. The SME may resume in less than a minute.
Okay, there goes CRML. CRML climbing here. Clawing back.
LAES.
Clawing my way back to you, babe. Ba-bum, bum, 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 bum. Da, 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 da. Da, da, da. All right, so looking pretty good. Palantir off the highs of the day, having a nice run up in Palantir, Amazon, LAES. LAES is still going.
LAES.
Where is this thing going? LAES is ripping here. I'm working my way back to you, babe. LAES looks good. LAES. Yeah, that's looking good. I want to double up on this position. That's a really important security initiative. You know, making semiconductors secure. You know, taking this between software, AI, and chips.
RPD.
That should work really well. All right, we're up to 6 now. LAES is on the move. Meta. LAES. Nice, nice. All right, so you know what? Like I've been saying, that I am hedged. I'm very happy to see the markets doing what it's doing. It is a little bit, little bit. Oh, that's the weekly. It's a little bit choppy, but
ARAI.
you know, we're back up there in the top half of this week's range. So almost. Well, I guess it's not top half. Let me take this up a notch. Take that up to the top of this.
SUG.
Okay, we're back in that half of yesterday's candle. We tested yesterday's low, taking it back. All right. It's about half. It's in the top half. Yeah, it looks good.
SUGP.
AMBO.
HIVE.
FMFC may resume.
Still going, HIVE.
GSRT.
SUPD.
We're now in the closing bell market zone. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. Plus, Phil LeBeau is tracking a move in Delta today, and Courtney Reagan standing by with what to watch for from Levi results in OT. Phil, we go to you, and a really upbeat report and discussion with Ed Bastian today.
And you know what this report is for the third quarter, Scott? It's a reflection of the strength of the upper end consumer. Take a look at the revenue numbers for the third quarter from Delta. This is why the stock is up more than 3% today. Domestic swung positive, up 2% overall.
Okay, we got 4 minutes to go for the closing bell. 4 minutes to go.
Premium up 9% compared to the third quarter of last year. All of this is why Ed Bastian, when we talked to him, he basically painted a picture of what they're seeing with corporate customers right now. Here's what he had to say this morning.
Because of the uncertainty, you need to be out with your customers. You need to be out with your people. You need to understand what's happening. And I think across the board, people started to understand that. So they did stall in the spring. But as the summer came, everybody got back out. Every one of our business sectors were up meaningfully in the quarter.
TTRX is starting to pop.
Extraordinary.
By the way, take a look at shares of Delta. They gave guidance for the fourth quarter, $1.60 to $1.90. Going into today, the consensus was 166, Scott. That's obviously going to go higher as analysts digest these numbers. One last thing, Scott. If you look at all the airline stocks today, they're all down except for two, Delta and United. You know why? Because they're generating the bulk of the profits for the domestic airlines here in the U.S. They have strength where others do not. Back to you.
In the front of the planes. Phil, thanks. That's Phil LeBeau joining us on that. All right, Courtney Reagan, Levi Strauss, and OT. Tell us more.
Yeah, Scott. So analysts are estimating Levi Strauss will report earnings of 31 cents on revenues of 1.5 billion, with operating margin of 11.3%, gross margin of 60.7%. And while Levi has had a history of conservative guidance and impeding expectations, the guidance that was given last quarter assumed a 10% tariff rate for imports outside of China. Pakistan, Indonesia, Bangladesh, those are some of Levi's main countries of import, and those current tariff levels are much higher than 10% at 19 and 20%. Now, Levi does sell internationally too, so not all the production that is made there is imported to the United States, though the United States is its largest individual market. But the denim maker has been on a hot streak. It's captured some cultural moments, including Beyonce, Timothée Chalamet, denim also in a strong cycle. Levi shares have well outperformed the broader S&P 500 since it last reported on July 10th, as well as the retail ETF, the XRT, and competitors like Gap. And
all right, Hive on the move here, Hive.
Last 4 quarters have seen some pretty
nice move there.
Both to the upside and the downside. So without consistency,
S&P pulling back in. Of course, they're going to pull it back in.
That hot streak can continue, Scott.
All right, Court, thank you. That's Courtney Reagan. Mike Santola here. I mean, sometimes it's got 2 minutes left. Sometimes you just need to rest.
And that doesn't amount to much more than that. You know, we keep setting these little mini bear traps in the middle of the day. It looked like we're going to have a little more than 0.5% decline. The S&P had 3/4 of all stocks down. Didn't really amount to much. You can have a little bit of a late bid when NVIDIA and Meta are
LAES.
so much damage you can do to the S&P. That said, there still are these
LAES is still going.
I'm going to keep pointing to it. Yeah. Equal weighted down 1% today, even though you got some encouraging news from Costco and Delta Airlines that maybe could have given you some relief. And then, of course, the spillover from this sort of private credit hiccups. The alternative asset managers trade badly. Regional banks, you know, kind of sitting there, not doing much of anything. So it's not so much that we're seeing heavy stress or things to really get hyper concerned about, but it's removing some of that macro tailwind where you were able to say, hey, the market sees this as an economy in real good shape, maybe reaccelerating with the Fed going to cut rates. And the more that goes on, the more you become dependent on the AI trade because the rest of it's not cooperating. So not really raising, some kind of a flare and saying, be careful here. But it does show you that the market's a bit uneven. And at this point, really, it's just sort of hesitating above the 6,700 level.
Apple not playing along today. Maybe throw up Apple shares. You did have that note from JP Morgan's retail trader that, yes, retail's buying some of the other big names today, but they're dumping Apple. Stock is down $4.
Dumping Apple. I would also point out the pullback in gold today. So to the degree that's representative of the hot money momentum trade, you are down 2% off of the extended level. As I said, we have a major average rest.
All right. Nice trade, folks. Hope you all have a great evening. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. 4 o'clock, straight up, closing bell. All right. What do we have tonight? We have some earnings tonight. I'm not going to hang around for it. I'm just going to sit back and maybe do a little day trading on or a little scalping after hours on some of these penny stocks for fun. LAES is continuing here. Have a great evening, everyone. Take care. We'll see you first thing in the morning. I'm your host, Cousin Vinny, coming to you from theclosingprint.com at the closing bell. It is 4 o'clock, straight up, Thursday, the 9th of October. Looking forward to tomorrow. Have a good one. Take care. We'll see you tomorrow. Ciao.